Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no. Just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Thursday to you both.
Hello.
Good morning.
Good morning. You guys dressed alike again.
We're syncing.
We're twinning, yeah.
Yes,
A little
yes.
bit.
Yeah.
Mine's blue though.
Yeah.
Dark blue, navy blue.
Okay, it's hard to pick up on this camera, but okay.
I know. With the beautiful olive complexion, it all kind of just blends together. I understand.
Yeah.
Mine's travel black because I will be going to Charlotte this afternoon for our show tomorrow.
Woo woo.
Yeah.
That's right. Black stays nice and clean. Travel. That's a travel tip you don't get everywhere.
Unless you have like a white dog or cat.
Wear dark clothes when you travel. It doesn't get dirty. That's something, your parents didn't tell you. You only get that right here. Mm-hmm.
That is riveting, Grandpa. The show will be more interesting than that. I got to do some damage control. The show is more lively than that.
We're gonna have fun with it. It's me and Mikey. I get to have my work wife back.
That is true.
Or my ex-wife, I should say now. Now I know how you feel, Dad.
Scumata, you left him at the altar.
I did. Mm-hmm. I always feel bad about that.
Is it hard not doing the show with him every day?
It was a weird switch, I will say. It was weird. I mean, we've done the show together for 9 of my 10 years.
I was gonna say it was like it's been a long time.
Yeah. So
and then you took a step up, right? Mm-hmm.
My back hurts a little bit from carrying this one, but it's been fun. It's been fun. It's a different vibe. No, I mean, we don't have as much like sports betting to talk about. DFS, like you don't even know what DFS is. I know
what DFS is. Are you talking to your dad? I know what DFS is.
You do?
Yes, daily fantasy.
Okay, all right.
It's It's the zero DTE of.
That's actually a great call. It really is the zero DTE of sports betting. But Mikey is quite the expert, and it's fun to riff with him on that. But it's okay. I get my dad. I love that.
You get an eventual recipe or something like that, or a hockey update.
Yeah, hockey update. Usually, that's what I get.
And it's just like staring into the mirror of your future.
Oh no!
And if you don't reverse this course, boy, oh boy, are you in trouble, son?
Yeah, I learned a couple things from my dad's past. That's for sure.
Yeah, a couple things not to do. Right.
Good example.
Hey, sometimes it's not the things you do; it's the things you don't do. Right? I mean, down to trading, increasing size, that kind of thing, staying away from illiquid options, not the things you do, the things you don't do. So there's lessons to be learned everywhere, little nuggets.
Yeah. Speaking of, do I take my oil position off? You see that?
I mean, you're finally getting that move that you needed. I mean, you're over 61 and change. I think you've waited an awful long time on this. You were 3 days early, plus about 4 more after that. So
did you just get my ding? Do you guys get the ding?
Yeah,
I didn't hear it. I didn't hear it.
I heard the ding.
You got it? Okay, I didn't know if that came through. That's another angle we're gonna have to work on with the remote session of getting the ding.
I heard it. I don't know if it came out to everyone else, but yes, you sold your micro future. I think you bought it around 59, like 80 or something like that.
I had 2 of them. Yeah, that I averaged in around like 58 and a half, 59-ish. I closed one yesterday into the first pop, so that was a good little scalp.
That's impressive. Yeah, you were on it, like your dad said, early. So congratulations, Junior Lord. I don't know.
I appreciate that. I was going to say, you don't have to give me the Tom treatment. Not everything's so amazing.
No, but this was amazing.
You size positions correctly. You take some directional risk. You put the risk on. This is the game we play. We don't need no pats on the backs.
No high fives.
We'll do that ourselves.
Yes.
We'll do that ourselves. But you're right, a big 5% plus move this morning, and that's down from 59.60 or so up to around 62. It's 61.60 right now. So Good job. Good job. Good hold. Good position sizing. You're always a little early. You never catch the top. You never catch the bottom kind of thing, typically.
Yeah.
But you trade all around it, and that was good. Good work.
Yeah, what would be great is if those option trades today positions, if those were starting to make some money, that'd be real nice.
Oh no, shots fired.
Just kidding. You had a great one in Baba. You had the SPX trade as well. I'm just giving you a little grief because of that gold position with gold up $62 today.
I've got a gold position that's been /GC, but I'm the world's worst commodity trader. I'm just showing people how, not to do it. Like I told you, sometimes you learn from not doing things. I got a gold position that's out a couple of dollars, not a ton anymore, a few bucks at this moment, maybe like 3, 4, 5, something like that.
The 3-day rule.
Yes, the 3-day rule. I got an AVGO position that's working still on, trying to reach my profit target there. And then every other one has been profitable. The only one I have that's been a problem is gold that's still open. So we'll see what happens there. So far, I think I'm batting 775 or something like that. But
of course,
sure, I'll do better, boss.
No, it's okay. It's okay.
I'm trying.
What's up with you, Vanetta? What's going on?
Not a whole heck of a lot. My alarm did not go off this morning, so it was a bit of a fight for my life. But I'm here. It's not just the 2 bats. I made it, so it's fine.
But yet you look all put together and amazing.
I know, because I can put makeup on in a hurry.
I was going to say you go to bed like that. You just wake right up and you're ready to go.
I woke up like this. Isn't that the saying? I woke up like this.
Well, I do sleep. This is an overshare, but I do sleep with rollers in my hair. So that is, like your grandma. But but it makes it easier in the morning if you sleep with the rollers in your hair. So. But I'm good. I'm thriving. It was the season finale of our show that all the ladies we watch in the office, which is Love is Blind. What a trash season. I don't want to spoil it for anyone. But Denver,
I don't know if our viewers are watching Love is Blind, so you can go ahead and spoil it.
No, but I'm just so disappointed in the city of Denver. Just men and women on both sides. So it's equal genders. Everyone
what do you
sucks.
Disappointed? What were you disappointed about?
I don't want to spoil it, but just everyone's trash.
Was somebody left at the altar?
Wow.
It was not a very satisfying season. I'll just leave it at that. So
it's probably run its course. How long has it been going on now? For a dozen?
I think you're right, Bat. I think they need to retool. I think they need to do something else with how they're picking people, because right now they're looking at people's Instagram followers and they're reaching out to them being like, hey, do you want to be on this reality show? Instead of people who are genuinely looking for love, applying to be on a show. Producers are trying to, fill, cast.
Pick them.
Right.
How do we get you on the show?
I am above all age limits.
No. I thought they'd stop at 25, 26.
No, thank you.
Well, we couldn't get Jenny on Dancing with the Stars. I don't think there's any way we're going to be able to get Vanetta on Love is Blind. I mean, this is we had
just as an aside. Robert Irwin is killing the Crocodile Hunter's kid.
Oh, yeah.
Is crushing it. So
he's very lovable.
He is.
He's quite lovable.
Yeah.
Yeah.
It still makes me feel weird though when I look at him. I'm like, wait, how old is he?
Yeah. And why are his abs so?
He's always shirtless.
Yeah.
But he's legal, so hey, there you go. Okay.
Who is this person we're talking about?
Steve Irwin's son.
Ah, gotcha.
Yeah, the Crocodile Hunter.
Oh,
the crocodile. Yeah, crocodile.
The crocodile hunter. Yeah, but he's also a conservationist and an ecologist. He works with animals. With his sister Bendy. I think they run a huge animal preserve in Australia. So I don't know.
He followed in his father's footsteps.
Yeah.
But he's just the nicest guy ever, and he has all these stories of his dad, and they're tearjerker stories. He tells a good story.
He just straight up has abs.
Yeah, that too. Well, that's Vanetta. Vanetta likes that part. I'm talking about
just him holding a baby koala shirtless. Like
yes.
I think Beth put up a photo there.
Yeah. She's got it going. Somebody's been watching Dancing with the Stars and the production team. They got this way too quick.
Yeah, this was ready to go.
He's a babe.
Suburban moms know.
Yeah, I haven't watched this. I don't think I will now. But
how about you, Nikki? What'd you get up to last night? First Bulls game of the season. They won.
I did not watch the Bulls. I should. I'm close enough to walk there. I should.
Yeah, you are.
Probably go to a game. It's not exactly the nicest walk over there, but
you're fine.
I'll be okay. But yeah,
take one of those rickshaws that they have. You can take one of those rickshaws.
No,
they're expensive.
I've been into the Lime scooters.
Oh, be careful, Nikki.
The Uber ones, they're great. I take them to the office sometimes too.
But you need a helmet.
Yeah, but yeah. I probably do need a helmet.
It's hard to argue with logic, isn't it, son?
Yeah, well, the problem now is that when I'm on the way to the office now at 6:30, it's still dark. It used to be kind of light out. So now it's a little dark, and the Chicago streets are not known to be some of the most smoothest, well conditioned streets around. So that
these scooters have a light on them.
They do. They have like a little one, but it's not. You're in the dark.
You should be wearing a full reflective vest, Nikki.
Probably. But
it's not a bad idea.
Those things are fun. You can whip around in them. I mean, they go pretty fast.
I know.
I go faster than the bike.
You're not wearing protective gear. Like, they scare me, and I ride a motorcycle.
Yeah. YOLO, baby.
YOLO.
I mean, you could buy a helmet and carry it with you.
Oh, but that's like that's kind of like Dr. Data-esque. Then you show up and it's like, ooh, who's the guy with the helmet?
And his scooter.
Yeah, like
cute little scooter.
I don't know. And I'm close. It's like
that's right. You die with dignity, son.
Yeah.
That's right.
I mean, it's more about protecting your pretty face than.
That's true. That is true.
I mean, that's your moneymaker. You gotta,
Thank you, Vanessa. Thank you.
You gotta protect that. Yeah.
If you go down, just like roll up like a ball, kind of thing. So tuck your head like you're in a plane crash or something like that, so you can
tuck and roll. Yeah,
tuck and roll. There you go. Tuck and roll. No.
How about you, Bat? What did you get up to? Did you have hockey?
No scooter riding for me. My scooter riding days are over. I did do that.
And wait, sorry to interrupt, but my little 20-mile-an-hour scooter is doesn't Vinny have a like 50-mile-an-hour street legal basically a motorcycle that he whips around on?
That's street legal, but it's something like that. But he wears a helmet.
Okay, that's fair.
Full face helmet.
Yeah.
Which is another. Yeah, that was not my. I mean, in hindsight, he's driving in January, so he's actually looking to get rid of the thing and sell it. So I feel good about that we made it. He had it. It lives on the wild side. I don't recommend on this show, but I would recommend to every parent to not do what I did. It was probably one of the dumber moments in my life. It was a weak moment when the kid broke me down. He breaks me down on everything. I'm pretty.
I was gonna say he breaks you down on everything. A weak moment. I was like, you're softer than a pillow top mattress.
yeah, that's true. That's true. I mean, I had one when I was a kid. I had the Briggs and Stratton little.
Yeah, but that was with 1970s technology.
Yeah. It was only like a three horsepower thing, but then I got a Yamaha 125. So I did get when I was around his age. So I did have the equivalent kind of thing. Yeah. You know what, son? He's a different kid than you. You were a lot, like you liked your ball and your jacks and stuff like that, and you like dolls and stuff. So it was a little different. Wow.
A ball and jacks. Nikki, were you born in 1945?
I mean,
what is happening?
I couldn't think of anything.
A ball and jacks?
I went down a rabbit hole I could not get out.
That was from his That was
from my childhood.
Yeah, he was
I was going to say, that's my mama. My mom, bless her heart, she would beat you at some jacks. She's also 75.
What was the paddle? What was the paddle thing? Like
paddle ball, just paddle ball.
Oh, that was the one with. Is that what it was with the string?
Yeah, but it's attached. Yeah, it's just called paddle ball. Yeah,
was it paddle ball? Is that what it was called? Yeah, yeah. You like to play paddle ball. Sorry.
Yeah.
Oh well. All right, we're back.
Mickey had like a stick with a hoop. What's the thing? Like a
pogo stick. He had a pogo.
Yeah, pogo stick, hula hoop. Yeah, that was exactly what I was doing, Dad.
Big wheel.
Yeah.
Which I missed the big wheel like thing when I was a kid. Like, you know, like we didn't have it. It was like the next kids after me had the big wheel. They looked like a hell of a lot of fun.
Mm-hmm.
You don't remember?
I had a big wheel.
You had a big wheel? Yeah.
Yeah.
You were those people. I missed that. Jealous.
No, it was fun because mine had the thing on the wheel with the brake.
With the brake, so you could do
Tokyo drift. Yeah, you could Tokyo drift that yawn around the cul-de-sac. Yeah.
Yeah. You could do a little drifting.
Yeah, yeah. That's funny.
Yeah.
All right. Well, hey, we got a great show for you today. It is a thrilling Thursday here on Tasty Live. Just as Nikki mentioned in a programming note that he will be on the road tomorrow doing his show in Charlotte. So you're getting the millennial takeover. It's been a hot minute, but myself, Mike Butler, and Nikki Bat will be running the morning show tomorrow. But on today's show at 8 o'clock, trades from the research team. Asterisk. When I checked, we only had 2 researcher. Like so,
three. We got.
I was
3.
gonna say maybe it's just trade from the research team. I didn't know how many we had, so it's 3 now. Okay.
Yeah, we got a couple.
Okay.
We got
babies. People taking birthdays.
This
is ridiculous.
Well, our company gives you your birthday off as a holiday, so
it's a test. It's a test. Everybody who takes that should get fired.
Why wouldn't you take it?
Uh-huh.
No, or if you're like me and your birthday falls on a holiday weekend, you parlay that extra into like a nice 4-day sort of thing. So.
We also have Sahil out for Diwali, so happy Diwali to
Diwali, Sahil.
All those who celebrate.
Yeah. Oh, that's nice.
Yeah, it's the Sharks together.
Oh, I bet he looks so handsome in all of his colorful outfits.
Yes.
Aww. So yes, happy Diwali to the Shark family. So we got trades from the research team at 8 o'clock. World's greatest financial think tank presents their trade ideas to the bat, and then Dylan. Wait,
yeah, we got Dylan.
Dylan is here. Yes, hear me out for Dylan. Sure. What are you talking about with Dylan? Do you know? Do you want to give a little preview?
We're gonna talk about OpenAI and the endless amounts of investments and news headlines that come out.
They're going to need $1 trillion, so better come up with that.
We're going to talk about tariffs. We're going to talk about just the gamification of everything. I don't know if you saw, but Polymarket is launching 15-minute up or down Bitcoin futures.
What could go wrong there?
And you got DraftKings getting into prediction markets, and you got all sorts of meme coins flying around. So we're going to talk about that as well.
Okay. Stay tuned for that at 8:40 with Mr. Dylan Radigan. Then 9 o'clock, we got a market measures, part of our Zero DTE series. Zero DTE put spreads, profit targets for narrow wings. So help you structure your trades if you're using a narrower wings in your Zero DTE strategies. That's going to be at 9 o'clock. And then live from the trade desk. Oh, this is very special. We got Frank and Marty. Who are Frank and Marty, you ask? Do you want to explain who Frank and Marty are?
Marty's been on. We got Marty.
I know, but for new people, new viewers, he's not on a lot. So Marty from the trade desk.
Marty's one of my oldest friends, old CME trader. Used to cat around with him back in the day too. So Marty has a lot of stories to tell if you ever get him inebriated.
Can I say, so as working on social content, I also now have to do social content for tastytrade. So to be in tastytrade content, you have to be licensed because it's a licensed, entity. So I'm doing a video series called Ask the Trade Desk. So I got to interview a bunch of the dudes on the trade desk and they were so nervous, but they did such a good job. But Marty comes in, he's like, okay, what do you want to ask me? But he did such a good job, and it's fun. I love talking to trade desk guys. Like, it's a bygone era.
Mm-hmm. It is. I know Marty probably just as long as I knew Tom and everybody else. So Marty's been around a long time.
Yeah. Well, he's going to be on the show along with Frank, the original indoor kid. That's going to be at around 9:30. And yeah, that's our run of show today. You guys want your daily dose? I got a lot of news.
Yeah, sure.
Hit me with my theme music. Let's go.
Our leading story, breaking news,
coming
across the wire. Leading story, top story, just in.
In today's headlines,
This just in.
Breaking news.
All right, everybody. Today is a thrilling Thursday. It's October the 23rd. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. Are you ready for the news?
Ready for the news.
Any earnings coming up tonight, Mr. Bat?
Yeah, Intel, NEM. If you're looking at something that has a gold component to it, so Newmont Mining, Intel, those would be the two. There are many more, obviously, but those are the two most liquid, probably.
Well, let's just get right into the stories. Like, I don't even have like a fluffy macro piece of news to start this off. I'm getting right into oil. Oil jumped up a massive 3% move overnight after the Trump administration sanctioned big Russian oil companies. And then that just sent shares of oil to the moon. Let's talk about the move, how to manage it. What are the opportunities? Let's go.
Yeah, now 5%, right? I mean, you saw Nick take his profit on some futures that he had on. I mean, gold was we talked about it as the only commodity that didn't seem to rally when all the commodities were rallying. It took longer than we thought. Probably took a week instead of a day. But you got a nice massive move here and a big move here back well above any area that we were looking at it, going back all the way to October 6th, 7th, or 8th. We took out all of that loss over the last couple of days, or downward movement in oil. Got it back to 2 days, so ended up being a good trade.
Yeah, volatility is not super high here, so maybe if you're looking to get in now, Iron Condor or something like that would probably fit the bill, just because volatility isn't through the roof, despite the big move to the upside, which is typically where volatility starts to expand when you get these big moves to the upside.
Yeah.
How is the liquidity, Nikki, that are you finding in the micro futures?
The micro, so trading MCL just long or short is really the only way that I trade it. The options are not very liquid. They do have options available, but they just aren't as good as like a regular oil futures option. So
right, you mean options on MCL aren't as liquid. CL options are quite liquid.
CL options are totally fine. Yeah, MCL is just not that liquid. And when you're trading oil, like the MCL contract at 100 multiplier, it's 100 barrel notional. The options are a little bit small. It's like trading, a $60, $80, or $60 now underlying. So it's not, they're not as juicy as you would like.
Okay, that is good to know. In other news, so sad for all the billionaires that can't make more billions. Deal making in U.S. upstream oil and gas sector slumped nearly 30% during the third quarter as persistently low oil prices, again, this was before that move, kept buyers on the sidelines. Merger and acquisition activity in the oil and gas industry has now fallen for 3 straight quarters. It marks a sharp departure for a period of blockbuster deal activity that included the $60 billion combination of Exxon and Pioneer in 2023. So deal making in 2023 totaled a record $192 billion and then slipped to $105 billion last year. And it'll be even lower this year. Again, so sad for the billionaires. What are you guys doing in natty gas or anything? I know you're not trading XOM.
Some of these oil stocks are up, obviously, with oil being up. Like ExxonMobil, you just mentioned a moment ago, is up like $2. So that's a proxy way to trade oil if you wanted to. It doesn't have a one-to-one correlation with it, but if you get a 5% move, which you don't get all the time, you're probably going to get these stocks to be higher. If you look at any one of these, I would bet that the majority of them, 80-90% are higher. Net gas, on the other hand, has been catching a little bit of a bid here. The future has rolled. It was under $3. It's over $4. That's a big $10,000 move in that future. So
that's why they call it the Widowmaker.
That is why they call it the Widowmaker. Yes, you are correct. You are correct.
And that was an excellent point, Bat, to point out, like, synthetically, that you could trade.
It's a good correlation, not a great correlation, but it's certainly one that you can play.
Yep. I had some long delta there, so
in XOM.
Maybe we're taking that off this morning. We'll see. Called diagonal spread.
Oh, so sorry.
Sorry. Go on.
Love never having to say you're sorry.
Okay. T. Rowe Price is seeking regulatory approval to launch an actively managed ETF tied to multiple digital currencies. It is their first foray into the crypto space by the $1.7 trillion asset management firm. Hooray!
Hooray! I don't know what to say here. I mean, it's just amazing how in just a few short years they've all gone to, this is a nothing product. You shouldn't even look at it. It's voodoo economics to, we have an ETF with our name on it now, or we have a fund with our name on it.
That's what happens when liquidity comes in. And you can scrape a couple basis points off that liquidity. So, but overall, I mean, I think that's good. You can get that in 401ks or retirement accounts or whatever. So, now if you want to invest in something, the powers that be have blessed you with that opportunity now, which is still, I think, the overarching problem that you can't just go do whatever you want. In those sort of accounts, you have to wait for this sort of thing. Like, we don't even in our 401k, we don't have the option to invest in anything like this or anything risky for that.
Yeah, you're right. You're right.
Is Bitcoin still unable to keep its wings up today?
It's up a little bit this morning. It was up around $1,300. That's on the Bitcoin futures themselves, over 109. I mean, it was flirting with 107 again, got down to 107 even, going under 107. So, yeah, it's caught a little bit of a bid. Still in no man's land, right? I mean, low end of the range here. You haven't missed anything if you're trying to catch a dip in Bitcoin. Bitcoin's been an underperformer with all these commodities.
Yeah, despite October.
Yes, despite October, which is getting long in the tooth, by the way.
Yes.
I don't have a specific gold story, but kind of talking that gold Bitcoin debasement trade or whatever. What's gold doing this morning?
/GC would be the one to look at. It's up $57, which doesn't sound like a lot, but it is a 1.5% move in gold. So gold's catching a little bit of a bid. It was under 4,100. It's now over 4,100 to 4,125. It's pretty much in the middle of today's move. Ivy rank is good in there at 41, but down considerably from over 100, 90, 100. So gold, as it comes down, which you would expect, volatility contracts too.
Getting to the earnings plays from last night, Tesla had a record-setting quarter, bringing in revenue of $28.1 billion. That revenue increased 12%, but the company did report year-over-year revenue declines in each of the prior two quarters, but earnings did miss estimates as their CapEx jumped, stock down around maybe $17. What did you guys do in Tesla?
So we did an upside call ratio spread in November. It should be a decent winner on the open. We'll see what happens with volatility. But we sold some upside risk, which should work into a 17-point down move, but well inside the expected move. So anybody that did strangles, iron condors, put spreads, call spreads, anything you did is probably going to come in pretty significantly this morning, especially in something like Tesla that has pretty high implied volatility.
Yeah, that's the point here. It's inside the expected move. So if you're inside the expected move and got the move correct, you're going to hit a home run. And if you're inside the expected move, but you got the move, wrong a little bit, you're still going to probably get paid. That's the real key on what happens. It's not really the movement up or down, but did it stay inside the expected move?
Okay. Good to look at, and because the vol was already low to begin with, you don't see really a post-earnings opportunity?
Probably not. We'll see where volatility hangs. I mean, it's a $430, $40 stock, so usually you're going to do something with defined risk, i.e., a diagonal spread or something intra-month. With under 30 days now, right? 29 days to November, you'll probably be going to December. So you really want to have high implied volatility if you're going to go out 57 days, but we'll see.
Yeah.
In other news, IBM topped third quarter estimates and lifted guidance, but the stock still dropped. That sucks. IBM's revenue came in at $16.33 billion versus $16.09 expected. IBM shares are up around 30% this year as the company has been able to capitalize on new AI technologies as well as some quantum stuff. So the AI book of business surpassed 9.5 billion, up from 7.5 billion in the last quarter.
Yeah, IBM doing IBM things, right? I mean, it's been rallying. I had a big day yesterday rallying. It's going to give it all back today on earnings. Usually it goes lower on earnings for whatever reason. Yeah. They just can't get the story right in IBM. Anyway, down around $20.
I was a little surprised. I was looking at this for an earnings trade. I was actually going to do it to the upside, but I didn't get filled on anything. The markets in the one-day options,
they're wide.
They're really junky, which is kind of surprising for something like IBM, which you would think is, more highly traded. It certainly is a liquid product. If you look at like the monthly expirations, the bid-ask spreads are, 50 cents, 60 cents. I guess some of them are kind of wide too.
Yeah.
But yeah, I was a little surprised that the markets were not better here.
Yeah, me too. Sad but true.
Sad but true. Sorry, Big Blue. And Bat, I put this in for you. Southwest Airlines posted a surprise quarterly profit, but the stock still fell. Revenue for the airline came in at $6.95 billion versus $6.92 expected. In July, Southwest joined other airlines in cutting their 2025 profit forecast. So all airlines kind of just trying to adjust to maybe a slight decrease in domestic travel. Like other airlines like a United and Delta, they can rely on, more premium offerings as well as international fares, but Southwest does not have that luxury.
Stock's been hanging out between $30 and $35 the last couple of months. It closed at $33.70. It looks like it's around $33.40, down around 30 cents, inside the expected move, but not going anywhere.
Okay.
I mean, Love's not the greatest trading vehicle. I tried to explain that to my sister, but she doesn't.
Well, you're just supposed to buy stock and hold it for all time.
Yeah.
Not in love. Yeah. Not in love. Pick something else. Throw the dart at the board again.
It does pay an 18-cent, 2% dividend if you're interested in that.
Oh, wonderful.
I can retire early.
Not if you're going the way of my sister. No, she's not retiring early, so you're gonna hang in there.
That sucks.
Uh-huh.
Meta announced they're laying off 600 people from their bloated AI unit. Oh no, the cuts. That sucks. The cuts are an attempt by Meta to continue to trim the department and further submit Wang's role in steering the company's AI strategy. Just sort of maybe a cautionary tale. Everyone's like, oh, you have to be AI certified now, but now they're laying off people who know about AI. So what do we even do?
Yeah, the AI replaced the AI researchers. it finally outsmarted its maker.
I just think they were trying to just massively hire so many people in this AI arms race, and then they realized they had too many people. I don't know.
Yeah, I mean, these companies are just so big that the risk of not catching the asymmetric upside is way more than whatever the cost is to hire these people and then fire them. And so I think you'll see this a lot more across the board in all these companies, just because if you miss it, you're going to lose a lot more than whatever it is the cost to hire these people. 100 million here and there for, the teams of people they've been hiring. It's a nothing. That's a day of Meta's ad revenue or whatever.
Sure. Sure.
It doesn't matter.
What are you doing in Meta's stock?
Ivy rank of 30. It's been expanding, but not going really anywhere. Earnings are October 29th, so you got a week or so to go there. Meta's down around $3. Even the S&P is down around 14, so you got a little bit of softness in Meta, but it's been going nowhere. Completely sideways as of late.
We had a put spread in there that we took off, was it yesterday? Yes, yesterday. 650, 625. So we took a buck out of that. We'll reassess for earnings, see where we're at.
Here's a story. I'm going to butcher it because I truly do not understand, but I guess it's good because Google is exploring quantum chaos with their most powerful quantum computer chip. The chip is called Willow, and I guess it can unscramble data using qubits that Google scrambled, and I guess that's a massive advancement in the quantum space, and it beats just like regular supercomputers. So it's doing things in the quantum realm that haven't been achieved before. I'm going to just leave it at that. It is not my area of expertise. Do not come for me in the comments. But what are you doing in Google stock?
Not usually the one we look to trade first. I mean, it does have a good Ivy rank of 55. It has earnings October 29th. It's up $1, being a little bit of a bucker in the market today.
Yeah, I think this quantum thing is getting a little out of hand. You had some
quantum chaos.
You had Trump tweets too of investing in some of these quantum stocks. It's just
they took a hit yesterday.
They took a hit, but they're all up 10, 15% today because the government is mulling potentially, getting into that space as well. Give me some rare earths, some quantum computing. It's all on the table now.
Hey, Reddit is suing Perplexity for scraping data from Reddit subforums to train its AI system. The social platform sued the AI startup in federal court yesterday, accusing it and 3 other companies of unlawfully scraping its data to train Perplexity's AI-based search engine. And as a note, tastylive, we're on Reddit.
Yes.
Yay.
Yeah, we got a number of our what's your assumption trades from people on Reddit and Fast Market too. So if you guys are on Reddit, you can throw some trade ideas in there too. We're going to post that every single week.
Participation is good.
Yeah.
r/tastylive. What are you guys doing in Reddit, the stock?
Ooh,
nothing right now. Yeah.
We haven't looked at it in a while. It's been a little bit of a lagger here, down to 197. If you remember, it was over 200, 250, 275 just about a month and a half ago. So Ivy rank of 55 in there. We are on Reddit now, so maybe we look for a trade in there. Earnings are October 30th. Maybe we start with earnings and go from there, build a little position in Reddit.
There you go. Intel on the clock to report earnings after the bell today, and a lot has changed for Intel in 3 months. Earnings are going to be the big test. The chipmaker stock has rallied following multi-billion-dollar investments in the business from NVIDIA and the U.S. government, but not everyone is convinced that that's enough for a turnaround. What are some potential plays or strategies you would use in Intel?
Ooh, Intel, which has earnings coming out today. We have to do something if you're going to do something in there. It comes out after the market closes today. Ivy rank of 54 is pretty good. It's been holding steady or going a little bit higher into earnings. Intel's been going sideways after making that big jump up from $24, $25 to just about $35. It's sitting at 36.5 right now, down around 40 cents. Markets in November are quite good, maybe 10 cents wide. You've got not the biggest vol differential between the 0 days and any others. So if we do something in there, we'll probably have to. I misspoke. When you look at that, you really do have a good vol differential.
Yeah, volatility in there generally is much higher than what has been in the past.
Yeah, I was looking at Nov-Dees. I should have looked at the 0 day and the weekly options. I'm sorry. Go ahead.
Yeah, but we're short a little volatility. So I have a slightly short delta skewed strangle on. I would like to see the stock at 34. I mean, I have 30 delta short. So small position to the downside.
Okay. we will see what happens in Intel. The new report suggests that Apple is reconfiguring their production lines to give more influence to their iPhone 17 and 17 Pro. News of the demand for the iPhone 17 and 17 Pro, especially in China, sent the stock to new all-time highs. But I guess it turns out no one wants the iPhone Air. So Apple is drastically cutting production of the Air and again shifting that focus to their more popular iPhone 17s. I just think this is an interesting headline after Apple's already hit new all-time highs.
What's wrong with the Air? You probably know. Like what?
No, nothing. I don't think anything's wrong with it. I just think people want the super zoom and the more cameras that come on the 17 Pro.
I think they did that on purpose. I mean, you always have to have the cheaper one to make the core product look better, right? So like you come out with this one like, oh, it's thinner, but it's just not as good and it's a little cheaper. Like you don't want that. You want the big boy. Like they
give you the FOMO. They make the FOMO for you.
Yeah, exactly. You build it into like, your main product. It's a marketing thing. I feel like that.
What is Apple's stock doing today?
It's down about $1, maybe a little bit less than that. Earnings are October 30th after the market closes. But as you said, Apple was making new highs just yesterday. So down $1 off of new highs.
Amazon announced yesterday that they are developing AI-powered smart glasses for their delivery drivers. The idea is to give delivery drivers a hands-free experience that reduces the need to keep them looking between their phone and the package they're delivering and their surroundings. The glasses will allow delivery drivers to scan packages, follow turn-by-turn walking directions, and capture proof of delivery, all without using their phones.
Oh, these are better looking. Only
I hope it captures the drivers peeing in water bottles in their trucks.
Only if they look down. If they can't
don't you have to look at it? I don't know how this works. Don't you?
No. It's after a certain amount of years.
I do it by feel. I do it by feel.
And assuming it's sized appropriately, it kind of does itself. It
does by itself. Right?
Yeah,
right.
It's
it's self-driving.
It's basically.
I don't know how you guys walk around with those things. Anyway, what's Amazon doing?
It swings around a little bit. You gotta get a good packaging for it.
Omaha.
Thank you.
Amazon 218 and a half, up about 50 cents. Even the S&P down 12. So you have a little bit of a mixed market there. Amazon has not really cooperated with this. It's not near its highs. Let me say its highs around 250 or so, sitting at 220. Earnings are October 30th.
Okay, there you go. Moderna taking it on the chin yesterday after the company says they would discontinue development of an experimental vaccine that would prevent a common cause of birth defects. That was after the vaccine failed to meet the main goal in a late-stage trial. Shares of the drug maker were down over 4% in extended trading mRNA.
mRNA, I haven't looked at in what seems like years.
Yeah, this is like I hope I don't have to be in a market where this is one of the.
It's things so 2022.
Yeah, like let this one go. This stock. Ugh.
Ivy rank of 59 is high. Stock.
I might have did something.
It might have did something. Market. It's near its lows. It's down a dime or so. Seems to be a fairly slow mover. Earnings are November 6th. I'm going to look at the option markets here. Option markets are good. Maybe it did something. Maybe. Maybe.
There you go.
Maybe.
Hey, speaking of options just being wonky, meme stock Beyond Meat Meat blew through nearly 50% of recent gains after a day of wild trading yesterday. Shares of the maker of the plant-based meat had risen by roughly 1,400% at Wednesday's high. What's going on?
Yeah, it went from 50 cents to $5 or $6 on BS news like this. I mean, we talked about it yesterday when you brought it up, and this was, destined to fail, hot potato kind of thing. You're buying it, trying to sell it higher, and now you got the stock closing at 3.5, and now looking like it's under $3. Maybe now it becomes a little bit more interesting if you want a little bit of two-sided action, but Beyond Meat, I think it's a stock play more than an option play if you're going to do anything.
For sure.
I just wanted to give the follow-up because sometimes you just see like the first headline and you're like, oh, it's going to the moon and it's just going to stay there. But literally the turnaround was so rapid.
Yeah, nobody talks about the turnaround. They just talk about the movement up. You have to remember that.
Yeah, this was a quick one. You're not getting a day two here, at least right now.
No.
This is bonkers, but Kalshi, yes, the prediction market site, is already fielding investment offers of up to $12 billion. 2 weeks ago, zoom in, 2 weeks ago, they raised $300 million at a $5 billion valuation 2 weeks ago, and now they're worth $12 billion. Zoom in, 2 weeks ago.
So
what are we doing?
So honestly, you're making fun of it, right? Because it's so wild a valuation 2 weeks
later. 2 weeks ago.
Yeah, I 100% agree with you. 2 weeks ago, this has gotten out of hand. I mean, it wasn't mispriced 2 weeks ago. It's just gotten so frothy here.
But to more than double? It didn't go from 5 to 7 or 5 to 9 or 5 to 10. It went from $5 billion valuation to $12 billion. 2 weeks.
Yeah, well, I think there's no way to short this, right? So,
right.
I'm with you on this, Vanetta. I'm with you on this. I think.
Nikki, what are your thoughts?
I mean, money. If somebody's willing to put the money out there, then that's what it's worth. So we'll see if they get, what sort of funding they get from that valuation. I mean, I think they still have to raise that money. Or maybe they did already. I don't know, but you can. Yeah, I think it's a little bit much, but I don't have $300 million to raise with either. So
yeah, well,
if you got $300 million, it's probably not every penny that you have, and you figure, okay, here's some upside.
Well, maybe something that is driving it is that the NHL signed a multi-year licensing deal with Kalshi and Polymarket, becoming the first major U.S. sports league to partner with prediction market platforms. The agreement gives both companies access to NHL data and logos and grants the league new customer protections. Kalshi CEO Tariq Mansour called it a seminal moment for prediction markets. Again, I don't know that justifies your $12 billion valuation, but it does add some legitimacy, I guess.
Can't hurt, I guess. I don't know. DraftKings isn't scared. Stock's unchanged, but it's on its lows.
That is bonkers.
Mm-hmm.
But yeah, what are you going to do? Hey, in other news, the NFL has approved the sale of a minority stake in the New York Giants to Julia Koch at $10.3 billion valuation. So Kalshi is worth more than the New York Giants. After that,
did you watch the Giants play? Although
that historic collapse, man, against the Broncos, that was brutal. Yikes.
Yeah, but they got some boys on that team.
They got some boys. They
got some football players.
Yes, quarterback, running back from Arizona. There,
yeah, defensive line. Like they got some guys. I like it.
Well, the sale got the green light from the NFL. So I kind of like these limited sort of partnerships. We'll see what it brings, but it got approved. So
it is amazing the valuations of these kind of franchises that we haven't really kind of seen come to to market, and now the valuation is just, you're really seeing like what they're worth. You know what I mean? Like, you know, they were always in the 5 to 7 billion, and now you're getting small partnerships trading at 10 and above. It's crazy.
Yeah.
Oh, ASU, not Arizona. I'm sorry. Yes, you're right. Thank you.
Boom. There you go.
Whatever his name is. Yeah.
Oh, Scataboo.
Yeah.
Scataboo. Yeah. Finally today for my viral video of the day. This is, I just personally find this funny. It is getting to the end here in the Midwest of the motorcycle riding season because
it's over. There was a frost warning for Friday.
Oh, it'll be fine. I'm going to ride this weekend. It's going to be fine.
Frost warning for Friday.
You're fine. You're fine.
You're going to freeze your...
I put a full gear. I wear gear all the time, but a guy in a car caught this motorcyclist in Wisconsin. Check this out. Just chef's kiss.
Sailing takes me away to where I've always heard it.
Live his best life right there.
Sailing takes me away to where
And ladies, he's single.
I know. Hey man, you know what? I say ride free, brother. Ride free. Well, we do like to say you dress for the slide, not the ride.
Yes.
But you know, whatever. You do you. Ride free.
You do you. Ladies and gentlemen, he's single out there, so he's available. We're going to take a quick 90-second break and come back. We got more Tasty Live. Immediately following these messages with a little bit of a confirm and send. We'll be back in 90 seconds. Thank you for that.
New from tastytrade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new tastytrade account. The Money Match event starts now, exclusive to new tastytrade customers.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus one. And you know, I'm the Bat.
John McLaurin, Wisconsin. Number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University. Number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, Be Mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade. What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies. Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
tastytrade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
We are back, son. You know what that means. Time for a little bit of confirm and send. But before we do, let's take a quick look at the market. Even the S&Ps not doing much of anything. Down around 7 right now, even on the heels of Tesla down around $15 or $20. Looks like it's down around 17 right now. And IBM down closer to $20. That's going to put a little bit of pressure on the Dow, even though it's only down around $90. The leader in the clubhouse is the Russell. It's up actually $7. Russell's been weak last couple of days, catching a small bid right now. NASDAQ down 42. Volatility 1944. Really slid a little bit yesterday. Stayed kind of bid on the down move there, and then really kind of after being down around 50 to 70 handles on the E-mini S&Ps, started to slide, and the market rallied after that, coming back about 2/3 of what it had lost. Bonds down 13. Bitcoin up around 1,300. It too had been sliding. Catch a little bit of a bid here. Ethereum up the same on a percentage basis, which is $50. Oil is your big mover to the upside. It was actually up a lot more than this a moment ago, over 62, 61.20 and change. You took your oil futures off. Nice trade, buying the dip in there. You really look at this 2-day move here of biblical proportions from around 57 or so up to around 62. Big move in oil. Gold catching a bid again, up 77. You can see the slide over the last 2 days. Volatility coming in as it goes lower. We'll see what volatility does today as it catches a little bit of a bid. I would imagine that it catches a little bit of a bid too on volatility, but you never know. When it gets in between this little range here, you need maybe more than 1 day for volatility to expand in gold. Silver actually up more than gold on a percentage basis, 2.5 to under 2 on gold, up $1.16. Big move in silver. Nat gas now down a couple of pennies, 4.3. Volatility in nat gas quite high as it goes higher. Big 2-day move just a few days ago, going from around 360 or so up to around $4 in nat gas. That's all I really got. Earnings, Intel, NEM, kind of a breather on the earnings for today.
E-minis were down like 15 or 16 about 20 minutes ago, so they've just rallied. The dip has been bought once again.
Wait, you know what? You talked about it on Friday. I asked you, what do you think for the week to come? And prior week, also 6,700. We're here, 6,712. Now, we had some good movement in between there, but we're 6,700 on the E-mini S&Ps. We really have gone nowhere pretty quickly the last, week or so.
Yep.
Confirm and send. Let's do it. Thursday, October 23rd. Man, we're on the downslope of October here, by the way. It's going to be November, and you may have got frost warnings on Friday.
Ooh, pool closing, sauna season. I mean, this is...
It's the end, son.
Yeah, it's the end.
Of the summer. All right, how do you use options Greeks like Theta and Vega to manage a portfolio during volatile market conditions? And hey, not just volatile ones. How do you look at them at any time? What do you look at?
So Theta is not something I focus all that much on. I mean, it's intuitive that you have positive Theta and that you generally have a lot of it, and it's going to change based on what kind of positions you have. If you trade a lot of 0-day stuff, you're going to have a very high Theta number, and that's just because those options expire so quickly. And even if you're a shorter duration trader, you're going to have a big number for Theta. I mean, I think Theta as a thing is good to understand. Volatility exposure in Vega and really your Delta is where I am mostly focused on, especially when things are moving around. I mean, when you're looking to reduce Delta or reduce your exposure, you're looking at Delta more than you're looking at anything else.
Yeah, Delta's king. I've said it numerous times. That's the way to look at it. Your Theta, I mean, you look here, you're selling premium when you're selling something for a credit. Your Theta's set on entry of the trade, and it's dynamic, just like your Delta's dynamic, just like your Vega would be dynamic. Everything is dynamic with the market movement. So your Theta decay is actually daily Theta decay, if your positions are working, is going to go up as your amount of Theta that you have goes down, because you're getting P&L in your positions. that's when it all works out. If it goes the opposite direction, your theta can actually go from positive theta decay, which you want when you're short premium, to negative theta decay when the positions go against you. So I look at delta just like you do. Delta is king after I've put on positions, and we go from there, and we manage our positions by selling more premium, which is collecting more theta. Next questions, please.
How do you adjust your stop loss or exit rules for option trades when volatility is elevated?
Yeah, the easiest way to do this is don't have them.
I mean, if they are, if they help you sleep at night, using a stop loss is okay. I agree. I think position sizing is really the key here.
Yeah, I mean, listen, we don't have to be as politically correct. I mean, if you like stop losses, sure, you go ahead and use them. I think, when you have a vertical, if you are apprehensive about a position, then you put on a wide vertical spread. That's your synthetic stop loss, all right? I mean, it's a defined risk trade. It's a stop loss in there. It's synthetic stop loss, but it's a stop loss. If you're trading undefined risk trades, you got to define that risk on entry by trading small. Stop losses placed inside a standard deviation, are going to get hit 70 to 80% of the time. Mm-hmm. So if you're going to put a stop loss in, I recommend, or I would suggest, putting in a stop profit too on the same type of percentage loss that you would do. Put it on as a profit. So at least then you could stop yourself out for a profit as opposed to stopping yourself out just for a loss. Let's try to make the glass half full as well as half empty here. So stop losses, not something I do. Exit rules, something you have?
Not usually. I mean, I look at stuff, if it moves quick enough, I'm pretty quick to just take stuff off. Again, I think with trading, it's good to have mechanics, but I think you have to kind of take what the market does and trade around that as well. Like, you have your core mechanics, you want 50%. I've been taking $100 out of a lot of these positions in a couple days, and it's just because you're well ahead of the decay curve. Like, the 50% is based on something that's, going to take you 2, 3, 4 weeks of holding to get to. If you're getting, 20% in 2 days, you're well ahead of that curve. And so, I try to be a little bit more aggressive.
Very good. Next question, please.
What role does gamma play in protecting against large price swings in short option positions?
Oof, what role does gamma play in? So many people get nervous about, like, what about your gamma exposure, and what about your gamma exposure that's profitable for you too, right? I mean, if you're short gamma and it's working for you, it's a wonderful thing. If it's short gamma is working against you, then it's not a wonderful thing. Again, going back to the very beginning on what you can control, it's all on size and entry. I think what happens here is when markets go in one direction for so long and people get complacent, they start ramping up their number of contracts and even their strategies that they use, and they get too concentrated in one strategy. I think the background question on this question really is, you should be a lot more strategy diversified. You shouldn't be ramping up when volatility is low. Volatility is just coming off historic lows. You should be ramping up when volatility is high, like we had just a few days ago. Now, it's hard to do. I'm not sitting here preaching saying this is an easy game to do. But this real question here is, it sounds like people are just getting a little bit too complacent with their positions. But now here you are. You're back to 6,700 and change. You took heat on both sides. If you rolled up and down, you're back to a scratch, small loss, small profit. Take these trades off and put on a strategy or reduce size that can get you more into a place where you're not worried about what your gamma is doing, because you already did that on the opening trade. So I think this question really has some hidden meaning to it.
Well said.
Wow. Okay, good. Are you ready on the next one?
Yeah. Oh, wait.
Oh, that was it?
No, we got one more.
Good. How can you use option skew data to identify potential directional market bias?
I wish it told you exactly where the stock was going. It unfortunately does not, but it tells you where people are pricing the greater risk to be, and the greater risk being the bigger move. And so a lot of stocks you'll see have upside skew, and that's because people think there's and are willing to trade that the upside is fatter than the downside is. And so, a lot of those stocks and those positions, I try to play into that skew. You could do that with crab trades or diagonal spreads or ratio spreads. Those are the sort of things that I trade into skew.
Yeah, so you're just taking advantage of what the market has here, like on all ETFs, not all ETFs, but most ETFs that mirror the market, SPX, SPY, IWM, Qs and stuff, are going to have put skew. So if you're bullish on the market, puts are going to be more expensive, equal distance away than calls. If you're looking at the Oakleys of the world, OKLO, and the BEs of the world, and even the Intels of the world, you're going to see calls are more expensive than puts because the velocity of the move is perceived to be to the upside on those stocks I just mentioned, and on the ETFs, it's to the downside. So if you had a bullish market opinion and a bearish on certain stocks, you could take advantage with strategies that you just mentioned a moment ago on those individual stocks, while you have long delta in those ETFs that I just told you about, and you basically have a flat portfolio taking advantage of all skew on both sides of the market. So it really becomes dynamic again. I think all of these questions become dynamic again about the strategy selection that you do as opposed to the market direction, which I think is a pretty good thing. Even the S&P is down 4, NASDAQ down 47, Russell trying to lead us higher, up by 8, Dow down by 76. But you know what? All that means nothing right now. We got trades from the research team coming at you. We'll be back in 90 seconds with more Tasty Live after this.
Trading is hard enough. Here's what liquidity is. You want to be like water. Liquidity is in reference to how easily you can get in and out of a position, from volume to open interest to actual price at which you can buy or sell your position. It's important for all traders, from stock traders to futures traders to options traders or even crypto. Tight bid-ask spreads and high volume are characteristics of good liquidity.
tastytrade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
tastytrade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
The future of trading is here. Join Mike and his whiteboard, plus the tastylive crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
We're back. Sorry, I was just enjoying the music. How are you, son?
I'm good. I'm hanging in there, ready for the open.
Beautiful, beautiful. And that opening is imminent, about 21 minutes. But before the opening, got a great segment for you called Trades from the Research Team. Who is our first researcher? That's it. My man, Gad. How are you, son?
I'm good. How are you?
You are good. You know that?
He's
Thank
the
you.
Overachiever in the office while we're all home.
Thank you. I appreciate it.
Very nice. Very nice. Well, what you got for us today, Gad?
So today I got I beat. I got bullish.
Ooh.
I'm bullish in I beat. I have long call spread.
IBIT looks like it's going to be up around 50 cents this morning. So hopefully you put this on yesterday more than today. Kind of a classic call spread here.
Risk one to make one type thing, 50-50 shot.
Yeah, it's 50-50
I like
shot.
the call. Again, I hope you did it, or I would prefer you had done it yesterday with the stock up 50 cents. Is this something, Nick, that you put in and maybe put in at a lower price and see if you get filled? Or how do you feel about IBIT? I think you have a couple of positions on an IBIT, right?
Yeah, I'm locked and loaded. So I'm long stock. I've got an in the money put. We put on some diagonal spreads with Ryan yesterday.
Okay.
So it should work out today. I think if you don't have a position, long call spreads are interesting trades here because you still have a little bit of call skew. So they trade relatively cheap to the width. So you can even widen these out if you wanted to. It won't cost you all that much more. So I like it. I think this is a good spot.
Yeah, it's a good bet. It's a 50-50 shot, but you have a room to adjust your regs and wings. So it's a good one.
Yeah, and you're going into November here, which I think I would be going into too, unless you're thinking, much shorter term. Obviously, you can go into the weekly options or the November options. But if you're going strategically, giving yourself time to be right, November is the place to go. So I think you got the right pricing here too.
Exactly.
Good job out of you, my friend. We're just locked and loaded, as Nick alluded to. So we'll take a small little pass on this. But thank you, my friend. Good job out of you.
Thank you. Appreciate it.
Who is our next researcher?
The shark, baby.
My man,
That's
how
right.
are you?
The one and only Jaws.
Look at you representing Emory and everything like that.
Of course.
You flexing on us right now? Is that what you're doing?
I don't know how much flexing this is going to accomplish, but
I was hoping for a Diwali outfit.
A Diwali outfit? I could have pulled up with a full Indian outfit.
Yeah.
Of course, Dad sent you pictures, of course. Yeah.
Dad sent me some pictures. I have some pictures. So I'm going to tell you right now, you better make sure you get my lunch and make sure it's warm. Okay? Or those things will be out on the internet in no time.
Hey, listen, I've been rallying the crew for Indian to be back on the lunch menu now that Scott's gone. We are missing that dearly.
Yeah, we had that one restaurant, Nonsense, right?
Nonsense.
That was beautiful.
That was
name.
good. That was good. India House is another one we could put
India
on
House,
the list. I forget the other one that did what's the fire that they use? The pit, like the one
Tandoori
chicken.
Okay.
That was amazing.
They're all plays on Indian words. Yeah.
Yes.
Have you found a place in Chicago that you love for Indian food yet?
When my parents came over to visit, I took them to a place called Mild Too Spicy. So
Mild
it's like
Too Spicy.
Yeah. So it's an interesting name. Yeah. But I mean, they said that the food was good. So.
Okay.
You didn't eat with your parents?
No. I did. It was me, my parents, and then Kai, Gad.
You're an adult now, Sahil. I'm asking you.
Yeah.
Have you found the place? I mean, I don't give a crap about your parents right now.
No. That was the place.
Parents.
No.
You.
I bought up my parents because I said they're Indian. They know. I found the place and they said that they liked it.
They're Indian. Doesn't that make you Indian?
Not the same Indian,
not the same Indian. Okay,
he's like half Indian.
If you go to India and you're like, oh look, I'm Indian, and they see my accent, they're like, no, you're not. Okay, and then you don't know what you're talking about.
All right.
Yeah, you don't know what true Indian food is about. It's a real struggle out there, Tony. Okay.
Well, I'm interested for sure. And
see, Gad doesn't think I'm American. And then other people don't think I'm Indian. I'm politically homeless.
You're a man without a home, Sahil. A man without a home.
Exactly.
Well, when you find your favorite spot in Chicago, please tell me because
I will let you know.
I respect your opinion. So.
I'll be honest, Nick. I haven't gone out for too many Indian restaurants in Chicago because we have so much Indian food whenever I come home. So I know. But I will find a spot. Okay.
All right.
Because I think it's important to have one.
Sounds good. And when we do this,
I don't know about the whole picture blackmail that's going on with Tony right now. You know, like uploading the Diwali pictures online. I think I look pretty good in Indian clothes. So I don't know about that.
Yeah.
Tony. I bet you do. I haven't had a chance to look yet, but I'll look. Okay. You'll see. All right. Good job, buddy. What kind of trades you got for us today?
So pretty much kind of in the same direction Gad is going, more Bitcoin ETFs. This one's ETHA, so Ethereum. But instead of going long call, I'm going short put because the volatility is relatively high. So we're going out into the December options just to collect a little bit more premium. So December options, 57 days out. So just a simple 26 short put around the 30 delta. See how it goes. $2.12 in credit.
I like it. This was Ryan had a similar idea too. The mid 20s puts you at an ETH price at about 3,400, 3,500 ish. So, that's kind of been the low of where it's been trading recently. So I like this. Yeah. This one I'm also locked and loaded. So I'm with you here with shares and short puts and call diagonal spreads. I'm ready for the October to play out.
You ready for the V bottom?
Yeah.
You can sell a couple calls against it then too.
Yes, for sure. For sure.
But yeah, hopefully Bitcoin doesn't go, or in Ethereum, they don't go too much more down. But
I like it.
See. Yep.
Good job, Sahil. Nice job out of you. Hardest working man in show business right there. Proud of you, son. Good job out of you.
Of course, Tony.
Dinner on me when we find this mythical Indian restaurant, okay?
Yeah, sounds good.
All right. Sounds good to me too. Who is our next researcher? Yeah, I love your intro music. It definitely does not fit you, though. But I love your intro music. I really do. You're so calm and cool. You know what I mean?
Sometimes.
Hey, it's Thanksgiving season. And back in what are you laughing about already? What are you laughing about already?
I know where you're going. Oh my goodness.
Okay, all right. Well, I mean, she hasn't kicked you out of the house or anything like that. You want to come over and eat Thanksgiving again, or are you good?
I'll probably ask for some help.
Okay. Okay. Well,
thank you for the invitation. I really appreciate it.
You're welcome. There's always a turkey leg with your name on it at my house.
Is this how you replace me, Dad? Because I go to my mom's for Thanksgiving. You replace me with Kai?
So pick some random guys on the street?
It's an uptick, son. Believe me.
Oh, wow.
It's an uptick.
Low blow. Oof.
Oh, by the way, that mild to spicy, if I remember correctly, it's pretty good.
Oh, okay. All right.
They ordered mild. I think it's perfect. There's one dish is medium. That's too much for me. I was like sweating all the time.
You like spicy food.
I love spicy food, but my stomach says no. Too much.
I've been there. I'm getting there. I'm there now. Yeah.
It's pretty good. If you walking, see all the Indian waitress, this is a sign that's pretty good.
Yeah,
You know, we say the same thing about Chinese food.
Yeah.
That's
You got a favorite spot, Kai, in the city for Chinese food?
Chengdu Impression is still one of my favorite ones.
Okay. Yeah, they have one of those in West Loop, right?
Oh, I think they open a small one. It's still the same. I cannot take too much heat. It's very spicy, that restaurant.
Yeah. Okay. All right.
Right. We're learning something about food here today. Good job. Good job out of you, man.
I mean, we have to bring it back. The food talk is, I get the emails all the time. You don't talk about these foo-foo restaurants anymore on the show. You got to bring them back. So I'm trying.
Yeah, we're the tasty world, right?
Yeah.
Right.
I mean, it's in the name.
It is. I don't know if Chengdu Impressions is the right place to start, but it is a start just the same. It's not very foo-foo, but it is very good.
Oh, you been there?
Yeah. Oh, yeah. Sure.
Oh, cool.
Sure. Been around for a while.
Yeah.
Good. Actually, yeah, that would be my favorite too. I always forget about it though, because it's a little bit out of my shuffle zone.
I like QXY dumplings. You get
I heard about that. Yeah,
it's really good. The soup dumplings, and they have all different kinds of them, and you can eat 100 of them. They're great.
You guys just love dumplings and fried rice.
When you say you guys, Kai, who?
Yeah, you people. You just gave us a you people. You just you peopled us.
Who are you referring to?
It is pretty delicious and it's easy to start.
Yeah.
I want to say it's a very advanced level.
All right.
You're not a dumpling guy?
I ate too much when I was a kid, so I'm kind of getting tired of it. Every time my mom here just get like a wrap like 300, 400, I was like, oh my goodness, that's too much.
I did the same thing with Southern Comfort. So yeah, I can't do that. I can't tell you.
I understand.
All right, what trade you got for us, Kai?
All right, I'm gonna give you something that you're not lock and loaded. Deck.
Does it have earnings?
Yeah.
Yeah, I think so. Yeah, go ahead. Oh yeah, earnings per ratio. There you go. Go ahead. Sorry.
Yeah, earnings per ratio. So it's my routine. I don't want to too much risk. So I'm slightly neutral, slightly bullish. So I don't want upside risk, and I also want to buffer my downside risk too. So one standard deviation expect move is around $10, $11. So I make it twice as far, almost $20 to break even point.
Classic Sosnoff type, 2 times the expected move with your break even here. I mean, I know you're bullish in here, but you only end up making yourself 14 cents if you get the upside move, right? I mean,
yeah, my logic is I think the risk is to the upside, so I don't want to lose any money. That's the number one rule. So that's why I make a very conservative play.
I would say it's extremely conservative. It was borderline on kissing your sister kind of trade. Like, I don't see the reason to do this. To be honest with you, I would rather see some sort of maybe even it's going to take a lot more buying power. Well, no, same time, some sort of crab trade.
One day, I only put on for 1 or 2 days. That's fine. I'm going to take it off tomorrow.
Yeah, don't you poo-poo the general here? What the? Come on,
Johnny General.
Yeah, I mean, I'd rather back to the general. You people.
I'd rather just sell the 89 put for a buck and change, or the 88 put for I don't know, maybe 90 cents or 85 cents. At least be able to make a couple of dollars here.
Okay.
Have a break even at 87 instead of a break even which is much lower. You're going to be down around what is that, $3 under 85, so around 80.
To 82. So roughly $19.
I like the idea. I think I would take a little bit more risk than
okay.
We'll take a look at it. You got earnings after the close today, so we'll check this one
I didn't
out.
mention deck in my earnings because it's not something that we typically trade, but I like your idea. You bring it to the light. Maybe somebody finds a different trade that they like. All right, good job out of you, my friend. All right, let's see who our next researcher is, and our last researcher. What's up, you little black cat? You? Everything good?
Oh, living my best life. I got my coffee. I got my cat somewhere. I don't know. You're going to hear her pretty soon, probably. How are you guys?
Ooh, does that cat go outside anymore now that's getting cold?
Oh, no. She could not handle outside. She's not one of those.
Oh, she's not catting around in there?
She's not catting around. No, she would fold in a second. Yeah, she's not one of those.
No, I can understand. I dated a few of those. What do you got coming up for us? What kind of trade you got?
Oh, Oracle. I'm probably going to regret this, but this has been a bit of a spicy meatball lately. I'm out in the 57 days. It does have earnings kind of midway in the cycle, but it's very much towards the end. So the 21-day point would be kind of like well before this. I didn't want to go in the 29 days with this one, and I went very wide. So the pop on this is about 70%, but it doesn't collect as much as if you went a little bit tighter. So I went with the 223.50 short strikes, went, that's not right. That's not supposed to say 730. It's supposed to say 360. So $10 wide for the long strikes on each side. So that's a typo on my part, but collects 240 in credit, 760 in buying power. So a little bit conservative, very wide on this one, but with the moves that it's been having recently, I just felt a little bit more comfortable going that far out.
I still, when I look at Oracle, I have a hard time thinking about it as, 300 strikes and stuff like that. It still seems like a $150 stock at best.
Isn't that crazy? Yeah.
It really is, but I think it warrants a trade. I think you're right.
It's been a good trade. I mean, there's been some swings and volatility there. I like it. We'll look at this. Yeah,
I agree. I agree. You brought a stock that we trade, but we don't really. It's not on my radar as much as it should be to light. So for that, I commend you. So thank you very much.
Ah, amazing. The accolades of it all. Yeah. No, this one, it had a very big pop back in September, and it's actually calmed down quite a bit since then, but it's still been in the news cycle. It's still been having, some swings. So
yeah, you can see the 5-day change is down by 7%. When I'm putting on trades, I like to see that IV 5-day change to be going higher. If I don't, then I want to define the risk, like what you're doing here, because you mitigate a little bit of that volatility, expansion and contraction by defining the risk here. So I think that's the right strategy to place in this stock with the volatility the way it is. So good job out of you. Even the S&P is trying to do a good job. They're only down $1.25, but we'll talk about that and the rest of the market in just a quick second. Thank you all from the research team for coming on, and thanks for finishing strong with Julia. Of course, we'll take a quick 90-second break and come back. We got more Tasty Live after this with the opening bell.
New from tastytrade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new tastytrade account. The Money Match event starts now, exclusive to new tastytrade customers.
Delta, Vega, Gamma, Theta. It's all Greek to you. Well, guess what? Millions of people speak Greek, so you've got no excuse. Here's your alphabet. Theta is time decay. Time itself has value in the options world, and that value slips away the closer you get to expiration. Theta is how fast that happens. Tick-tock, time value drops. Delta is difference. How much does a $1 move in the underlying affect the price of the option? Long options have a positive delta because their value moves with the stock, and short options have a negative delta because their value moves opposite the stock. Gamma is get up and go. It's how fast delta changes. Gamma increases when the options start trading much more like the stock, like the closer to the at the money and the last few days till expiration. Vega is not a Greek letter, but it does start with a V, and so does volatility. Vega measures how much the options price is affected by the changes in volatility. Now you know your alpha, beta, gammas. Well, gamma anyway. Pretty simple.
It was a great show. It was very inspirational and motivating. I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math was really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
Got trader's block?
We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Niggy, we are back, son. You know what that means? Time for a little bit more Tasty Live. That's right, with the opening bell. And as we get to that opening bell in less than a minute here, even the S&Ps are catching a small bid. They're basically unchanged, up $1, followed by the Russell. That's actually up $10. That's your leader in the clubhouse, with the NASDAQ basically unchanged, down 23, and the Dow down 64. We have basically an unchanged market, which I think most of this week has really kind of been an unchanged opening. We've had some intraday movement thereabouts. Volatility up 10 cents at 19.45, and bonds down 16 after being over 119.13 to 118.25. What do you think here for today? Kind of, I thought with Tesla coming out down, or around $15 or so, and IBM down around $20, that the market would be a little bit softer here, but it seems like it's catching a small bid.
Yeah, I agree. It's kind of all the earnings that have come out, it's been kind of a sell the news event. So I'm a little surprised that we have the strength in the market. I mean, volatility is picking up a tiny bit. You have gold and silver doing nutty things again. Oil's flying around. It's
gold up almost 100 now, to 41.60 and change after flirting with going under 4,000.
Yeah. So things are moving.
Things are definitely moving. There's a market out there with your name on it for sure.
But it's all underneath the surface. Like you're getting nothing in the indices on like the top level, and then you got big moves underneath the surface of some of these stocks.
Yeah, you mentioned BE earlier this morning. It's up small at $1.30, but look at it here, going from 120 to 95. Your OKLO, another one. It's down another $1 and change today, going from around 180 to just about 120 here. So you've got some stocks, as you said, below the surface here, moving here. You got some other ones too. Tesla's now down 20, trading right near its lows of the day. IBM down 20, also about $4 over its low now. Carvana down 10 on the rumor that Vinny's going to have to wait till January to buy a car.
Oh no!
UNH down 6. AMD down $1 or so. JP Morgan down $1 or so. Love for earnings looks like it was down around $1 or so also. Yeah, $1.12. Let's see what's moving to the upside here. GEV, not even sure what it is. Up
GE Vernova.
Yeah, no.
Had earnings the other day.
The GE spinoff, right?
Yes.
Netflix up 6 after its earnings sell-off a few days ago, trying to catch a little bit of a bid going sideways there. IV rank of 8. Not really a premium selling here on a $1,100 stock. You're not going to sell any premium either. Probably it uses too much buying power. So something with defined risk, maybe something to go on there. Las Vegas Sands up $5. That's a big move. I mean, that's a 10% move in Las Vegas Sands. The GLD obviously up with gold up. It is a gold proxy, 10 times the size, lower than GLD. There's Rigetti up 3 and change, and AppLovin up 3 and change, Baba up 3 and change. But maybe the market catching a little bit of a bid here. Even the S&P's up 5. Only the NASDAQ is lower here. Bitcoin up 1,200. What you got going on?
I was trying to work an order for Oracle. I was going to do just a strangle, the 243.10 in November, basically a delta neutral strangle. Get back into that and see if I can get filled
in
on
December?
That. Yeah. No, I was looking at November.
November would avoid the earnings. 29, a little bit shorter dated. 240. What are you looking at? 310?
Yeah, it's slightly short delta skewed.
Yeah, it's a nice premium there with the 50% monthly implied volatility. IV rank of 64 is pretty good. I mean, Oracle warrants a trade if you're looking to sell premium. I agree with you. Whether you go to November or December, it just goes on your own outlook.
Yeah, and I think I'm going to do something. Oh, did I miss it? Damn. I was going to look at some of these quantum stocks to get a little bit of short delta there.
Uh-huh.
But they've kind of reversed some of the move, half of it, if not more. Like I was looking at INQ, just getting back into that put diagonal that I had. I had like a shorter duration one, but maybe I do like December, November, just to play into this because this one, I mean, we've had so many of these like government / Trump takeovers. I feel like we're at the same.
We're exhausting the play.
Yes, exactly. I think we've played out this kind of situation. I don't think they're all. Every time there's a tweet that goes out that we're going to put a $10 million or whatever into XYZ stock. I think it's starting to dull out a little bit in terms of its meaning.
And yeah, it's not going to affect the stock as much. I would agree with you. Usually what happens is you get, the first time you get those kind of tweets, you move the most, and then it gets a little bit muted after that. You did do that trade in Oracle around 691, 2 or 3 cents off of mid-price in Oracle.
Yeah, the same thing kind of happened with Beyond Meat. That's kind of what it felt like. It was like, everybody looking for that GME type moment again.
Yeah.
And all of a sudden it's basically over in 24 hours. I mean,
hungry for that kind of move. And you are right. Here it is right back into the middle of its move, trading at around 290 or so, 287 and change.
Do we buy a couple shares here just to participate for the people?
I mean, it's
Stick it to the man.
I mean, it's a $2, $3 stock with no expiration to it. You're over the last whatever 6 months or so, this is probably the mean of the stock price.
Yes, for sure. For sure. I mean, it was 50 cents not too long ago.
Yes.
So there's certainly some downside risk.
Not too long ago, like 72 hours ago. And you can make the same argument that 48 hours ago it was $7. So that's that's what I'm making. So shot here.
We bought a couple shares.
Shares in there? Sure.
Why not? So I'm also going to close out of this Tesla ratio that we did. So
you're up 4 or 5 cents on that trade already.
On the Beyond Meat?
Yeah.
Oh, nice. No, we're gonna hold that for a little longer.
I know, but just teasing.
That's something in prior administrations. There's no way there would be a stock purchase in that one.
Pump the brakes there, son. Pump the brakes.
We closed out of the Tesla call ratio spread, so we put this on at a $2 and some odd cent credit. We were long the November 450, 470 call spread, and then I sold the 500 against it. And we did that. Did we do that yesterday? Yesterday into earnings. So we did that at a 219 credit to the up, and had
and you're getting out of it for a credit.
Yes.
So your profit is your credit that you sold it for, that $2.19. Plus the credit you sold it for $1.45. So you're looking at like $3.50 in credit on a move that you really didn't get right, correct?
Exactly. So you had some short delta on the trade because you're naked the call, or you basically flat delta.
Short delta when you put it on.
Yes.
And if volatility contracts, you really just start getting long delta. And if we were to go higher, that would be the kind of the home run inside the expected move. But we went lower, completely missed the move, and missed it, significantly. 23 handles on the stock is, directionally wrong. You can't argue with that. But the strategy made $3.50. Some would say you were gifted.
It's a good win. It's a good win. I mean, the benefit holds value, and that's why you can enter and then exit the trade for credit, is because you're selling that tail volatility and then buying closer at the money volatility that doesn't move as much. And so it worked out as a nice little trade there.
Yep. Very, very good. Very, very good. Good job out of you. Good job out of me. Good job out of the market, as all 4 indices are now green. Bitcoin up 1,600. Bonds, on the other hand, are down around 14 ticks. Gold was just up closer to $100. It's $10 off of its highs, still up $90. Big move there. Silver, big move. Oil, big move to 61 and change, although it is almost $1 off its highs, 80 cents off of its highs. Big move in oil that you were able to capture, which was really nice too. So good job all around, son. So far, so good.
Yeah, we got some stuff moving. We have that VST short put that we did from one of the Reddit peeps. That one's up like 40 or 50 cents already. That's a nice little
Stocks
trade
up
there.
$2 or $3. Yeah, I mean, you can see the slide here over the last 5 days, just trying to buy a little bit of an extended move to the downside, right?
Yeah, and I think I'm gonna close out of this call diagonal I had in XOM and take 60, $70 out of it.
Nobody makes money in XOM. I mean, you look at VST for a moment, monthly implied volatility in the 60s or 70s. It whips around. You look at XOM.
It's gone nowhere.
Right. And monthly implied volatility of 25. So you have to, so everybody says like, how much can you make in a trade? How much can you, how much money can you make trading even? Forget about just the trade. And I always answer it the same way. Well, how much risk are you willing to take? You know what I mean? The same $500 risk in VST is not going to be the same potential profit or loss in an XOM, right? So it all depends on not only the strategy you're trading, but the products that you're trading too. So tell me how much risk you're willing to take. I'll tell you how much money you can make or lose. That's really what it comes down to. So good example right there.
And one more thing, I'm working in order to close it's well off the mid price, but we did that bond call spread, the ZB call spread yesterday. That was another fast, what's your assumption trade idea. So I'm working a close on that one. We'll see if we get filled there. And your AVGO trade is kind of coming in as well. So I gave you some flack about that. It's looking nice.
Yes. It was down around 50, 75 cents, maybe $1 on the marks. And now it looks like it's up, 50, 75 cents, maybe $1 on the marks. We'll look to take it off. But AVGO, and it's a defined risk trade, right? It's just a $20 iron condor. The bid ask moves all around. So that is a trade that I would put a stop profit in. I'm not looking for a stop loss, but I would put in a trade to look to close that and, hope that the market hits me on it.
Yeah.
All right, awesome. Even the S&P's up 10. We're going to take a quick 90-second break. We're going to come back. I think we got, we do. My friend Dylan's here. Hear me out with Mr. Dylan Radigan. Let's get a little salty. We'll be back in 90 seconds.
Yeah, should be a fun one.
Yep.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
My dad, who was trading options in retirement, introduced me to options trading. He said, you have to check out this tastylive site. The way they taught options was very accessible and easy to pick up. I think a lot of people think that options trading is gambling, but it's not. It is simply probability and taking an educated guess. It's more like insurance. People should watch tastylive because you can pick up a lot of information in a short amount of time, and it's actually practical. You can use it to make money, most important part.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Nikki, we are back and classed up to join a little bit. We've got Dylan Radigan and Hear Me Out. How are you, kind sir?
Very good, very good. Nice to be seeing the both of you. I'm not in the back of a taxi in Istanbul today, so slightly
the
less.
The next time you are, please take down your background. We want to see where you are, so we can have that. I think it's as Beth has said in the past, lean into where you are. You're our traveling warrior, so let's see where you go.
Although right now I'm in the dining room in my apartment, so you could also see that if you want, but it's not.
No. We got our own dining rooms. We ain't interested in that. We ain't interested.
No, you only want to see the good stuff.
We want to see pyramids in the background. You know,
I can deliver that. I can do that. Listen, I got a Russian sweat lodge in the pipeline up in the fine town of Palanga.
I would pay extra if you could be like getting whipped with some olive leaves or something.
Yeah, I know they do. They use large, robust plant matter applied with prejudice and force against the skin as a part of the ritual. So you gotta.
We had a great one here in Chicago that was like 125 years old that closed about 25 years ago. that I used to go to all the time with my other friends, like those people that I would go with, like the Toms of the world. But he would never go. But his people.
His people would come with you.
His people would come with that. It was a great time. I loved it. I loved it.
Well, again, I've got a place for you if you're ever looking to take your lady friend.
My lady friend days are over, Dylan. When you give up 70%, your lady friend days quickly wane from that. Now you just stay in one place. But that enough about me, Dylan. Enough about me. Let's get on.
You could use some inspiration though for your sauna from Dylan's.
Maybe I'll take some notes because if you're doing an install, are you sort of doing some water features at the home? Are you, Tony?
Yeah,
I have a sauna. I have an outdoor Swedish, like 6-8 person.
Swedish is good. I prefer the Lithuanian or the Russian, but Swedish is okay. I'll take some notes for you.
Yeah, these are the things he needs, though, Dylan. This is entry level for him.
So that's like the Toyota Corolla of saunas.
Exactly. So he for his next one, if this fad continues, he'll be up. He needs the Porsche, the Porsche style.
You need to get him into like the Palanga Baltic Sea sort of exotic with the Russian Lodge Master, all wood. Anyway,
I can't wait.
Being the only person on this show who has a sauna, I'm getting a little bit of shade here.
Well, I just can't wait for him to be at the dinner parties talking about his Palanga-inspired sauna setup that he now has. So I would really
sitting at the head of the table at Thanksgiving, holding court.
Yes,
talking about how he's really going with a Palanga theme this winter.
Yeah, he didn't want to go Swedish. Swedish is too mainstream, so he went Palanga, and via your inspiration. So I'm excited for that one.
I support it. I'm happy to lend some notes.
Well, pictures didn't happen, Dylan. So I'd love to see those pictures when you get a chance. Awesome. Well, let's get to our first question. Hear me out, Dylan Radigan. Where are we going with the first question? I think AI inspired. Am I right?
Yeah, we got a little bit of everything today. I'm interested to hear your take on some of these, Dylan. But the first one is obviously centered around OpenAI. So OpenAI has reportedly committed to deploying at least 10 gigawatts of compute infrastructure. This is through NVIDIA, and they've got another $100 billion investment from NVIDIA. At the same time, you've got all these estimates that say, somewhere around $1 trillion by 2030 is what OpenAI has committed in just infrastructure promises. How do you assess the risk of this massive build out? And is there a prudent long-term strategic bet, or is this bordering on speculative overextension? Are the numbers getting crazy to you, Dylan?
I mean, all those numbers are mighty large. And so it's sort of easy to, at the very least, as a paternal, your paternal instincts kick in and you want to make sure we're not just spending money for nothing over here, But I think how do I answer this question? One, it's impossible to know. No one knows the answer to that question. Yes, the numbers are enormous. However, if you think about basically the underlying principle here, which is that the entire internet is being replaced. Like the entire back end of every screen in the world. I mean, Bezos, I think, said it best in the past year, where AI is not a tool, it's not an app, it's not a location on the internet. It is a new layer that pervades all communications interfaces and all communications interfaces and all screens the same way that electricity does. So the metaphor for AI is not, this is a new app or this is a new use case for something. It's that this is a new layer across every screen in the world, no different than the fact that electricity is a layer across everything in the world. And because of the fact that it is this layer, it's certainly, I wouldn't be too quick to suggest that those numbers are automatically out of hand.
Does it spook you that it's coming from OpenAI, which, isn't even a public company yet, and not from something like an Apple or a Google or, Amazon?
I know in the sense that does OpenAI have credibility, or why are they doing, meaning are the numbers real, you're saying?
Yeah, like do they have that credibility? Are the numbers real? And are they going to be the one that's putting the $1 trillion out there, or is it going to be somebody else and some other group of players?
Is it going to be Big Daddy instead of AI?
Like when is Big Daddy going to say, "Oh, we're doing $1 trillion as well," and now you got $5 trillion on the table 5 years out in time?
I mean, that's a great question, but at this point, I would not discount OpenAI. Just because they have what amounts to first mover advantage. They have the most widely adopted consumer product. Personally, I do think that Google's Gemini is probably better positioned in terms of monetizing things and whatever, but Gemini's nowhere on the consumer side. You would think that Grok and the Musk routine would have some action because it's embedded in Twitter and all those other things. But again, relative to GPT, it's nothing. And so I have no reason to discount OpenAI any more than you would discount Google and coming in to replace Netscape and InfoSeek and all the original search companies. I mean, OpenAI is the industry leader right now, and it has the first mover advantage. And I think you'd be a fool to discount them.
Do you think?
I agree. You might be a fool to discount, but it does seem like it's priced to fail, right? I mean, it almost has to be a home run for this to come to fruition.
Yeah, for sure, that's true.
Yeah.
I mean, you think OpenAI, by the time this all gets settled, let's say the 5-year time frame, you think OpenAI is one of, if not the, biggest company in the world? Like, is it that big? Is it gonna over? Like,
it has the potential to be that. I don't know whether it will be or not, but I think it's sort of like if you were to pick a list of 10 companies that will be the largest company on earth 5 years from now, OpenAI would be one of those 10 companies, along with sort of the usual suspects: Meta, Amazon, Apple, Microsoft, Tesla. I mean, but OpenAI is right there. And it's sort of and they just have every incentive to both overinflate the more big numbers. They want to spook everybody. I mean, they just have so many incentives to inflate numbers and also to spend wildly because they have the financing to do it.
I like it.
Makes sense. Makes sense. Next question, please.
Yeah, let's do the next one here. It's funny that the YouTube chat is asking how many supernovas we're going to get. And I put one in this question as well. So I'm interested to see your take on this. So we keep hearing that markets are frothy. You've got all these meme stocks going nuts, Beyond Meat, stuff like that. You've got the nuclear and the rare earths and the quantum stocks. I don't know if you saw this, but Polymarket is launching 15-minute up or down crypto markets. So you can just bet on if Bitcoin's going to be up in the next 15 minutes or down in the next 15 minutes. You've got DraftKings, getting into prediction markets. From your perspective, what specific indicators would you use today to determine whether the current rally is simply just, strong growth and a booming economy, or has it crossed into froth? And does right now, feel like past market tops that you've been a part of? And do you still feel like the supernova is going to continue through the end of this year?
I mean, for sure it's frothy. I mean, for sure it's not just in my opinion, it's not just some sort of rational discounted cash flow of future earnings potential at this point. Like, it's into speculative madness, obviously, maybe not without some basis, going back to the AI conversation and all this and that, but for sure we're into froth. But just because you're in froth, I mean, this is Alan Greenspan's favorite and most famous quote in terms of staying irrational longer than people can stay liquid and all this. So I have no reason to think it's going to stop. I mean, the only reason that you would think that anything's going to stop is because obviously there's a risk of a catastrophic sell-off, and the risk of a catastrophic sell-off is always higher when you're at price extremes to the upside, as we recently saw with gold in just the past couple of days. And for sure, there'll be a day sometime in the next few months, or certainly in the next 6 to 9 months, where the NASDAQ and the S&P are going to get face pounded, and it's going to be an abomination. But does that mean you're going to sit around for the next 5 or 6 months waiting for that day? I don't think so. I mean,
do we do it at 67.50 where we are right now, or do we do it 77.50 where
I think it's more like I think 77 is more likely than 67.
Right.
I don't see any sort of obvious evidence of cracks in the armor.
So are you calling irrational exuberance, or are you saying that's what the
I'm using the hear me out phrasing, and I'm going to call it frothy. But again, a little froth is kind of nice. If you enjoy a good hot chocolate, you want to have a little froth there. It's okay.
I just think that, I'm going to point to volatility again. Volatility can't get out of its own way. And if volatility can't get out of its own way, you can think we're frothy or not. It seems like, the market itself has had smooth sailing. We've had 1% moves lower that are bid up. You're not even getting 3 and 5 and 7% moves. Forget about 10%. You're getting 1 and 2% moves that get bought. Now, under the surface, you have some stocks. We mentioned BE, OKLO, that go up 200% and go down 30-40%. So you do have those speculative stocks that I think are frothy. I think that's where there's some froth, but the market itself seems to just be backfilling pretty nicely. I
agree.
Dylan, do you think it's ever going to be a gradual sell-off, or is it just all at once? Like, we talk about how the market just seems to just grind up every single day, and we haven't had any really sustained sideways / down market. You think those are just no longer applicable?
Certainly not at this moment. I think I would just think about how long does it take to build a new house?
Yeah.
And how long does it take to burn down a house? The dynamic of this market is it grinds higher, and then whether it's an index or an individual security, occasionally something gets blowtorched. But I think the blowtorch is much more likely than the downward grind.
Yeah, I think they go up the same way I think they go down the same way they go up. I agree with you, Dylan. I just don't know if they go the magnitude of the move to the downside, the magnitude of the move to the upside.
Mm-hmm.
I don't know. We'll see. I think the last question, right, son?
Yeah, let's get to the last one here. So this is kind of wrapped around the recent China tariff kerfuffle that we have going on. So with the U.S. announcing plans to impose tariffs of up to 155% on Chinese goods beginning in November, despite a stated preference for amicable relations, how do you interpret the signal this sends to the market and trading partners? And is this another taco? And if so, when? If it's not, does it matter to markets? Do tariffs matter at this point? And when and if are we getting a taco?
One, for sure, tariffs matter. For sure, he's not going to do this. And for sure, he'll wait to not do this to the last possible moment because he loves a good cliffhanger and he's a hell of a TV producer. So he will back off of this. He won't back off of this until 23 seconds before the car goes over the cliff, or even 1 second before the car goes over the cliff. And yeah, they do matter. So that you saw what happened when this first popped off in the market for that one day, and you also saw how quickly rhetorically he backed his way out of it.
Yeah, there's so many variables with this tariffs. I know it can protect domestic industries and stuff like that, but it really comes down to, I think, like the numbers he throws out there sometimes, and by he, we're talking about Trump and the administration, 150%. You might as well be saying 1,000%, right? You're
a million, billion, jillion, million, billion.
You're pricing yourself out of the market, right? The tariffs all depend on how much economic impact they're going to have on, but that comes down to what, the scale of the tariffs. When you say 150%, it's almost like saying, it's almost like when I would threaten Nick when he was a kid and say, that's it. I'm going to take your bicycle away. And it was his only form of transportation, which meant I had to drive him everywhere. like it didn't do me any good.
He's like, good luck with that, pal. Good luck with that.
It didn't do me any good to take his bicycle away. It would be like, all right, you got to come home at 6 o'clock instead of 8 o'clock. All right, then he gets to and from by himself, and it doesn't inconvenience me. But to say I take your bicycle away and now I have to drive him everywhere, it's almost like biting your nose off to spite your face. It seems so unreasonable.
It's a theatrical negotiating position with China that may well be working. It's sort of like, I think that, his hyperbolic threats are negotiating techniques. And because he's the president of the United States and because that's the most powerful country in the world, those threats have to be taken seriously, no matter how hyperbolic they are.
Sure. Yeah. And I think that's what it comes from. You're on top of the hill kind of thing, looking down. Yeah. Well, so far it hasn't affected any of the markets, right? I mean, commodity prices obviously higher. By markets, I don't mean like food prices and stuff like that. I mean, the financial markets have been pretty steady with all of this, kind of discounting any of these hyperbolic numbers that you used. All right, Dylan, good job out of you. I'm gonna let you go on your festivities. Are they called festivities? Is this a pleasurable trip or is this a work trip?
This is what is this? This is an
experience,
an homage to a old friend who I had promised I would take this journey with him, and he was not going to be able to make it. So I'm doing it for both of us.
I love it. I hope someday you consider me an old friend and you can take me someday. So I appreciate it. All right, my friend.
Don't make that wish, because he made that wish and he was dead 2 months later. So you don't.
Okay, take it back. Take it back. We're going to take a quick 90-second break and come back. We got more Tasty Live with the market measure next. Thank you, Dylan, for your time.
Thanks, Dylan.
Yep.
tastytrade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
We built tastytrade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. tastytrade.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily, covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
We are back, son, and you know what that means. Time for a little bit more Tasty Live. Well, with a market measure sponsored by the SIBO and 0 Day, which we didn't do today, but we have done during the week. We kind of missed, I think, our video here with volatility contracting unchanged now. It was higher a little bit a moment ago. I just forgot, so sorry.
Yeah, that's all right. It's all right. I blame you. It's okay. We've had a good streak with those, though. They've been good.
I think we're whatever. I mean, if we put 4 or 5 of them on, I think we're 4-5-0. So it's been working out. Good. Most of them that we put on at some point during the day would have ended up being a significant loser. So it all comes down to managing them. Now, some people keep them on a lot longer than we do. You know, we try to put them on for the show, take them off for the show, just show how 0 days can be a dynamic way for short-term gains. And of course, I guess you can have short-term losses too in them. But we try to get from a positive side. Other people roll up the untested side and stay in them. Some people start out and set it and forget it, and it works out for them. You got to figure out your own style here, which is the best part of the 0 days. But it does go from 0 to 100 in the strategy, basically within 15 minutes to an hour.
Yeah. No, they've been good. And good on you for your AVGO, Iron Condor. That one triggered to close. So
very nice. Thank you very much. Took a buck or so on that when Dylan was on the show just a moment ago. I think you did something in IONQ also.
I got into some short delta there into this move. It's back up to the 60 handle. So I did a put diagonal. I'm long in December, the at the money 60 put, and then I sold in November the 45 against it. I did it for about $8 and change here, $8.29. Markets are not great, but I wanted to get some short delta on here. It's very hard to get short delta here via and in any stock like this, any of these like high flying, really high volatility stocks, selling call spreads is very, very, it's very cheap. You're getting paid very little with lots of risk on the upside. And, buying puts or just, naked buying puts is very hard as well because volatility tends to contract on the downside. So I try to do the best of both worlds with a little bit of a short play with a put diagonal spread where you're buying cheaper volatility because you're going further out in time, and then you're selling something against it that's going to decay and has some short volatility to it. So you need a directional move, though, in a stock like this.
Yeah, yes, you do. And you can see all these trades on the follow page. All you have to do is go to the follow page, go to the bats. You'll see both of ours. I'm going to try to get a little bit, I did get some feedback from people that, both our trades, like here's my AVGO trade. I haven't had a chance to put any comments in, but I will in just a moment. They want like a distinction between the two of us. So maybe we can get like a asterisk next to my trade or something like that, because I'll trade a lot less than you do. Yeah. And then all the rest of it will be yours so that, people can distinguish between the two. But we'll get that going. We're just working out the kinks. So bear with us on that.
Yes, very good.
Beautiful. All right, you ready for this market measure? Let's do
it.
I'm ready.
I'm also going to route a close for this Baba strangle. I think this was Julia's. Oh, wow. Got filled way below the mid price. This was Julia's trade idea from last week. So this came in about 20% in, a week. Took $100 out of it.
Yeah, you're looking at, you paid $425, I believe, for
the close.
Yeah, mid price is $428 on that. So
and I sold it at $525 last week.
Good. Yeah, so, good. In a week you gotta run like a thief in the night, son. That's
I think you got to do that in this market. Because I mean, you're going to have you've had a choppy market. So if things have been if things work way ahead of the curve, you take the money and go.
Yeah, you talked about it, how it's going to be a trader's market, right? And that's what it's really become. I mean, you've had if you stayed in short delta in oil, you got paid, and if you stayed too long now, you're giving it back. You know what I mean? If you got long delta a few days ago and you stayed in too long, you're giving it back. It really is a trader's market right now, which I think suits our style of trading, which is nice.
Yeah, it's been awesome. It's been a great market.
Yep.
All right. 0-day put spreads, profit targets for narrow wings, sponsored by the CBOE. You think we've done some put spread 0-day stuff. These have worked quite swimmingly over the period of time as the market has basically doubled in the data set. So it's been a good trade.
Yep, it has been.
So getting on to the first slide here. So at Tasty, we often like to avoid directional bias and have focused our 0-day research on delta neutral trades. The steady upward movement in SPX, however, is leading us to look more closely at bullish trades with these extremely liquid markets. Today, we're going to analyze the data to evaluate how various combinations of short strikes and profit targets have performed when selling narrow 0-day put spreads. Again, I have to preface this by saying that, the 0-day data only goes back a handful of years. And so when you look at the market, these numbers are great. The win rates are great. The profits are great. The drawdowns are minimal. I mean, you're going to see some drawdowns, of course, and that's just a reflection of the market that we've had. So, you got to keep the context in as a distinction here.
Yeah, no, you most certainly have to. I mean, 0-day trades, I think you have to have a profit target in them unless you're really going to sit at the computer, for the day, like it's become your day job.
Yeah, for sure. So jumping over to the next slide here. So the study that we're using, we're of course using 2.5 years of data. This is as far as SPX 0-day data goes back. We had started with obviously the weeklies, then they brought in the Monday, Wednesday options. So those were, 1 and 2 day expirations. And then they added the Tuesday and Thursday to make them every single day. And I'm sure at some point in the future, they're going to be hourly and maybe even shorter than that. Who knows? The sky is the limit with the liquidity of these kind of binary trades. But anyway, we're looking at selling one $10 wide put spread every day at 9 a.m. And we're doing that roughly 5 minutes plus or minus from that point. So about 30 minutes after the open. The short strikes in that range that we are looking at are from 50 delta, which is right at the money, down to the 20 delta. So we're using those for the short strikes, going $10 wide as we're looking at all this research. We're looking at the range of profit targets from 10 to 50%, so a pretty wide range here. And then we're examining the total number of winning trades, the total profits, and then the losses and the maximum drawdowns. The maximum drawdown is the max amount of pain that you took from top to bottom. So this is not necessarily, we get a lot of questions on this, of the max drawdown is a bigger number than the spread width. How can that be? And that's because of the period. It's basically from high to low of your profits to your loss. Your total loss through this whole period of time. So it gives you a deviation of your profit and losses here to the downside.
Yeah, and I know new traders or traders have been trading for the last 5 or 10 years look at this and say, well, this is it's just another opportunity for, retail investors. You got to remember something. We had, and I've mentioned this before, we had quarterly earnings. So you only had 0 days 4 times a year.
Yeah.
And they have them every day.
Did you ever imagine that was going to be the case?
I didn't imagine. Well, remember, we came up with the idea of quickies. I mean, that's what 0 days are. We presented it to the SIBO a decade or more before they actually did it. Now, it wasn't my idea. Tom, TP, and a few other people really came up with it. So I embraced it. I thought we would have it. As a market maker, I loved the idea of having quickies or 0 days, as they're now called, because from a selfish point of view, that's when I made, my nut for the month. If I was trading on expiration, and Marty, who we might have coming on next, he traded quickies or the roll basically at the CME for futures, and that's where he made his nut. Most of his profits were 4 times a year, and the rest of the year Marty just flaked off. So we can hear about that when he comes on. He comes on the show. I didn't flake off. I worked all those other days. But I'm a little bit brighter than Marty, which we'll see in just a moment if Marty comes on the show, my old friend. But please continue.
Good stuff. So looking at the study here, we'll get to the next slide. So we're looking at the 50 delta short strike. Again, these are $10 wide. And the max drawdowns, of course, you're going to see. This is the the max pain through the whole period. So, if you had a week or 2 weeks or whatever the worst drawdown was, where you had multiple losers, this would be your max drawdown on a one contract basis. So you could see closing at a percentage of the profit is, at a lower percent is obviously going to increase your win rate. You could see across the board, all of these have an average positive P&L across the board with all these trades, and that's indicative of the market. The market has gone straight up, and of course, the better, the best trade, so to speak, has been closing for a higher profit, and that's just because the market has gone up so significantly in the last 2.5 years. You could see even your max drawdown becomes lesser because you're taking more profits and the win rate has just been so exceptionally high. I mean, when you're putting these trades on, the pop on entry is probably closer to a 50 or 60%. You're getting, close to a 80, 90% win rate here. And so you're well above what the pop would suggest for this trade. And that's why all of these are going to just look so like they're free money, basically.
Yes. Well said. Nothing I can add to that.
So getting to the next one here. So looking at the 40 delta short strike, again, it's the same story here. You're looking at a very high win rate. Your win rate gets bigger or gets higher the lower your profit target is, but that's not necessarily the best in this data set, in this back test, because of just the move in the market. That's why the max drawdown is so much lesser when you're looking at a higher profit potential. It's counterintuitive to what we talk about in most of our past research because of the limited data set that we have. The market has gone up from like 3,500 to 6,500. We're at 6,700 right now in the last 2.5 years. So you've had, a massive outlier upside move. And so anytime you're taking more profits, it's going to look better. And that's why all of these look so, amazing, taking 50% of the max profit. Why would I do 10% and have bigger drawdowns? The bigger drawdowns are because you're taking lower profits on a back test that is just straight up.
Yep. Don't have too much to add here either. I mean, you can look at maybe the max drawdowns here, but with these types of trades, I mean, they're all going to be the same.
It's all been good. If you sold put spreads into 100% market rally, you did good.
If you get the direction right, you're gonna do good. Even anybody can do good. Even Tom could do good if you got the direction correct. Right.
Yes. So next slide here, we'll look at the 30 delta short strike. So of course, your win rate is increasing through all of these because you're further out of the money. So you're having even lesser of these small set of occurrences that lost over the 2.5 years. So as you get further out of the money, your win rate is increasing exponentially. You're getting into like the 90% range here. Of course, your profit, your average P&L is decreasing. Again, that's intuitive. You're going further out of the money. But you can see it across the board of all of these trades, your drawdowns with a higher profit potential are actually going down. And again, that's just, a reflection of this market that we have been in.
That's correct. That's correct.
So the last one here, we're looking, we do have one more. So the 20 delta short strike, again, all of these have been profitable. Now you're getting into like nearly 100% win rates on these, which is incredible. You're managing at whatever profit target you want, and you're just selling the 20 delta put, going $10 wide. You're making money hand over fist. Here, when you're closing at 10%, this is where, we started with the at the money spreads that are close to, and even like when you get to a 40 or 30 delta, you're basically trading at half the width.
Yes.
So your risk reward is like 1-to-1 or maybe 1-to-2. Now you're getting into a situation where your risk reward is 1-to-4 or 1-to-5, where you have a lot more risk on the table, and so your tail risk actually gets a lot bigger from a value standpoint of each of the trades. And so by managing these trades, the further out of the money trades, more conservatively, 10 or 20%, or really just the 10%, you're taking a lot of the big losses off the table. And so in the previous set of numbers, you didn't have a lot of the huge losses. Your wins and losses were a similar amount. Here, your wins are very, very small, and your losses get really, really big just because you're selling less premium on this trade on entry. And so managing the further out of the money stuff at a more conservative profit potential actually helped you avoid the bigger drawdowns.
Yeah, counterintuitive, because you always like, go big or go home kind of thing. But this just comes down to you managing your winners and how powerful that is. So.
Yes. So last slide here, we'll get to the takeaways. Oh, you just popped up your platform, Pops.
I did?
Yes. I see it.
I see that, but let me see. Sorry about that.
There we go.
Yep.
New.
I just wanted to see if you could do it from memory, the takeaways.
The typical reason to lock in profits early is to help maintain a high proportion of winning trades. But the SPX, of course, it went from 3,800 to 6,600, or now it's 6,700-ish. The vast majority of short puts were winners regardless of the management, especially with those out of the money trades. So, even with the far out of the money trades, you didn't have to do a whole lot, but just do it every single day. It was a money printer for the last 2.5 years. So as a result, being more patient and waiting for larger profits has generally been more profitable again over this short data set that we have. In terms of downside risk, as measured by the maximum drawdown, there was not a consistent pattern. Lower profit targets are better at avoiding the string of losing trades, but the bigger winners means it takes fewer of them to make up for that loss. And again, this is all part of what this market move has been, which is hard. You got to take that with a grain of salt here. While the larger credits from two-sided trades make taking smaller percentages more appealing, with directional trades, it may be best to be a bit more patient. So if you're trading a direction, you can up that profit target a little bit from the data that we have.
Good job out of you. Good job out of the SIBO for supporting our market measures there as they do the rest of the week. Even the S&Ps up 18. They were just up around 4 or 5 a moment ago. Looked like they were going to sell off, but they haven't. Volatility hanging in there. It's now down 2. It was up 10 a moment ago. Very small move in the overall market. Very small move in volatility. They do have all 4 indices higher now, with the Russell the strongest of the group. Bitcoin up near its highs of the day. It was about $1,000 higher than this at 10.5 about a half an hour or so ago, but it's up 1,600 to 109.6. Ethereum making a move, but much smaller, about a half a percentage point, about half as much as Bitcoin is right now. Your oil back at 61.5 off of its highs of 62. Gold been hanging steady, hasn't really had a downtick, up 2.33%, up $94. Silver doing exactly the same, up about 2.5%. Up 1.19. For the rest of the market, as we look here, you've got ISRG up 11, VRT, which you were just looking at a moment ago, up 9 or so, Meta up 6.
No, we got VST.
Oh, VST. I'm sorry.
Yeah.
I'm sorry. You got actually short in VST, right?
No, I have a short put. I'm short the 165.
I closed my AVGO. You close your IONQ, I believe.
I opened that.
You opened that one.
That's
That's the crab type trade. Yep. Got it. Let's take a quick 90-second break and come back. We got more Tasty Live. I believe we're going to have Frank, the old indoor kid. He hasn't been on the show in quite some time, followed by Marty from the trade desk. We'll take a quick 90-second break and come back with those two gentlemen.
Beautiful.
New from tastytrade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new tastytrade account. The Money Match event starts now, exclusive to new tastytrade customers.
Your crypto needs a wallet. And crypto is better when it's tasty.
This one's pretty clean.
You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options.
Susie Reeves, say hello. Cool. Check 1, 2, 3, 4.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols.
But are we doing me
See
first?
how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Got the need for speed? No problem! At tastytrade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. tastytrade, make your move.
son, and you know what that means? We've got we got a blast from the past here. Bring him in from the. Diddy. You can't be Frank the Indoor Kid anymore. You're way too old. I'm just gonna have to call you Francis. Francis, how are you, my friend?
I'm good. Maybe Frank the Indoor Man now. You know, I'm man status.
Yeah. You made it. You graduated.
Oh, look, I got the applause. I'm super happy to be here. I haven't done this in a long time, so I'm a little bit nervous. Hopefully, I don't mess it up. But I've got Marty. I can stare at Marty the whole time. I know he's coming on in a second. He's giving me a lot of strength.
Always very pleasing for the eyes, right?
But how are you guys doing?
Tell Marty he's supposed to be quiet when he's not on air.
Yeah, Marty, maybe more of visual aids than the audio ones. Thank you, sir. Now he's doing.
We'll get to you in a minute, Marty. Don't you worry about a thing. I've got plenty for you. But right now, Francis.
Yes, sir.
Tell me, what are you doing these days for the market? What are you doing for Tasty? Give a background on what you do.
Sure. I have been placed on the FX project the last couple of years here, which has been super exciting and has been decently successful, if I may say so myself. We rebranded from IGUS to TastyFX about a year ago. We're one of, I think it's 5 or 6 Forex providers here in the US. That's spot FX trading. And along with that rebrand, we've been able to integrate our product into the tastytrade platform in the last few months, which has been great to see a lot of active clients getting in there from your guys' side of things. Obviously a different type of product, but we've seen, Liz and Jenny, Nick, you and Mike Butler, and obviously Tony, you and Tom over the last handful of weeks as the product's been integrated. Loving the leverage, which of course can, is something a risk to be aware of. With the size, though, has been really exciting. I think a lot of you guys have enjoyed putting on a $25 margin trade, a $50 margin trade, all the way up to as much as you want in the futures kind of thing. But it's been fun, man. So I've been overseeing.
You're calling me
a
a
lot
Johnny.
of that.
That's what you're doing.
I will say, some small sizes. Some dare I say, some pea shooter type status with some of the.
Be so big all the time, okay, Frankie.
I know where it counts, but anyways, so that's what I've been doing, and I am Glenn, who's actually in charge of the operations. He's out, and so they threw me on it. I'm like the intern who just gets in here once a year.
Oh, don't sell yourself short, Frankie. We know you're the man behind the scenes. We know you're in control. We got you.
Well, I appreciate that.
Where's the activity right now, Frank? Like, where's the because it rotates, right?
Of course. So what we've seen recently is a good amount of yen action, I would say. The euro dollar market tends to be, I mean, if you're looking at any metrics over the course of the last, I would venture to say probably even decades, not even just years, that euro dollar market is going to be the biggest. It's one of the biggest globally outside of just retail trading. And thus for the retail trader, it can be super liquid. It's a 2% margin rate right now. So you're getting 50-to-1 leverage on that. Obviously there's risk to that. Leverage, but that tends to be the most efficient. You know this, Bat. I mean, even if something's going on in crypto or AI stocks or whatever, SPY is going to be one of the biggest markets for retail traders, for everybody, because of that liquidity, because of that efficiency. But unfortunately, that euro dollar market, I mean, look at an hourly chart, a daily chart, whatever, it is stuck at 116 to 118, not a lot going on, but people have been rotating back into this dollar yen trade. The idea of that carry trade being around for longer, we're seeing the last couple of days here a little bit of, I wouldn't say walk back, but they're walking back a little bit of how many rate cuts we're going to get. And so you're seeing some dollar strength. And when a concept like that arises, as it has in cycles for the last 4 or 5 years, with U.S. rates being 4 or 5%, you're going to see that dollar yen market get to the highs of its range as people try to jump on that carry trade. And so you're seeing that dollar yen now significantly above 152. That's highs for the last, we're right there at highs going back to, February of last year. And it'll be interesting to see where it goes from here. Obviously, we've traded that range of 140 to 150 for the last 12 months or so, and we're outside of that right now.
Mm-hmm. So the dollar yen trade has to be the most volatile of them as opposed to the dollar euro. Is that true or no?
So it's interesting, man, because technically
the yen's on its lows. I mean, and I know the euro is lower too, but not at like almost historic lows.
Oh yeah, I mean, if you're talking about lows for the last year plus, obviously for that euro dollar market, it's around parity. We're nowhere near parity. So that dollar yen market being close to its highs for dollar, lows for yen is very, very different. But what's interesting, Bat, is technically, and I'll give maybe a little bit of math here, and everybody's going to fall asleep, but then I'll bring it back in a second. Technically, those major currencies that are paired against the U.S. dollar, they can be as low as 2% margin rates. And so technically, in all environments, if you were to take out, maybe the times where yen is more volatile than a euro, it should be on the same playing field as the euro, as the pound, as the Swiss franc, and those major currencies. But that being said, the yen has carried a 5% margin rate the last several years, really going back to the pandemic. And then after that, when the Japanese kept interest rates at zero and we started to hike, and you saw that yen get obliterated. And so the market is saying this is a more volatile pair right now than the euro dollar market, than the Swiss franc to dollar market. But that doesn't have to be the case. And I would, you guys know this better than anyone, cyclicality, mean reversion, everything else, it will come back to being maybe a boring pair at some point. We just don't know when that is. And it's definitely not today or the last couple of weeks, because like I say, until the start of Oct here, 150 has been the high for that market the last year. And they blew that out the first week of October and haven't really looked back at that 150. And right now we're trading at those highs around 150 and a half.
Well, I'm glad you brought it back because you were boring me with your math. So
I'm sorry. I do that.
You're still 100% correct as far as I'm concerned. Good job out of you, Francis, for boring everybody. But don't worry. My next guest from the trade desk, thank you, Francis. My next guest from the trade desk is Marty, an old friend of mine of about 40 years or so. Let's give him his first DDT.
Second DDT.
Mr. Marty from the trade desk. Come on, please.
Good morning.
There you are.
Morning.
How are you, handsome?
Brothers Bat. Always a pleasure. Always a pleasure. Thank you for compartmentalizing my entire.
Be on TV. Wait a minute. You knew you were going to be on TV today, and that's what you wore?
Of course. It's vintage.
Guitar repair?
It fits with us. I mean, we all got like.
I was going to go a little more contrast. If I knew we were all going with this blue motif, I would have probably worn something,
You don't play the guitar. Who you kidding?
Dude, don't make me bring this guitar in my next episode, okay? I've been playing guitar since I've been 16. But, in between working for 2 weeks every 3 months and then playing golf. So I fit guitar in, in between my golf and 2-week work week. But I want to thank you.
That's how you learn. You learned how to play guitar because you weren't at the floor.
Listen,
you only
ask
came
Frank,
to the floor a couple times.
Right. I send Frank guitar aficionados and all the time.
You were the original 0-day trader at the CME, right?
Yeah.
I mean, because you traded the roll, right? Basically,
yeah,
that was your
expirations there, I started there in 83. And you guys both know how they would roll the front month S&P would become the D right now would become the front month, and after SEP got close to expiration. And then they would switch them where the front month, which would be the September now, would become what the back month guys traded. So you had this big flip.
Less traded.
And what they would do is, obviously clearinghouses, institutions, and hedge funds would roll all their positions from the September now to the December. But there was a gigantic spread pool there as well. The spread pool at the Merc, even now, if you look at like an E-mini spread, they have a humongous spread pool. So you were trading.
But now has kind of killed that margin that you had, because now we trade intra.
If you have
what was a market back in the day when you were trading the spread market, just to show people how much it's evolved?
Depends who was making it, right? In the back month, it would depend. When you were doing it manually and we became, the SEP, and then you were shooting orders into the front to become a DC, these markets could get pretty expansive. It would just depend. It would obviously be on order size. They were wider markets, to say the least.
Couple points? A point?
Maybe not a point all the time, but you could go in for 2 or 3 ticks pretty much.
And now it's a half of
as far when I left, you could still, you're getting out in the mini now too. So when you were getting out making a market with paper markets, you would make it against where the mini was trading, but it was still sketchy. So you'd have a headset on and you would have a guy working a computer, and you would just, if you bought 5 big S&Ps, you would sell 25 minis, and you just put it on your headset. So you do the calculations like that. But yeah, the markets were, they were fortuitous. How's that?
Let's get to your list before I make you want to go back to yesteryear here. Let's get back to your list of most actively traded, and then I've got a phone call for you. I think I have a fan who is.
I'll answer it like I answer all my calls, with care, and patience, and the ability to solve problems.
All right.
At number 20, we have Intel at 52. 19 is USO at a 12. We have Apple coming in at 18 at a 19. IONQ, number 17 at 46. IBIT, 27. It's number 16. 15 is QBTS. It's at a 10. 14, SLV at 37. 13, RGTI, 27. Number 12, everybody's favorite, Palantir at 34. At number 11, you have TSLL at a 4. Number 10, Meta, 26. 9, Amazon at a 40. 8, Oracle at a 46. Number 7, NVIDIA at a 16. AMD at a 43, coming in at number 6. Netflix at a 5, at number 5, coming in at 7. Number 4, you have Beyond at 71. 3, GLD at a 32. And number 2, IBM at a 21. And at number 1, Tesla. And for you, Nick, 5%.
There you go. That's okay. That's okay. My bad.
No worries.
The children.
Good job out of you, Marty. Marty, I got a phone call for you.
Let's hear it.
We should put the clap up for Rob and Maria. Rob and Maria is on the line.
Maria, my faves.
Guests of the show, frequent guests of the show, frequent callers. Thank you so much. What's going on, guys?
Good morning. Thanks for having us on again.
Hey,
I want to say hello to Marty.
How are you?
Marty, and thank you for all your assistance that you give us. You're great.
You guys are a pleasure. Honestly, 97% of our clients are a pleasure. You guys are at the top.
We wanted to call in because recently, as some traders may have known, there was some crazy activity in the SPX 0DTs. We trade about 150 iron condors a day in the SPX 0DTEs, and we had some bad trades at stop losses where you put in a stop loss at 100%, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted, and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. And Maria and I were talking about, we also trade at some of your competitors. And the difference is night and day how tastytrade, the trade desk is really, I think, an underemphasized asset of your company. Nick and Mike, I think, are fantastic they taught us, Mike and his whiteboard and Nick with his anatomy of a trade. But when you really get down into the nitty gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of tastytrade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better and minimize our losses. Maximizing gains is not the game here. The game is to minimize your losses. As long as you're selling premium, you're going to win. It's just a matter of minimizing your losses, and that's really helped a lot.
Well, thank you. This
was not a paid. You're not getting paid for this advertisement.
I like everything he said, except for he's trading with other firms, so that's going to stop soon enough. Okay.
We're allowed to do that.
That was an interesting day. I mean, we'd like to take credit for it. The SIBO kind of picks and chooses who they were going to bust trades with. So, you won the lottery with that one. But yeah, that was intense for probably everyone that was involved. And there's really not a lot that we can ever do with it except for try to, walk you through what the logistics of something like that happening actually are. And they're usually an event like that's a black swan event. I don't really.
Marty, stop being so humble. You gave them an offer they couldn't refuse.
That too. I was going to get back to that too. It's just some of the magic that we're able to work over there.
Now, I don't know if you guys saw the news today, but in New York City, there is a gambling. The Attorney General there filed a bunch of charges, including against Chauncey Billups for some illegal gambling activity. And it just, I used to be a professional gambler and moved over to options because, in the options world, you guys don't break our legs quite as often, and it's a little bit safer. But it was interesting, again, as I saw that today, I was thinking about you guys and how options are so much better than sports gambling. And the other thing I saw was Dylan talking about AI, and Maria has used AI now to trade every day, all day long, and it has been truly amazing how much money she's made because of AI.
Well, Maria, let me just interject. You have to do a podcast, you two. You guys should definitely do a podcast, okay?
We got a time slot for you guys. Anytime you want.
I don't know.
The chat's calling it out.
Rumor has it that you're the one that's kind of putting up the little bit of a wall for this. You'd really be good. I think you guys would be awesome. I think it'd bring it down to couples able to do what they're doing, what you've learned, how you implement it, what the impetus that you use for your trades are. I think it would be a nice thing to do. Put me down as a producer. Put me down as a producer for that, okay? Please.
Rob, Maria, if this ever comes to fruition, I mean, I love you guys, but if you make me trade with my wife, I think we're going to have a problem.
You might be surprised. You'll turn to enjoy it, as a matter of fact, because instead of sitting there yelling at yourself, you have somebody else to yell at.
That would be me.
You're probably right, Maria. You're probably right.
That AI, has been fantastic for her. And trade. And by the way, the best thing I ever did in trading was to get Maria involved in it. And how many times we heard the story of the husband lying to the wife about some losses they had or whatever? And we have gotten so much closer together.
That never happens.
Yeah. And by the way, Maria and I trade completely differently. And in addition, Maria always outperforms me. Insert dirty joke here. I get it. But Maria always outperforms me, and her rate of return is much higher than mine. But a lot of that, I think, has to do with AI, wouldn't you say?
No, that started before, but AI just confirms my thoughts, basically. But from the time I enter my computer in the morning, I'll upload a screenshot of all my positions and tell her to review them. And she'll go line by line as to which ones are risky or which ones I might want to put a hedge on or trim. And, it helps a lot because sometimes she'll bring something to my attention. I'm like, she's got a good point, and I'll go look into it, and she's absolutely correct. So, yeah, she saves my butt. But, at the same time, you have to make sure she's looking at the right information. She sometimes gets the columns wrong. She'll sometimes get a number wrong. So you do definitely have to know what you're doing, but you can definitely use her as an assistant. And she doesn't talk back, because sometimes when she gives me the wrong information, I'll argue with her and say, why am I paying you this? And she'll say, no, you're absolutely correct. I'll go into agent mode for you.
I just send all my trades into Tony. I just send all my trades into bat. It's almost like AI.
That's right.
It's
That's
AI
right.
with a way more sarcasm. Okay.
But AI, she asked me a couple weeks ago, what do you think about Oracle? I said, Oracle has never moved. It's a waste of time. You're not going to get any premium. The juice is not worth the squeeze. And, Maria came back to me 3 weeks later and said, remember when I asked you about Oracle? I said, yeah. She goes, yeah, I did the exact opposite of what you told me to do because AI said it was a good deal. It was up 35% today. So how do you like them apples?
It's not the Oracle of yesteryear that we remember, Rob. Unfortunately, or for the better, it's not the one that we remember.
That's right. But again, the purpose of my call is to say that Tasty needs to emphasize the trade desk more. And I've said it to you before, and I'll say it to you again. The slippage that you have in Tasty Trade is way less than the other firms. And yes, your commissions are the best, but the commissions are pennies. The slippage is dollars. And if you're getting better slippage with Tasty, less slippage, if you're talking about a nickel on a trade, that's $5, whereas the commission is, pennies.
Right.
And you're just way better off. And I just wish that Tasty would push that slippage issue. I think it's much better. And final shout out is to Nick and Mike Butler, as I pestered them for years. What is the one and only trade you would do if you could only do one trade? And they said naked puts into ES, and that has made us an absurdly ridiculous amount of money. And just by doing that one particular trade and putting it on at 45 to 60 days, 12 delta, taking it off at 25% profit, it's a simple trade, and we've been doing it for years religiously every day, and it pays buku bucks. Nick, you will get no commission for that, but thank you very much.
I was going to say I want half. I'm waiting for my check, Rob.
Thank you, guys. I appreciate all your call-ins. I appreciate all your continued Tasty Trade and Tasty Live support. So thank you for that. Hey, listen, I got to end on that. I mean, even the S&Ps were just up 25, they're up 15 right now. I can't get any better than that. We're going to take a quick 90-second break. Marty, thank you for coming on.
Anytime, young man. Anytime.
Peace, my friend.
All right.
Peace.
Forbes called us best online for options trading. With stockbrokers.com, we're #1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. You'd use up much more buying power, and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier, though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Hi, my name is Liz Deerking. The beautiful brunette next to me is... What an intro. Jenny Andrews, and we are about to play a very exciting game. No. Hold on. No, you're wrong. I'm Hold on.
She's wrong, I'm right.
High school party, high school condo.
Yeah, because it wasn't in school.
This
I had friends at my high school who were mutual friends of Liz, and so we were all at the same party.
And then parties for the rest of our lives.
For the rest of our lives. The same thing with college. She went to a different college. I went to a different college. But we both ended up at the CBOE together.
Yep.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. You'd use up much more buying power, and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier, though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple.
tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with tastytrade's low commissions. Try it out and leave us a review.
Everybody, and welcome to the Thursday edition of the Liz and Jenny Show. I'm Jenny Andrews, that beautiful blonde, and red is Liz Deerking. You said you're in red, all ready for your trip to Miami.
Yes. Well, this was what I was going to wear tomorrow. I had a black jacket on over a red tank top that I'm wearing today, but I'm wearing this with a black tank top tomorrow when I meet your son.
You're going to look good. You're going to look good.
Yes.
He's looking forward to it.
So speaking of kids, I was just ferociously typing as we were coming in because JD just said his fraternity guy wants more information on the Tesla earnings. I was like, oh, so I'm just typing stuff about Tesla earnings.
Okay, well, don't hop in yet. I'm organizing our account. I'm in there secretly in our account. No one can see. I'm just trying to organize it to everything that has that's expiring tomorrow because you're going to be gone. I'm going to be gone. I'm leaving right after the show, heading to Florida.
What time's your flight? Like 3, right?
Yeah. But I have to go. I'm going dropping off the dogs and picking up Lily, then heading to the airport.
Yeah. No, I know what you mean. I'm leaving here at 1:00.
Oh, you are?
That's the attempt.
Picking up Annabelle and heading to school, heading to Miami?
Ash Finn, I will not be wearing red at UK this weekend. Just a little FYI. I will be wearing royal blue. I've got all my royal blue ready.
Nice. Yeah, you're going to have to make the quick change. It's only a 2-hour drive. You're going to be in red, hop in the car, 2-hour drive, change into your blue. You'll be at Kentucky.
I got to change before the drive. We'll be throwing the red clothes out of the car as we pull in. But yeah, no, it should be fun. Market's kind of crazy today, Jenny. Do you want to? Did you already secretly do everything you needed to do in our account? Can we jump in?
Yeah, sure. We can jump in. I had everything open, and I was just trying to keep things open that are expiring tomorrow because we're going to have to address those since neither of us are going to be here tomorrow. I know this drives you crazy. I'm not even bringing my computer on my trip.
That does drive me absolutely insane. I can't even fathom it. I went this morning to Jewel and got my hair blown out and I had my computer with me before the market opened.
I thought about it, but I'm not going to be around tomorrow. Like, we're busy all day. We have plans all day. So like, tomorrow's the only day the market's open. Then I have Saturday and Sunday, and I'm coming home Sunday night. So like,
the only reason I even brought it, where were we last weekend for the wedding? And I was only gone for one day, and I bring it on the odd chance that I can't get home.
Oh.
That's why I didn't open it. I didn't look at it. Didn't look at it on the plane, but it's always in my bag just in case something happens and my flight gets canceled.
But I am like a pro on this Tasty Trade app. So I'm not too worried about if I don't have my computer, because I can open, close, do whatever on my app.
It's true. That's true. I got better at it. But I mean, you even saw me on the way home from Germany. The entire flight, I was on my Tasty Trade platform for no real reason, because it wasn't even open.
Funny. So I'm not packing. I don't even know. I might go arm swinging to the airport, because and you're going to hate this too, I'm checking a bag.
Oh my God. No, you're not.
I am.
It's 85 and sunny. You're going to Florida for about 40 hours.
You know what? I've got I have like 5 hours in my schedule at Disney Springs. And so I'm going to get all my Christmas shopping done, load it all into my suitcase. I told my whole family, everyone's checking a bag. I'm going to get all my Christmas shopping done in Disney Springs in 5 hours. And then it's all going to come home with me.
Oh my God. Honestly, I thought I was stressed out enough this morning. If you could check my blood pressure right now, it's so high. I can't believe you're checking at the airport. What if you lose all your luggage?
If I lose all the Christmas gifts on the way home?
No, the way there. You're going to have nothing but that red sweater to wear.
I'm not wearing this. I'm changing right into my Mickey shirt as soon as this show is over.
I don't know. That's so funny. All right, let's take a look at what we want to do.
So we're in the platform. Spoo's up 23. I don't know about you. I did an SPX trade. I put it on.
Mine's about to come off. I'm looking at it right now. It's exactly hitting my 50%. And I'm out.
I'm not in my account, so I don't know if I'm out. But I will tell you, I did. And I'm going to stick to this. And the results were all good. It was kind of like, here's your, like you said, here's your menu. Choose what you're comfortable with. And honestly, I'm more comfortable with a further spread. So I did the 30 delta $10 wide, collected $1.90 on a $10 wide at the 30 delta. Okay. I like that better than the 50 delta. I know the drawdown's less than the 50 delta, but I kind of like that I have room to be wrong. So I went with the 30 delta and looking for 50%. What did you go for?
I beat my own drum. I did multiples, and I would like to say many multiples of the 50 delta.
Of the
50 delta.
And how wide did you make them?
I did many multiples of the $5 wide, as much risk as I would have taken in something else, and I was out within 40 minutes.
Okay, I'll check mine to see if I'm out yet. I'm gonna go use my mobile app. Well,
I mean, if I'm out, you're out. I was the 50 delta. You're the 30 delta.
Yeah, but I don't know. Where you were looking for 50%, I was looking for 50%.
Oh yeah.
Yeah. Mine's gone. Mine's off. So that's good. And I feel like spoos were up 10.
Yeah, that's what I'm saying. If it moves like that, you're gonna get out, because you were never tested at all.
No.
And that's on the heels of, and I'm going to talk to our people at the Tasty Studios. We did a great study yesterday from the Sable Floor, from this realm. We were live. That was part 2 of part 1, and they did put it on YouTube, but I don't think it's labeled right. So I'm going to see if I can go in there and get that changed, because it doesn't even look like it's an SPX 0 DTE study. It just says narrow wings, and nobody knows what that means.
Yeah, we got to change that title. I don't know.
No one knows what that means.
Yeah, it's part 2 of a series. So last week, it's our put spread series, right? It should be like 0 DTE put spread series.
Take 2 or do or whatever, however you want to say number 2.
Part 2 of the series. There were going to be more shows, more put spread segments in this series, and I don't think there's a number. It's not like 2 of 4, because I don't think Jacob knows how many pieces he's going to do on put spreads. But yeah, we need to update that title so it's in the series somehow linked to last week, so people know.
Yeah.
So it's out on. Did you share it? Did you share it on Twitter?
No, because it's confusing. Nobody will watch it if it just says narrow wings. And it's not housed under any 0 DTE SPX. So I didn't share it. I was just going to see if I could get it changed and then share it, because then I'll package them together.
maybe you could take care of this in your free time.
I will. I'll see what I can do.
Okay, so we're in the platform. Big movers today. Oil, like crazy that oil is over 60 now.
Yep. There we go. So we added an additional put, right? What do we have?
So, okay, this is kind
of... we butterflied off our downside ratio spread. That was protection. That's fine. And then we have the one put, the 61 put, and it's right back to 61.
And honestly, and I know this is only, it's not really winter, it's up $18, but the heat we took on this and oil going down to 56 or something, me personally, I would take it off. When I take so much heat on a position, look, 55. Oil was down and so much lower than we thought. We thought when it hit 60, we're like, this is great, let's sell puts. We took so much heat on this. In my mind, I would take this off.
And it's so funny because this is totally moving on news. They put the sanctions on Russia. They put more oil sanctions on Russia.
So I don't know what you think. I mean, but I'm fine with taking $20 out of this put that was a much bigger loser and we took a lot of heat on.
I don't care. Just close it. I like to close things.
And that gave us $1,000 back.
I mean, mini's bigger than you think it is. Well, when it becomes the at the monies, it becomes large.
Right. It wasn't. I don't think it was as much when we put it on, but when it becomes the at the monies, yeah.
Can you do me a favor? And go, because our gold GTC hit too. I'm pushing them both on both sides. I'm just in there. So,
okay, let's see. Gold. We had an iron condor.
Yeah, and so that iron condor hit yesterday, which is great. We were in and out in a couple of days. I actually think we took less of a profit because I put it in there yesterday and we never got filled, but that stayed there. And then we also have our
$50 or something.
And we have our gold triple Qs.
So today's a busy show. We're going over how to manage a losing zebra. We had that request. We are doing that today. I promise. I've got 2 examples. But I did want to address anything that's expiring tomorrow. And so ETHA, we have a 1-day option here, and IBIT, we have all these 1-day options, and we're not going to be here tomorrow. So I don't want to come into having a stock position when we're not here.
So the IBIT is basically a zebra, right? So it's not a zebra, I'm sorry, a jade lizard. We have the 72, 73 call spread, we can close that. And we have the 64, and we bought the 56 just to release capital. So we have to move that 64 put out and buy something else. That's what we got to do.
Okay, so I'm going to close the call spread. And I guess I don't even have to. That could roll off.
I mean, you can do whatever you want, just in case.
Yeah, like, is it going to fill?
You already have a closing order. Okay.
I have a closing order in for the whole thing. So close this call spread. And it could just expire and roll off, so I don't have to worry about that. I can't imagine. I mean, it would be a crazy miracle if I.
And you can leave that because you don't want to pay. Yeah, you don't want to pay too much for it. But basically, you do have to roll the 64.56. And by roll, we're going to reestablish, but you can close that if you want to.
And even the 56, I don't have to do anything with that because that's going to roll off too.
Yeah,
it's really just.
It's gonna look like it's holding a lot of capital for however long it is on there.
No, it's a long put.
No. If we roll that out into the other cycle, it's going to hold more capital.
We're going to have to buy something. That 56 put is a moot point. It's worthless. Okay. We have to roll our short put out and we'll have to buy something. So if I go to Nove.
I thought we've been keeping these pretty near term. You're going to go to either the 8-day or the 15-day.
All right. So we do have a zebra in the 8-day, which is fine. If I roll to the 64 to the 64, I'm taking in a credit. And I have to buy something just to release buying power because I don't want to tie up $1,800.
You went 64.56. That's what we had.
Yeah.
There you go. Get an additional 50 cents. It's not bad.
No, that's not bad. I never mind if we can take in additional credit. And it's like we're taking in credit and we bought something.
Yeah.
Okay. And we have this zebra. So that's IBIT. Now, Ethereum. ETHA, we have this short put spread. That's fine. We don't have to worry about that. We have a long call. I think this was a zebra gone wrong that we turned into one share, like one long call.
It was.
And I thought we wanted this through October 31st for October, I guess. That hasn't really happened yet, but hopefully it will.
I think they're catching a bid today, right? Bitcoins are back up to 109.
Yeah, a little bit. So if we want to keep that long call going through October 31st, we had the 29. That's just too much extrinsic value. We're getting 68 cents extrinsic. No, we're not. We're not getting that much extrinsic value. What would we want to buy? 100 shares of stock for 8 more days.
So, it's basically the at the monies.
Yeah.
It's got 1 day left. You might want to
go buy that 27.5. That's not bad.
Yeah. I mean, if it's 8 days and it's ETH and we're replicating stock, you could buy the 27 and sell the 32. I mean, if it goes up, great.
Oh, sure. So buy the 27, we're giving up about 50 cents, and then sell the 32 to offset some of that.
Yeah. I mean, it's 8 days. If it goes up above there, that's a high class problem, right? We'll have made $3 on the position.
Sure. Okay. And we're paying a little bit of a debit. And then we have just a call spread out in the 8-day. Yeah. And we still have, then that's all we have. We have that and a put spread.
Yeah.
Let me try to 165. I'll let that work.
I mean, okay, Jenny, in like realistic perspective, I understand why we're managing this because we're both going to be gone. But this is something where I don't see the need to like really, really, really pay up for it. If we wind up coming in 100 shares of ETH, it's a $29 product. It's cash settled anyway, so we'll just have to do something about it on Monday.
But do you see that?
No, I know. I'm just saying it would be $2,100. We'd have to do something about it on Monday. Then it would be a 2-day settlement. It would be $2,100 tied up for no real reason. I mean, we have the capital sitting there. I don't want to do that, but I wouldn't pay too much for, like, I wouldn't pay $2 for that spread. Do you know what I mean?
I know. It is getting, so let's see, 29. I don't know what to say. I don't want to pay too much for it, but maybe you want to just get assigned and take 100 shares of ETH.
I mean, I don't care. It seems to be these markets are pretty wide. We could just close that. Just close the one thing and we'll come back in on Monday and do something to it.
No, because if it runs up on Monday, we're going to be annoyed.
Yeah, we will be annoyed.
Like we wanted this synthetic long stock through the, I'm just going to
Yeah, we can always adjust something tomorrow. Buy it. Yeah, just put whatever. Put 280 into it instead of $2,000. But you're still not. Just pay up for it then.
The problem is these markets are kind of wide.
I know.
Like those ETH markets are a little bit wide.
They are wide.
Jeez Louise, it shouldn't be so hard. Buy one in the money call and give up very little extrinsic value. The 27. That's all I can come up with. I'll try to pay $215.
Perfect.
There. Now we have one long call in ETH October. These are taking us through the end of the month.
Yes. Okay.
Okay. So, and then Coke. Here's another trade we have in the money. This calendar. We have to just close it.
You know what's crazy, Jenny? Look at this boost. I mean, I'm sorry if I'm jumping around. Yeah, just close the calendar. You got to.
I mean, it's the call calendar that's in the money. The put calendar's not.
And the call calendar is almost a wash.
Yeah, so we'll just close that call calendar, 25 cents. And the put, unless there's a crazy move down in Coke tomorrow, then we'll deal with it on Monday. Because back to our synthetics, we would have a long put, and if we got assigned, if Coke has some crazy fall and we're assigned on that short 68 put, we would come in long 100 shares of Coke and we would be long an 8-day put. So synthetically, we'd be long a call.
Yep. We have that. We had that on Monday. Good job, Jenny.
Okay. So that's it as far as anything that's pressing that we're going to be gone for.
Okay, so then let's jump into the zebra management, just because I want to make sure we do that. We are taking live tweets with the hashtag LIZJNY. There's some good ones coming in, which is awesome.
Okay. Zebra management, JD. We have a zebra in JD, 33.35. It's trading 33.14. So it is, we probably put this on when it was 35. We start with the at the money as our short, 35 down to 33.15. We should be out like $285 on the stock if we bought it at 35, and the zebra's out 244. So that's how they work. They mimic the stock.
And this is exactly what the emailer that I was talking about was doing. So this is what I wrote back, and I said we would talk through. So if I look at this, say it's JD, you look at the stock. I wanted to be long JD at 35. It's now 33. So I'm out the same amount as I would. There's 29 days left. Do I still want to be long JD? If I still want to be long JD, then I would close this and reestablish it. Reestablish with the same mechanics, and that will give you 1-for-1 profit potential to where it is. And it's helpful because your longs become the at the money and they have a lot of extrinsic value.
So, and then a recent development with Zebra management is that, when we close this, to Liz's point, it's trading 33.13. We've got the 33.35. This 290 is all extrinsic value. So now we're getting that extrinsic value. So recent development was also, if you don't want to put more money into a new Zebra, because putting on a new Zebra is going to cost more money. If you don't want to put more money into the new Zebra, you can just buy a call that's like equal to that extrinsic value you're getting. If we're getting 290 in extrinsic value, we could buy this call, the 31.5 call, which only has $1 in extrinsic value, but then we're not paying any more we're not putting any more money into that position.
Yeah, and I'm just going to give the caveats to this. So if you reestablish the Zebra, you're going to be paying more money for it, but it will pick up right now from 33.13 anywhere to the upside. If you buy that 31.5, it's got to go $1, $13, $1.20, whatever it is, higher. You have that gets added onto your break even. I think so they're both, but I guess my point when I was emailing this person was, if you don't, and I know we're trying to say we don't want to put any additional capital into it. If I'm not still bullish JD, I might close it because you put on a bullish trade, it didn't work. If I were, hypothetically speaking, like we bought some stock yesterday with Tim Knight, or we used stock with Tim Knight the other day, and if my assumption changes in that stock, am I trying to do something to save it? I'm just going to close the stock. So you got to think about it from that perspective. If for some odd reason you're long JD and you're like, ooh, I think, whatever's happening in the world, I think Chinese stocks might get a bounce, and they don't. And then you're like, I don't want to stay with this. Close it. You've lost as much as you would with the stock. You got to think about it from that perspective. But this is JD, and it's a stock that I'm always long, and I always kind of maneuver and reestablish. So I don't mind doing it. I don't mind buying the call, and I don't mind doing the Zebra.
So originally when we bought this, we paid $5.35 for it. So we're like, okay, we're going to pay $5.35. It's going to replicate 100 shares of JD. Not as much as 1,500 if we were to buy 100 shares, but that was our risk in the trade. And
we've lost the same amount as the stock.
Yeah, if it was a 29-day, we still have 29 days left in the trade. If we were to put on a new Zebra, sell a 50 delta, buy 270 deltas, we're going to be outlaying, it's not that much, $1.57. So instead of like the $5.50 at risk, we'll have a $7 at risk to have 100 shares of JD.
And then it picks back up 1-for-1. Once again, I don't mind buying that naked option. I did not, when I was giving my email answer, I just wanted to be clear. She's like, what do I do? I don't know if I should stay in these or not. And I was like, I don't know if you should stay in them or not either, but I will, if I wanted to be long it, I'm going to do something. And if my assumption changes and I'm like, ooh, this didn't work, I would close it because you're out exactly the same amount as you would have with the stock.
So we could put $1.57 into it and have the Zebra and have it pick up 1-for-1. If JD pops up, we'll make money 1-for-1 by putting $1.57 in. We'll have a new Zebra in here. If
these were the original mechanics.
Yeah, putting on closing the existing Zebra, then putting a new one on. Or what a recent development was, okay, we're getting 291 extrinsic value. We can use some of that and buy a call and not outlay any more capital. Try to adjust this for even. Then we'd have a call that would pick up in $1 instead of this trade that wouldn't pick up for like $3.
It doesn't pick up. So that picks up in $1. This one doesn't pick up until $2.
So, but another management that I will often do with the Zebra is, okay, we had a Zebra, it didn't work. Now there's a 42 rank. Close my Zebra, take my $3 and sell this at the money put for $1.80.
No problem with that. It's just a big capital requirement. And I think the email came to me and not to you only because I do Zebras in my IRA and I wouldn't do this in an IRA. So I wouldn't because that doesn't make any capital efficiency. So that's not my go-to move for Zebras because they're typically in my IRA.
So, So, but this is where you take action. We take action. If you have a zebra and the stock falls to your long strike, this is where we take action. Now, I don't really mind putting $1.50 more into this.
I thought it would be more than that. I don't mind the one long call either, because to your point, it's just like another month or it's another cycle of let's see what we can do. Because we wouldn't have, when you think about it from this perspective, Jenny, we wouldn't have looked at this if JD was trading 34 instead of 33, we wouldn't have even opened to this. And that's because the extrinsic value is kind of in that same realm.
Right,
Do you know what I mean?
Right.
Yeah.
Yeah. So I don't know. It doesn't matter. We could put $1.57 into it. It's not that much.
Either way, I think it's good. And I think we made our point clear. Like if you don't feel the same way, then change it. And we're not talking about JD, whatever your zebra you have in. Say you get in because you think it's a meme stock or something like that and it's changed. If my opinion has changed, unless it's a ratchet that's super high up, I don't leave it. Like if I think, oh no, I'm not bullish at it anymore, I would close it for $2.91. Unless it's something that's worthless. If the zebra is only worth like 50 cents, then I'll leave it.
But, and here's another point I want to bring up with this zebra, and I'm going to push this through, but we paid $5, and I just did, because I just did a synthetic zebra around all my Intel stock, because I'm going to be gone, just to get me through my trip. I don't want to be on my trip and worry about what Intel's doing. And so in my mind, I was out to 29 days with mine. So when I put on a zebra at 29 days, we put this on, it had, so many days to go, and we paid $5.35 for it. And JD has come down to this strike, and it's worth $2.90. We didn't lose the full $5.35 yet. And so in my mind, when I did that in Intel, I'm thinking with 29 days to go, even if it has a big drop, I'm not going to lose that full amount. I'm not going to lose that full amount of the zebra, because when the longs become the at the money, then they have more extrinsic value. So when I place a zebra in my mind, I'm thinking maybe I'm only going to lose half of what I am paying for this.
If you close it.
If you manage it, if you manage it when it gets to the at the monies.
So to your, and I'm glad you brought this up too, because managing it right now when the longs become the at the monies is exactly the same as the stock. If you leave this and time ticks on, then it becomes more than the stock.
So I'm going to try 165. I thought it would be more. Sometimes it's a lot more to.
Oh, I thought it would be another $2 or another $2.50.
I know. So that's not much. I've adjusted a couple of times. I'm not getting filled. The markets are not
a little wide. Yeah, and it also could be 29 days, not 45 days. Do you know what I mean? Because we've been in this for 29 days. So we put a 60-day zebra on.
I know. 170, my final offer. And then at that point, I might just go to the call.
And just let it work for a little bit. Let's look at our second one. Speaking of Intel has earnings tonight. And I don't know if you want to pop into Twitter too to take a look at that.
I started with this. Corey Haim. Who doesn't love Corey Haim?
That's not Corey Haim.
Yes, what does it say? Corey Hart.
Yes.
Corey Hart. I thought it was Corey Haim. I was like, oh, Corey Haim. Remember him?
No, this is the guy, and I can't believe I know this. I wear my sunglasses at night.
I don't know why I thought it was Corey Haim that sang that.
Yeah, there was a movie from a song from the 80s.
Oh my gosh. And look at this. Dave Meyer, look at his scalping at night.
I like it.
2487. Nice work.
I scalp my futures at night. I like it.
A nice song, Liz. Nice song.
Where do you see Corey Haim?
I saw Corey H.A. and I just in my mind
thought, because I was like, I know Corey Haim's face inside and out, just because he was a heartthrob. That's not Corey Haim. I mean, that guy's whatever. I'm sure he was a delightful pop star in the 80s, but that's not Corey Haim.
Corey Hart. Did Corey Hart have any song other than Sunglasses at Night?
I have no idea.
So funny. And Frank, SIBO, Wednesday's option volume, 65.3 million contracts, 9% below recent average, calls leading puts 7-5.
Okay.
Nice. And the calendar. Now tomorrow there's something coming out, and we're not going to be here. So
can you just do me one quick favor? Only because I'm looking at this, the natural gas inventory. So can we go to not our natural gas position, but can you go to the natural gas options? Because I heard, and I believe it was from Tony, one of the Batistas this morning, they were saying that the NG, the farther out one was really high because it's different cycles, right?
Yeah.
So it's over 4. They were saying the 32 days over 4 because they already did the roll, which is a real big pop for natural gas. Now we're in the 5-day, and I like the way this works a little bit because it's different cycles, and that 5-day doesn't necessarily have to cooperate with the 32-day.
No, because look, the 5 days 3.39. So this, when you go to natural gas now, when you type it in, it's not going to the shortest, it's going to the 32 days. So this 4.043 is the 32-day. We've got we still have this is Z, the 4.04 is Z. We still have X, which is 3.39. I've got my 3.3 butterfly. Come on, baby. I need that to come in.
And this is why I like natural gas. I know I shouldn't. I mean, don't email me because I'm so done getting these emails. But I love the natural gas because I have loaded positions. I think I have from 3.4 all the way down to 2.1 butterfly, and they're all butterflied off for a credit. And it doesn't comply or it doesn't assimilate with the following one. It's its own animal. So a lot of times you'll see it move, the 5-day move a little bit slightly lower, which I do like.
I really don't like to see natural gas creeping up into the 4s because it's not as easy to take the risk of naked options to the downside natural gas as natural gas is getting higher.
True that, Jenny. True that.
So anyway, this is going to be Monday, and ours is really far, really far.
Yeah, ours is pretty far.
But we locked in a credit, whatever. We'll make the credit we locked in.
Yeah.
Okay, so back to Twitter. Here we go. Intel, Newmont Mining, Ford. Oh, Ford, I have Ford stacked, but I didn't even think about it, really. Not that worried about it. But those are famous last words. Procter & Gamble and GD, is that Gilead? What's GD?
I have no idea.
I don't know either. I'm trying to look at the list.
So I have Intel, Newmont Mining, and I had Ford. I don't think I have Ford anymore. But so those are, I'm going to take a look at those. I'm going to adjust my positions in those. We only have Intel. What do we have in Intel? Do we need to adjust it?
We have one short
put, and I'm fine with it. That's fine.
We have one short put. It's the 33. And the crazy thing is we've been in that one short put for 13 days, 33. It's far. The reason why we're not getting paid is because of earnings. So we're here at this level.
Yes. Yeah, it's because of earnings. That's what we always say. It's like running in sand. Do you know what I mean?
Right. Now just basically now I have synthetically turned my stock position into a zebra, which a zebra right now, if you do like sell a 50 delta, buy 270 deltas, it's expensive. It's expensive. And 619. So my thought is if Intel drops to 34, well, that 619 will get, I'll lose some of it, but not all of it. But if Intel drops to 25, I could lose all of it.
Because you have it in the 29-day, we'll have some.
It'll keep something.
Yeah.
Yeah. I didn't know what to do. I just have a lot of Intel stock, and I thought of just leaving it all. Because I had that synthetic zebra before, but when Intel started falling, I sold it out. Like one of these days, or maybe this day, I sold out my long puts and was like,
Tim Knight, bearish. Jenny, bullish.
Yeah, Tim Knight is bearish.
Yeah, it's one of his bigger bears.
So I felt like that zebra was protecting me because all you can lose on that zebra would be $600 in a massive down move versus if it went back down to this, 20-something level, that's a lot more.
Yeah, this is interesting. We'll see how Intel shakes out.
I mean, when it started popping, I think on this day, I said I was not going to sell my Intel until it got to 40, and it hasn't yet.
You're just there.
This day, it just missed it. It didn't get
just a bit outside.
39.65. 39.65.
Yeah, almost there. Let's take a look at Newmont Mining for me. NEM.
Okay. NEM. Newmont Mining. The metals are all up today.
Yeah, I mean, after that little slight.
Yeah.
But once again, they're up. But this is earnings.
This is earnings, but honestly, with these types of companies, I don't worry as much. I think they move more on just like metal news than earnings.
I think so too. I mean, it can move if they don't hit their numbers or do whatever. I mean, but I'm not too concerned about it. Okay. So that's it for earnings.
And Ford, which Ford is, they have earnings, 55-cent expected move. I don't know. What do you think about Ford?
You know what? I looked at that Ford and I was like, I think Ford's down a bit because I remember putting in a bullish position and I tapped out. I don't know where I did that. It must have been like before that, the up move, because I think I probably put a bullish position on in Ford at about 12.50 the last time it was up there, and then it went like because I fully expected it to be down lower than this.
No, so I don't know what to do with my Ford. I've done nothing. Like I just have shares and I have nothing on it, nothing around it, no options around it. But there's not. It's sometimes.
What did GM do? GM went up, right?
GM went up. But like if you look at that, there's nothing to do. I mean, I guess I could just buy these 12 puts for 21 cents.
I mean, the expected move is 55 cents.
Like against my stock. You see what I'm saying?
I know, but the expected move is 55 cents. So if it goes down 30 and you paid, you know what I mean? It's like coming out in the wash.
No, but I'm just saying if I have a lot of stock and it goes down to 10.50.
If it goes to 10.50, but if it moves its expected move, you just paid for it.
Yeah, but you know what? If I pay 21 cents, like for every 1,000 shares of stock, it's only $200. Well, it's a donation I'm probably willing to give.
Yes, but I just want to
for earnings.
For earnings. I just want to show there is no game in the system. The expected move is 55 cents. You're paying 20 cents and it's 12.30. So it's exactly the amount of the move.
Right. But so my point was, if you're sometimes to protect stock, we'll do a downside ratio spread. You can't here. Like if I thought, I'm going to protect my stock and do a downside ratio spread, you can't.
Well, I mean, you can. I mean, you can, but
what are you going to do?
No, so what if you bought the 12, 11 and a half? Because the expected move is only 55 cents. So you're paying 5 cents for your protection instead of 21.
I mean, there's nothing in these options. It's kind of insane how there is nothing in these options.
Yeah.
So they're not expecting much of a move in Ford. But I'll be keeping an eye on it. I'm actually glad I looked at it. I'm going to go buy those for 21 cents.
Perfect.
Sometimes what I'll do is I'll look at my P&L, and I did this in Intel too. Look at my P&L on my year in that stock. And if what I have to pay for protection through earnings is a very, very, very small percent of the P&L, then I will. I'll say I don't mind if I give up this much of my P&L to protect myself through earnings.
Yeah, because earnings are, and even we had Tim Knight on, and I loved having him on. I think he's great. I just didn't want to throw him under the bus and be like, he's bearish Intel. But that doesn't necessarily, even if Intel goes up on earnings, that's not what he's saying. The earnings are a different like vehicle in the charts. Do you know what I mean?
And Intel has a lot of premium in these options. Like I wasn't going to go, to me, and you could say, okay, well, you could do a ratio spread here, but me personally, I don't feel like that's protection. That's more risk.
I kind of agree with you.
We are not getting filled NJD. I don't know what to do with it.
Just cancel it and buy the naked option. Because I think it's 4 legs. You know what I mean?
Yeah, it's just too many legs for this. So close that. We're getting 285. And I'm going to try to do this for about even. Yeah, 5 cent debit. So we're not putting any more money into it. We're just going to have one.
Yeah, that's fine.
We're just going to have one long call.
I'm slacking at my job. Hold on. Let me get into our account.
Yeah. Do you want me to push anything out?
No, I got it. I'm doing both sides. Okay.
So we have one more. We have another example. Another example of a losing zebra.
Oh, wonderful. Thank goodness.
DraftKings, similar situation, but this is
this is different because there's 8 days left.
Yeah, this got 8 days, and our zebra rule is when they get to 10 days, we roll them out.
And we only put this on 8 days ago, so we put it on with 6 days before management.
DraftKings.
Now, apparently they're getting into the prediction markets as well.
I heard that. I saw that. And DraftKings has got my number because every week I had to go in and put my lineup in for my fantasy league, and I'm really at the bottom of the leaderboard, and I stink. I stink at this fantasy league.
You were so bragging about it last year, being like, I'm so good at this that they want me to have my own spot. I was like, no, they don't.
And last night, and and the Detroit Lions aren't even playing this weekend, so I'm like, can't pick Goff for my quarterback. Stared at all the quarterbacks forever, tried to figure out who to take.
Who's your punky QB?
I took Caleb Williams against people's better judgment.
Well, we wish you luck, Jenny Andrews. We wish you luck.
Okay. So DraftKings, what do we do? We have a losing zebra.
So this is 8 days. So now, I'm going to talk real quick. You would close this no matter what. Now, are you still bullish DraftKings? I mean, I guess so. It's taken a bit of a hit. So you can go out farther in time. You're going to be crossing earnings. That's why I was kept in that cycle. You're going to be crossing earnings and you can go in and do a zebra. Or you could close this and get into a trade on earnings. Or because this isn't something that holds up a lot of capital, like your ETHA, you could sell a put.
Yeah, you could. Now, this is going to cost more because we're going through earnings and we're going from 8 days to 29 days. And so this, like paying another $389 is what we expect to see when we're reestablishing zebras, which is why we were both pretty surprised that it was only $1.60, $1.70 to reestablish the JD zebra. We were both like,
we were shocked.
Yes. So I don't mind it. But to your point, with 54 rank, we could just sell the at the money put.
So yeah, you can do, I mean, like I said, if you have to be like self, I don't mind this either. I don't mind being bullish. DraftKings, and then you can sell a strangler or something on earnings.
On earnings.
So let's put this in. If we decide to readjust it, we'll readjust it.
And I mean, look
at that. 250 at 520 is the market. Where's the wide markets coming from?
It's this 32 call. Look at that. 350 at 460. It's that. It's this call.
Pull it up to the 32 and a half. It's a tighter market.
Oh, yeah. Okay.
It was just a much tighter. It's a much tighter market. There's at least 1,000 open interest on there.
All right. I'm working that. This hour is flying by.
1040.
270. Come on.
Yeah, I mean, you can let that work for a minute, or 271.
Oh, you said that for JD too.
So I just saw the commercial. Do you want the penny or do you want the position?
Well, we definitely don't want to leave this 8 day zebra to just decay to nothing. 275, final offer. And then we have to change this trade to something else. What the heck, DraftKings?
It is weird. I was surprised at how wide those markets were.
See something. DraftKings.
Do you know what's happening to me right now? And I know this is going to be exhilarating live TV. I'm so thirsty because my water is in that bathroom. Do you know what I mean?
Oh, no. And I don't want to make you see this, but you saying you're thirsty just really made me thirsty.
I know. It's killing me. It's almost like I look down, and every time I look down, my mouth is so dry because my water is just over there out of reach.
I think it was during one of the last calls where I forgot to bring my water in, and all I had was my cold coffee from the morning, and I was like, Okay, so here's what I'm waiting for. This is going to be a big day. This is going to be a big day for me when DraftKings finally starts turning a profit. I mean, this is what I can't wrap my head around, that their earnings are still negative.
They're still negative. They've been negative.
Come on, DraftKings, get your shit together.
I think their business model is give away a lot of stuff for free to try to hook them.
So as soon, I feel that once they have a positive earnings,
off the races.
I reckon. I don't know, but let's keep the zebra. Let's keep the zebra going if we could get filled.
Just pay up for it at this juncture.
Now it's up to 290.
What the heck? Well, okay, so that market's wide. Are the ones we're buying back wide? Are the 8 days wide too? They must be.
I gotta
go to the 8 days. I want to see what the orders are.
I'm gonna cancel this. I'm gonna close this 8 day. I'm just gonna put this in as 2 trades. Okay. I'm gonna
yeah, that's a decent. I mean, that's a wide market, but it's not that bad.
No, that's fine. That's fine. $2. Is everybody? What's going on in the world? Are they on vacation? Where are the traders?
Okay, but now while you're doing this and you're going to keep pennying it up, if you take a look at the spoos are only up 13. I really like, I mean, and they could go red on the day. So I really want to kind of expand on what we talked about yesterday with those put spreads. And I think this is a very good point that you and I made yesterday. Even if we're down today, you can still take those off. Though the point of that is saying that it's a pop for a bit. That's the whole point. So yeah. I know everybody keeps saying the market, and I know even Jacob was saying this, the market went from 3,000 to 6,000. I get it. But what we're saying is intraday. So this would be a down day if we wind up down 40.
I mean, I know I can't get past Jacob keeps saying like, but we've been in bull market. We've been in bull market. We've been in bull market. They're a trade that lasts for minutes or hours. It's not a trade that's a 3-month trade. It's not a 45-day trade. So I don't think it matters that we've been in, if we're in a bull market or bear market. To your point, we're just looking for a blip in time where the market moves in our right direction.
Correct. And it could be a violent down day and you could still win on those.
This is where we were when I put it on. Spoos were up 10 when I put it on.
Yeah. Yeah.
Okay, I mean, I can't even get filled on this. Like, what is going on? This market is not that wide. How are we not getting filled? Like, is nobody trading DraftKings anymore?
I mean, it's got open interest.
I don't get it.
You're penning it up so much. Leave the 8-day. Honestly, leave it.
Here's what I'm going to do. I'm going to just I'm just going to buy like one call, right? I'm going to get rid of this extrinsic value. I'm going to get rid of this extrinsic value, okay? And I'm going to just like buy the 33 call.
Yep.
Yeah, and I'll put it in for even.
Take it a credit. You're not going to get filled on anything.
I feel like I'm cursed today. I can't get filled on anything. This is so weird.
Yeah, are you working it still?
Yeah. I don't care if
Just take it down to even. I know you're trying to get 2 cents.
Move it from 2 cent credit to 2 cent debit.
Oh.
Finally. Thanks for nothing, DraftKings.
I'm going to push that through just so people can see how long it took us.
All right. I want to make sure we get to everyone. So Intel, check. Newmont Mining, we looked at forward. You can get puts for the low price of 20 cents. Procter & Gamble. And what is GD? Is that General Dynamic? Yes.
Wow.
So this is where our friend's daughter worked for General Dynamic as an intern last summer in Connecticut working on submarines. And
I did not know that.
Yeah.
When you say submarines, I just didn't know it was General Dynamic.
Yeah, so Mandy's daughter worked for General Dynamic working on submarines last summer. And they offered her a full-time job, but she doesn't want to move to Connecticut.
Oof, I could see that, though. I mean, not that I could see that. I could see her saying no.
Connecticut's a lovely place.
It's a good, lovely place, but I could see her saying no. That's all I'm saying. Connecticut's wonderful.
Yeah.
Connecticut.
Yeah. I mean, our kids, it's funny because my son, his whole life growing up was like, I'm moving somewhere warm. And he had an interview this week and they asked if he would relocate. And he's like, I just want to stay in the Midwest.
No.
Yeah, that's what he said. So when they offered Kate the job, she's like, yeah, I just want to stay here. I want to stay by home.
Really?
These kids, they don't want to leave. I get it.
Yeah, I get it. Okay, are there more? I'm going to go into Twitter to make sure we got to everybody. Oh, yeah, you got to go top down in Twitter, Jenny.
Geez, what are we missing? Something good for Vicky?
Yeah.
Oh, well, and Alan Miller, Jenny have fun at Disney. We leave Tuesday for Orlando, too, playing 14 straight days of golf. Okay, Alan, it is like 83 and sunny every day. Alan, have a wonderful time golfing.
Jenny, I'm going to bet Alan has a carry-on for 14 straight days of golf.
Oh, yeah. This is perfect. Thanks, Mikey. Happy Retro Thursday, ladies. Remember that time I posted a picture of Jenny at Disney World and she shamed me on air and said it looked like Disneyland?
Does it look like Disneyland? Yeah.
I mean, is this like the backside of Small World? No.
I think it's Japanese Asia.
Yes.
Because look at the Mickey shirt too. You're in a different country.
Yeah. LOL. Have a great trip and take some pics as you drink around the world. We're not drinking. drinking around the world.
She's not bringing her 21-year-old this time. So that was what you were tasked with the last time, but not this time.
You know what? Here's what I'm so excited about. I'm staying at Grand Floridian. They just redid the lobby. They've got the piano player back. Hopefully they bring back the big band at night. I'm going to be lounging by the pool during the day, drinking cocktails at night.
Sounds wonderful.
Yeah. So you might not even see me in a park.
I do think that's Disney. Is it Japan? Where is it?
There's like Tokyo Disney.
Tokyo Disney. That's what I'm looking for. Tokyo Disney. That's the word I'm looking for.
That's what Liz's guess is. I think you're right. Maybe.
Yeah, I think I am.
Yeah. Thank you, Mikey, for the picture. Cupcake. It's been a while. Yeah, welcome back.
Welcome, Cupcake.
Since I talked to you girls, but here's a new diagonal from me in Intel. I floated this one by Nikki. I'm holding him fully liable.
100%. You can hold him liable if you floated this by him. So this is an earnings diagonal because he's selling the 1 day, buying the 29 day. I don't mind it.
No, I don't mind it. There's $6 wide. You've got the 34.40, and you're paying $3.95 for it. Yeah, if Intel goes up, great. If it doesn't move, fine. Then you could sell weeklies against your November long. Your risk is $3.95 if Intel really falls, but that 29 days should hold some value.
Yeah, that's not bad at all. I like it, Cupcake. And welcome back. We missed you.
Samantha, welcome. When putting on a zebra, how many days out do you do, and at what point do you ratchet if it's winning?
If it's winning, if you can close it and reestablish and take some credit, we do it. I mean, we're not going to say if it's up $3, if it's up $2, if it makes sense. If you're getting to 15 cents for it, we're not ratcheting it up.
If you close your zebra and put a new one on where you sell a 50 delta, buy 270s, and you're taking in at least $1 credit, usually we want at least $1 credit, then we'll do it. There's no reason not to.
There's no reason not to.
Yeah.
So, and how many days out do we do them? I mean, honestly, I'd go 30 to 45. Ish, but that's a loose. You could do it. You could do it at 20. We just once it gets to 10 is when we like to have them off.
And this is a good question. This is coming from Lisa from YouTube. Is there a way to make the zebra trade a higher probability of success? The zebra is a stock replacement. If you buy stock, it's a 50-50. If you sell stock, it's 50-50. If you buy a zebra, it's 50-50. If you sell a zebra, it's 50-50. It is just a stock replacement.
There is no way to make not a zebra. It is a true stock replacement. That was well said. There is no way to make it a high probability.
Yeah, I mean, if you want a directional position that's a higher probability, if you want something long, just sell a put out of the money put spread, or put on a there's other trades, other strategies, but that are higher probability trades. But it's not a zebra.
Yeah.
Here I am again.
Oh,
bonus points if you take a picture at Disney World in your favorite red shirt. You know the one.
Oh, yes. Well, she's packing. Mikey.
Mikey.
She doesn't say she can't say she doesn't have room. She's got 4 empty suitcases. Put that T-shirt in there.
Honestly, Mikey, this trip, like, I don't want to ever be in the same clothes in all my pictures, so I'll change. Base my trips basically on my nail polish. So this time I had got my red nail polish, so I am all ready in all red. And the first thing I packed was your Red Shirt Thursday shirt.
Perfect.
So I'm ready. I'm ready for it.
It's got the room for it. She's got it. It's going to be photographed. Ooh, blue wackadoo. And we checked it. We checked his at the end of the day, so he was fine.
I love that he's already drinking martinis. Happy Thursday.
IV rating, blink, 4.3. Okay, let's see.
What did he got going on? Done for the day. Collected $11.98. Beavis laugh. Thank you, Mr. Market. I used to love Beavis and Butthead.
You did. You used to reference them all the time.
They're funny. Also playing with insurance delta compensation today using the mini futures shorts, and I'm liking it. That's right. I forgot about his little way to insure some of his positions. Dog fight. Do you hear the dog fight?
No.
My 2 dogs are fighting.
Oh no. They know you're leaving. They're fighting over your love.
And Alan, yep. I only bring my rollerboard, but he's a pilot. He knows.
You're going to be gone for 40 hours. I'm shocked and appalled.
Because I'm shopping. Because I'm going to buy stuff.
I call BS. You would check even if you weren't shopping.
And my daughter, so we have this giant bin, and you could we have this giant bin of all of her Disney stuff, right? Like Loungeflies, ears. So she wants to bring it. Like every day she's got her outfit with this this backpack, these ears, this. Like it's just easier for her to check. There's no way she could fit that all in a carry-on.
It's 2 days. Are you going to be on the show on Monday?
I'm going to take pictures. Mikey, the only way I could fit your shirt is that by checking a bag. It was the last thing I couldn't squeeze it in, but I'll take pictures. I'll wear Mikey's shirt. I'll take a picture.
I love it.
Okay. 10:54.
I know we're almost out of time. Did we get finally got filled on the DraftKings? Did we ever get filled on JD? Yeah, we did. We wound up with just going to single options because we couldn't get filled on the 4.
All we really did was manage what we have. Did we put on anything new?
Is there anything that needs to come off though too? AEO, do you want your 40%?
Sure. Yeah, we just have a short put here. We're 9 cents away.
Yeah.
AEO up 75 cents today. Good.
And then, yeah, we just did a lot of management today. Well, a lot of times we don't put new trades on when we're not going to be here for a show.
I know.
And we will buckle down and start managing when that's the case.
Now, Archer is with Archer down to 1089, and I know we've got a few minutes. So we had put this, like, this is the synthetic zebra acting as if we have long stock and our synthetic zebra around it. So this looked like the zebra. If I go to analysis.
Yeah, analysis page. Thank you.
Curve analysis. Where is it? Okay, here we go. So it, we make money 1 for 1 to the upside when we put this trade on, as if we bought the stock right around here, and it was right here at 14, right? This is where we put the trade on. So what I will do with what I've been doing with mine, because this, it gives you defined risk, it gives you some protection, but you still have the unlimited to the upside. What I do with mine at this point, we put this on at 14. Now it's trading 1088. I sell out my long put.
And we're tapped out though. So you saw from 13 to 12 to 11 to anything. We can't lose anymore.
Yeah. Well, we can't because we have this long put.
No, I know, that's what I'm saying. If you looked at it in that curve view, can you go back to the curve view real quick? So it does act exactly like the zebra. It doesn't matter where it goes. From 12, we went from 12 to 11. We didn't lose any additional money. You can go from 11 to 10. You won't lose any additional money until this is gone.
So, but the way I've been treating mine is then I will sell out my long put. I will sell out my long put, and take that money, and that helps like chip away at my basis. If I'm not afraid of having this stock, I'll sell out my long put, and then
hit the long put sale and go back into the curve view.
Then we'll take in $1.87 here, $1.86.
Yeah, no, just hit the curve view. Oh, okay.
Oh, sorry.
That's okay. I don't care.
It's not even filled, so I'll cancel it.
Cancel it. Just hit the curve view. I just want to see people can see what's happening with it.
So if you close that, you're gonna now you've got you're not losing as much here. You're not losing as much here because you're taking that credit for the put, but now you don't have the risk definition.
Yes, anywhere to the downside. Mm-hmm. That's all it does. And I think sometimes it's easier for people to visualize these things because that was a complex trade that we did where it's a synthetic zebra using stock, right? So when you're taking this put off,
I wish I could see these numbers. Like I want to see the number. So right here where the stock is, I can't see it. Can't see it.
We're down.
The expiration. Get these out of here. How do I get those out of there?
I don't know.
It's blocking it. It's blocking my view. And if I didn't sell this put, you can watch. This would be. Then I'm down more here. Then I'm down more. Instead of down $178, I'm down $278. Basically, it's just moving my less loss if we stay right here or go up. But that's, and sometimes I think, oh, I'm glad I did that. Stock rallied and I could always buy that put back. But if sometimes I do it and the stock keeps falling and I'm like, geez, I put that protection there for a reason.
I'm just trying to think the synthetic version of what this would be in the zebra. If you sell out the long put, because there is no long put in this, you know what I mean?
It's like if you closed all of this, and then reestablish. So then you're like picking up 1 for 1 again where we are. Then you do the sell at 50 delta, it's too many legs. Buy 270 deltas. If you put it all in and move it all, then basically what you're doing is instead of not making money 1 for 1 until we get up to 13, you're putting it back to here.
And you start making money 1 for 1 up the upside.
Yeah. You got to like shift it all.
That's interesting.
Yeah. But I don't mind at all saying, okay, I'm going to take my $96 on this put, and I'll actually buy this call back for 40 cents.
Yeah, go for it.
But you could also, to close
the whole thing.
Yeah. But if you take the whole thing, what are you making? You're down 60 here. You only made $30-something.
Yeah, you're not making anything on this.
I kind of like to just close the winners.
Then you're double long. You'll just have a long call and a long.
Yeah, but if we close that put, all you're left with is a long call spread. You're double long. You're a long 100 shares and long call spread.
Yeah.
So I like to just close my winners and wait for an up day. And then, I don't know.
All right, but it is 11 o'clock, Jenny. Go put your ears on. Go change your shirt. Go put your ears on. And we want to see the picture of Mikey in Disney World.
Let's at least take off this put. Okay. That way I feel like we're doing something to improve our basis.
Basis in our term.
Again, my goal is always your P&L on the year should always, in the underlying, should always be much greater than your P&L on the stock. You always want to be using options to keep improving your P&L.
Oh, for sure. Otherwise, that's just the winging the prayer program. All right, Jenny, hop on that jet plane. We will see everybody on Monday. Remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. Liz, have so much fun at Miami and Kentucky. Go Wildcats. I hope they win. I hope they beat Tennessee on Saturday.
Thanks. We'll see you guys on Monday.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get backtesting at tastytrade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Just for a minute, let's forget about your favorite stocks. Just for 1 second, let's leave specific strategies on the shelf. Let's talk about what really matters. Your portfolio. How do you build it? What should you target? How do you manage it day to day? The answers to these questions and more are inside our newest crash course. So I'll see you there.
Hello, everyone. Welcome back to the show. This is Options Trading Concepts Live. I'm here with Jamal and Katie McGarrigle, or Zadie McGarrigus, or
whatever AI puts into our auto
oh my god,
descriptions.
that's one of my favorite things of the day.
Katie McGregor, Zadie McGarbles, just all the things.
Yeah, I called her Zadie, and the AI literally thought that was her name for the show description summary thing.
Yeah,
it's amazing.
Some elite ones in there. We'll have to find them.
Mm-hmm. Oh, I've gotten some weird ones. I mean, I've seen Ramal. I've seen a bunch of weird ones for sure.
Yeah. Well, especially too with Chandler, because of Friends, where there's that whole joke about Chandler Bing's magazine name being Chanandler Bong.
Really?
So I'm
you
sure.
know what? I know it's gonna be weird. I've probably seen 3 Friends episodes.
I think that's fair.
My daughter's seen the whole season. She's obviously young. I mean, she watched the whole thing. When they had the resurgence, she watched it all at least twice. But yeah, I know I didn't watch it like that.
I feel like it was just on every television network, no matter what time of day you turned the TV on.
It was
that's
everywhere.
Yeah, I never was a diehard Friends fan, but it was just always on at some point. So that was my.
Yeah, it's like The Office. It's like you've either never seen it or you've seen it 3 times.
Yeah.
Yeah.
Sure.
Yeah. It's true. Same thing. Yeah.
Well, in other news, kind of mad at you both. You didn't text me about the thermals today. I didn't know it was Thermal Thursday.
Mm.
Come on.
That's what it should be now.
You know how I put this on? I put this on because out of defense. I couldn't find anything else, honestly.
I get it.
Yeah.
I tried to go a little spooky today. Kind of.
I like it.
Very festive. Yeah, very.
I've been I've been slacking on I love Halloween and all that stuff, but I've just been really not celebratory this year. So in the closet.
I feel like we've been hit hard with the cold weather, just instantly.
True.
So I think more people are just dressing casually, comfy, rather than trying to go in on the Halloween style.
Yeah, no, it's totally that time of year to just kind of dress kind of chill, you're wearing a blanket in a way. You know what I mean? Mm-hmm. It's that time of year.
Yep. Mm-hmm. And I can tell because my body is also just so we made Mississippi roast and polenta last night.
Ooh.
So true cold season, stick to your ribs.
Ooh, heck yeah.
Meal.
Ooh, that sounds great.
Yeah. So I'm with you. My body just wants all the carbs because it knows it's trying to prepare for winter. It's bulking season.
It is. Real quick, speaking of shows, maybe I'm in the minority on this one. I can't believe I did, but I listened to Netflix's earnings call. I never listen to earnings calls, but I thought it was fascinating. You should definitely listen to it. But K-pop Demon Hunters, you guys see that show?
No, but I've heard it's
Dude.
all the craze.
It's massive.
Yeah.
They mentioned it 6 times on the call.
It's hilarious.
Wow.
It's actually hilarious that they mention the shows that are popping off. When what's the show with the underground, the Upside Down?
Stranger Things?
Stranger Things, yeah.
That when that was going off, they're and we've got Stranger Things viewership up 20%. It's it's a show. It's not.
It's the metrics for them though. That's what I said.
Yeah.
It's crazy. It's crazy. But yeah, that show. I mean, it's they are pinning a lot of hopes on that thing.
I know.
I didn't know it was that big, dude. I mean, they mentioned it again. They mentioned it more than they mentioned Stranger Things. They mentioned it 6 times.
I was saying to my friends, I was texting my girlfriends, I was like, okay, do I need to watch The Summer I Turned Pretty? Because everybody's so obsessed with it, like, or is this just like a hype thing? And they both immediately responded, "You have to, Katie."
Yeah.
Like, so now I know what I'm doing on the flight to San Diego next week. Speaking
I
of,
thought about watching that one. Yeah. Speaking of,
tastylive.com/events. San Diego, last time to see me, Mike, and Nick in 2025. Come hang.
Nice.
That is the last one, peeps. It's gonna be great. Yes,
nice way to
Tastylive.
end it off. Nice city to end it off in.
Yeah, especially now that it's freezing here. Beth in here. K-pop Demon Hunter is actually a great kids movie. Look at that.
Is it a movie or a show?
Show, movie.
I don't know.
Tomato, tomato.
Is it really Beth? Or is it like another person trying to be Beth? I wonder. I hear it's great, man.
Yeah.
I hear it's like pretty awesome. San Diego, nice. November 2nd, Music Box. You guys, and of course Nikki Bat.
Yeah. Talking like options management, futures management, when to roll, when to hold.
When to roll them, when to hold them, when to fold them.
Exactly. Yeah. Drinks
Yes,
will
drinks.
be served.
It's gonna be great.
Yeah. So come after Sunday Night Football. Be a gas. Or come if you don't like Sunday Night Football.
I forgot that it's actually like after.
Is it after?
Because it's West
Later.
Coast.
Oh, that's true. Yeah. So it'll be great.
Yeah.
No brainer.
But yeah, it's gonna be glorious and totally free. But yeah, tastylive.com/events. You've got Austin. You've got Charlotte this Friday.
Yes.
Tomorrow.
Queen City.
Literally.
Did you guys see the? I just saw a little while ago the thing where they were
the
Tom, Bat,
social
and Tom.
post?
Yeah. The social post, Bat and Tom, and they were going back and forth on some of the trivia.
Yeah. So if you are in that general vicinity, come hang out, tastylive.com/events. A little bit like last minute, but head that way tomorrow. As Mikey and Jamal said, doors at 8, show starts at 9. Live trading. So if you're looking for some inspiration, great thing to do. And I know Bat will, take Tom down a couple notches in terms of making it appropriate to your account size and risk tolerance.
Yeah.
Should be good.
It's a great one.
Yeah.
But yeah, tastylive.com/events. You can click the link in the YouTube chat that I just posted as well.
Last but not least, another event on the Tasty Trade brokerage side, the Money Match event.
Yes.
A 1% match up to $2,000 on any deposit you make within the first 30 days of your funding and 30 days of commission-free trading. So if you have been on the fence about kicking the tires about the Tasty Trade platform, you're basically getting paid to come over here for a little bit and test it out and hopefully stay.
Yeah.
I don't know much, but I know that's a deal.
It is.
Yeah.
Especially for super active traders. It's a smash deal. So scan that QR code, or you can click the link pinned to the top of the YouTube chat if you want to join us on YouTube. We're streaming live on Tasty Live. Speaking of QR codes, I saw a commercial yesterday, and it was obviously for a 30-day survival food kit. And I'm not even kidding you.
The grid goes down?
Yeah, I'm not even kidding you. The first 20 seconds was like, if you've never heard what a QR code is, this is how it works. Take out your smartphone, click the camera button, and it was like while they were telling you how to do it, there was like a diagram of like showing you like once you have the camera, you just hover over the QR code. Right below that, you're gonna see this little link. Hit that link and you'll get this deal. It was like truly a explainer for people that do not use their phones.
Are they talking to boomers? Because
Yes,
that's about the only people who
demographic.
However,
even then.
when you put it in the context of it being a survival kit, maybe they don't. Like they might still have just like a brick or like, a rotary phone on their, at their house. So
it was incredible though. I was like, you know what? They nailed this. They removed all the question marks behind like, is this demographic going to be able to do this?
yeah, that's good UX.
Yeah.
I need a bar chart of like who does not have a cell phone. I need a bar chart right now. Like I want to know how many people I won't say in the world, just like in the developed countries that don't have a cell phone. I'm curious.
Yeah.
Dead serious.
It's got to be like a fraction of a percent at this point, right? Like.
Yeah.
I mean,
think
it's
most
getting
people
hard to do things without a phone.
Yeah.
It will be even harder soon. I mean, payments are going to go that route at some point.
Yeah. But I do kind of miss the days of like, if you weren't by your phone, you were just like not reachable. Like nobody knew where you were. Like you'd call your friends and be like, hey, can so-and-so like play or whatever? And if not, it was like, okay, well, you're off to your own devices.
Totally honest, if all cell phones went down, I'd be fine. I mean,
I think there'd be like a little bit of like a withdrawal period for me, but then I'd be refreshed.
I'll be fine in 7 days when my survival food kit arrives.
Your MREs.
Yeah. They have those at Costco too.
Like dehydrated beef stroganoff in a bucket.
Yes. They have those at Costco, and I always walk by. I'm like, do I need this?
you think about it for a second.
Yeah.
Never know.
Nick reminds me all the time that he's coming after my 20-pound bag of rice if the things go down.
There you go.
The grid goes down.
Yeah.
He'll be knocking on my door.
You have a built-in ally.
Yeah.
Like, which is pretty respectful.
Yeah. We've got people with guns in the building for sure.
Oh, there you go.
I'd love to hear.
There you go.
Ex-military, I mean, you know there's a separate room filled with guns.
No doubt. They all do.
Anywho.
Anyways.
Speaking of craziness in the markets, oil up 3.5 points. Apparently, we closed our longs early, but I mean, to Jamal's point, pre-show, you couldn't have seen this coming.
No.
Big gap higher. Yeah, up to 62, up 6%, leading the way in terms of futures to the upside outside of HO. But yeah, you've got crude oil, Brent, gasoline, silver leading the charge. Gold also up 2.5%. So we're seeing a little reversal here from the sell-off. Very interesting to see. Crude oil, silver, gold, Ethereum, Bitcoin all up over 2%. To the downside, basically nothing. I mean, the smallest from a CME watch list standpoint, the biggest downside move is less than 1%. So pretty interesting market here. If we look broader, volatility getting crushed. And this is my point yesterday on overtime with the overtime boys, is just that if you only look at volatility as like your guiding light, yesterday's sell-off got down to like down 70. It was a pretty decent one, but volatility wasn't moving. We're still in contango. We're still in the low teens. So like I'm expecting that we see this kind of movement where maybe we sell off for one day and then we grind higher over the next couple of days. But the second that vol flips into backwardation, which happened on our big E-mini sell-off here a couple of days ago, we went into backwardation here and we moved out of it probably here. But that's what I'm keeping my eye on. When you go into backwardation, that's when you can expect to see big chunks down in the broad market indices. If you're in contango, you're likely not going to see that. So just my 2 cents from a volatility standpoint and why it's so important to understand the volatility curve and make it a watch list. It's very simple.
Yeah, true that. I mean, in some respects, it almost seemed like the move yesterday down was maybe as a result of the unwind after VIX expiration, possibly. Other than that, I don't really think there was any real news for it. But yeah, I mean, we see that every now and again. But like you said, markets have turned right back around here. And I mean, I just continue to say this market action is glorious. There's so many different things. When you have a market where there's like large groups of names. We talked about the quantum computing stocks, which are in the news today. Really don't even know what the deal is there. Some news has come out recently to refute the idea that maybe the government's getting stakes. Who knows?
Yeah.
Probably is, though. I mean, there's starting to be these groups where they're saying national security, right? We heard J.P. Morgan said they're looking for things to invest in, and so it's been the quantum computing, it's been the nuclear energy stocks, it's been the rare earth stocks. They have been creating tons of opportunities, and I may or may not have used one of those today for a trade.
Ooh. Are we dipping our toes into uranium?
Yeah.
Yes, actually.
Yes, literally.
We are
Physically.
dipping
What does that feel like, I wonder?
That it's like that liquid on what was that Nickelodeon show where the girl turned
Gak?
into a blob?
Yeah.
Oh, Alex Mack?
Alex Mack. She turned into a puddle of uranium.
Yeah.
Like that's literally what it was.
That's what turned the Ninja Turtles into the Ninja Turtles.
There's uranium, right?
I have
that's
no idea.
right.
I'm making that up.
It's something like that. I don't know. It's some nuclear thing.
It was just pizza. It was New York pizza. That's all it was.
Which may or may not have nuclear chemicals.
Yeah.
Who knows?
Nobody knows.
Oh, for sure. My favorite place?
That's what they did with Achilles. They dipped him in. They held him by the heel, see, and they dipped him in uranium. That's why they couldn't
My
kill him.
favorite New York pizza is also Sbarro.
Really? Is it?
No, it's a bit from The Office. It's one of the funniest things.
Oh, I was about to say.
Like, come on, let me take you to my favorite place, and it's a Sbarro.
Dude, that is the breadiest pizza. Oh my God! It used to be in like every mall back then.
Every mall.
I mean,
I was crying laughing when I saw that.
That and the Great Steak and Potato Company.
Mm-hmm. I did like that.
Yeah.
Oh, I love that place. Nice. Oh, Katie, I love that place. It's so good.
Well, when we were in Dallas, didn't they have like another like a potato? I mean, first off, the Dallas the Texas State Fair is unlike anything I've ever seen. But
I want to hear your take on it.
Yeah, there was a stall. Yeah, just for like the craziest loaded potatoes that you could probably ever come across. It was. I mean, these things were on steroids. It was out of control. But
some scallions on them, cheese.
We got some crazy stuff.
Yeah.
We got some crazy stuff.
I mean, though, yeah, it was great. But Paul Wall, you can't beat a performance by Paul Wall and guest appearance by Frankie J.
Wow.
Sugar, Sugar, How You Get So Fly.
Oh, yeah, that's who sings that? Oh,
yeah, and Noah Some More.
So fly.
Yeah. So, yeah, the whole crowd was just...
Yeah.
I might have had to wear like a gold grill for that show.
Yeah. And meanwhile, we're just sitting there eating our thick cut bacon wrapped in cotton candy while we're watching the show. Ridiculous.
Yeah.
But yeah, Tesla had earnings after the close yesterday, and it was a big nothing burger, especially with this rally today. It actually opened up about 15 points lower. Got as low as 413. We're now sitting at 434. So you're seeing a big rally from the lows here. Anyone that sold premium, this is always fun to see. If you look at the 1-day chart, we're just going to see a bunch of red on both sides. So even into this 4-point sell-off, all of these options lost a ton of value here in the 1-day. You're going to see basically the same thing in November. A little bit less as you go further out in time because the directional move will still play a role in these options maintaining value. But yeah, just a massive vol crush across the board here in Tesla. I think they were projecting a 30-point move, and we are now sitting at a 4-point move net. So Netflix, on the other hand, continuing to slide. They had earnings a couple days ago, huge gap down from 1250 down to 1150, and that continued. And now we're continuing lower. So yeah, I guess the K-pop Demon Slayers.
We need a new episode immediately. Yeah, clearly, based on the way the stock reacted. Well, yeah, they said it was some Brazilian tax type thing, right? Which I don't know, sounded pretty weird to me, whatever that means. But that was actually one of the main things I think they were. I can't believe I listened to that earnings call. I don't know why. I actually do know why, but it's kind of funny. It was very fascinating actually, and that was clearly something that they said affected the stock. Stock's been having trouble getting off the mat. And those have been our two main earnings movers for the week, right? Like,
yeah.
IBM kind of down as well. So if you're somebody like me who takes stock of some of the moves post earnings, a lot of them haven't really been that good so far, even though they beat. And God, did somebody somebody maybe talked about that recently? I thought I saw something where was somebody talking about that one of the shows? I'm on so many shows these days, I'm forgetting. But somebody talked about how stocks have been penalized recently on some of the earnings moves that have happened, and I think you're seeing it. Even if they beat, they've been penalized to some degree, and we've seen that with some of these major ones: Tesla, IBM, and Netflix for sure.
Mm-hmm.
Yeah, and we've got all of the other Mag 7s basically for next week and the week after. So could be a crazy move in the market.
See, now I'm kind of gun shy on earnings though, because I've done my calendar. That's my calendar call spreads, and so far they haven't worked out.
Yeah.
So I'm like, I don't know how's this earnings season gonna go.
Yeah. And then the one you sit out.
Yeah.
You already know.
Reverse indicator.
It feels like an inside move earnings season, just because there's so many question marks. I feel like there's a lack of super intent on just like going nuts with the long side. I think specifically the long side. Like you said, even if they beat, you're not seeing like that big of a move. But yeah, we shall see what happens with the Apples, Amazons, Googles, and NVIDIAs of the world.
Yeah, I lie. I'm gonna play them. I mean, those are the main ones I play. I don't really play many others, but if I do play any, it's those. And again, keeping the risk small. Usually try to do a couple hundred. We talked about it yesterday when we did the Tesla one. I was like, this is a little bit, $300 for a calendar call, a little bit higher than I want to play, but I did it anyway. But as long as you keep risk small, you're fine.
Yeah. And
which one did you do? 500?
I think it was a 500. Yeah.
Which it's coming in. The 8-day is coming back. The 1-day is worthless, which obviously is going to be the case.
Actually, no, I did the 475. Sorry, I was thinking about 500. I ended up doing the 475.
Okay. So yeah, the 475 has gained back a lot of value into this rally for sure. Yeah. It was as low as 94 cents. It's trading at 250 now. So if you get a continuation to the upside, you'll be just fine.
For those asking, yeah, I mean, I'm probably going to just hold on to that call in the next expiration. It's $202.49 right now. I'm probably just going to hold that thing.
Yeah. You need 15 points to get back to $5 or whatever the cost was.
We know Tesla can do it if any stock can.
Yeah, for sure. But yeah, we've got treat trade ideas for you as it is Thursday. It's beautiful October 23rd, Thursday. We got NFL, we got PGA, we got it all.
Got Natasha's birthday.
We got Natasha's birthday. Happy birthday,
National
Natasha.
Slap a Coworker Day.
It is. Yeah.
So
we should have set up
I'm head on a swivel.
We should have set up a power slap stadium stand where two people can just go at it.
Yeah, HR would love that.
Yeah.
They're like, ignore that. Fill out your surveys.
Yeah. We just had to do it in the green room over there.
Yeah.
The perfect
it's like
spot.
Fight Club.
Yeah.
It's like on the Ocho.
There we go.
Yeah, that was nice.
No, thank you. Just the thought of that, oof.
Dude, no.
Yeah.
No.
Just stings.
Those don't look like slaps when they land a lot of times, too. There's a lot of force behind those.
It's like you're hitting it with of your palm.
Yeah, what is the strategy, by the way? Is it hip?
Definitely.
I'm curious.
Well, the crazy thing is all those people are getting CTE.
Oh, yeah.
Deep CTE. Yeah. At least in the UFC, you can protect yourself for the most part. Yes, you can lose, but you're not getting knocked out every single time you lose.
Oh.
It's insane.
Yeah. True. Just thinking of going rigid after getting slapped in the face. No, thank you. Anyways, like you said, lots going on tonight. Lots going on today.
But yes, join us on the YouTube chat. We can get to your questions in just a few minutes here. But yeah, let's walk through these trade ideas, see if anything speak to you all listening or watching the show. I'm going right back to the well. This has been a nice little trade here, and we are getting some decent implied volatility for tomorrow. So I wanted to take advantage of that with the cookie cutter SPX 1-day iron condor. So I've been doing these basically exactly the same every time. I'm collecting $200 exactly with $300 of risk for a 5-point wide iron condor. I'm going to the orange bar expected move. So if you're in SPX on the tastytrade platform, just going to the short options where the orange bar is. So we actually saw a move from where I put this on, but 67.60, 67.65 on the call spread, 5 points wide, and then 66.70, 66.65 on the put spread, 5 points wide. I like doing the chicken iron condor where I'm bringing the strikes in, collecting a little bit more because I am holding this overnight. So if there is an overnight gap up or down, I want to be collecting more rather than less. I still have the ability for the market to move to my strikes or in between my strikes. If that doesn't happen, or if that does happen, we can have a reversal the next day. But ultimately, getting $200, I have a GTC order in to buy this back for $100, and it's been a good trade. I've had one or two max losers, but the rest of them have been $100 winners. One of them expired worthless on a reversal. But yeah, it's been a great trade. So going back to the wall with this, we're seeing a 50-point projected move for tomorrow in SPX. It's actually down to 43 now, but covering a nice wide range, almost 100 points, where all I need is SPX to move within that range tomorrow, and this will be a profitable trade.
I think I'm going to join you.
Yeah, it's fun.
It's fun.
Yeah, it's fun.
It's quite fun.
Cute and fun.
Quite demure.
Quite demure, quite mindful.
All the way around then. I will too.
Let's see here. All right.
Look at how you get so.
It's such a hit, right?
Look at how you get so fly.
Just the background music as we're setting up the order.
All right, I'm filled at $2.
There you go.
$2 Chuck.
There you go.
That
All right.
sounds horrible right now.
That's it.
All right. It is now on the follow page as well.
Cool.
Cool. All right. What say you?
Moi? Mm-hmm. I saw Quad U. And
What say you?
Yeah.
I should have said. That would have been better.
I saw Quad U. I saw this trade and I was like, wow. So obviously stocks trading around 22. And if you look at the 40 call, which is, I mean, just almost 100% to the upside, you can sell this thing for $2.05. Now, either I'm about to blow out spectacularly and the stock is about to go moon, or this is a great trade. Actually, some volume in here, too. You can see a lot of volume trading probably in a lot of these names. But this name has definitely been trading a lot of volume recently. I'm seeing volume of 1,400 contracts traded on that line, which typically you don't see that many on like 100% to the upside. But that's kind of gives you an idea what's going on in these names. So, yeah, sold those for $2.05, the 40 strike calls and Nove. And, yeah, I know it has earnings. I typically don't love to trade something that has earnings coming up. I couldn't resist on this one. And I typically don't sell upside calls naked, but I couldn't resist on this one either. So, again, 93% pop. If you're going to beat me on that one, go right ahead. I'm playing the numbers.
Interesting.
Yeah, they have earnings November 3rd. That's pricing in a 7-point move in that cycle. So you're getting that's where the volatility is. But even still, over the next week, pre-earnings, you still have a 5-point move. So this thing is still projected to move aggressively. I like the trade for just basically fading a move to 40. But this premium is so flat. You could also do something like a ratio spread.
Yeah. I was looking at like a broken wing.
Yeah. Like a 30-40 ratio spread, you're still picking up 80 cents. And your break even is up at above 50. If you did something like that. But yeah, there's so much premium here and it's like all flat.
It is.
It is nice.
Interesting. Okay, I might see what I can do in there. I don't think I'm going to go naked call because knowing me, that will be, like you said, like
straight to 60
coffin. Yeah. But it is, I've never dabbled in this before.
Yeah, I've been like watching, as Mikey knows, like I've been watching this whole space between them, the rare earth stocks, and it's been really interesting. I'm some of the energy names like just been interesting more recently, and yeah, I typically don't do upside like that naked, but look, I mean, 100% move to the upside if it's really going.
Right.
Hey, I lose, whatever.
Yeah, I hear you. All right. Well, I am coming in with a futures trade. Surprise, surprise. I was having a conversation with somebody at CME lately, and they were talking to me about, we've just seen such an explosion in the use of the micros and the minis, and, therefore we're seeing an explosion in just like people like us, like retail traders, getting more involved in the future space. So, and that's kind of the new gateway drug for futures, if you will. Like, I love the network for everything that we've done for options and how transferable equity option knowledge is to futures options knowledge. But today I just kind of wanted to come with something static for those that are considering adding futures to their portfolio in a more right-sized way, or like for something that's more apropos for their risk tolerance. So I started looking at the currencies. These names have single-digit volatility, so if you are new to futures, that's why I think that they might be an ideal place to start. They don't move a whole lot unless there is some type of world event and or like economic announcement. So for instance, I believe yesterday or the last couple of days, like the Bank of England kind of talked about inflation in September and where it was relative to what they were expecting. So I decided to add a little bit of British pound exposure to my portfolio in a teeny tiny way. So I am just nibbling very small long on 1 micro pound. So that is 1/10 the size of the /6B contract. You might ask me, Katie, why didn't you look at like the pound ETF FXB? Well, if you look at the options chains in there, I mean, there's no premium, there's no liquidity, there's no volume. So you really can't participate by using the traditional ETF. So this way, you've got the 23 hours. And as you can tell by this snapshot, which is actually from the Active Trader tab on tastytrade, it's only $220 in buying power. So if you're used to trading like, a 5-point wide spread in equity options, or a 10-point wide spread, like this comes in, within what I would consider like your probable risk tolerance. I got filled at 133.27, and by using the buying power as kind of my guard post or my guide rails for my P&L targets, like 50% of the buying power, so $100 give or take, would be, I think, a smash hit in this instance. I would be happy with anywhere between $50 to $100 if we saw a little bit of a rebound in the pound.
Rebound in the pound.
Rebound in the pound. Yeah. And while we're on the subject of just like Active Trader, I don't know if people have discovered that yet, but figured we'd shout it out here. Nice. The tastytrade team has recently redone the Active Trader interface. So it's great if you are kind of looking to see both a chart as well as kind of the price action and the order book on the same interface. And in the last couple of days, they've actually released multi-chart, multi-ladder. So still in beta, but if you're on the web-based trading platform as well as the desktop, you'll see the ability to like add a section. So that means you can add another chart or another ladder if you're just like wanting to be a futures guru and sling them 7 different ways. That is now available to you as well. So check it out. Kick the tires.
Kick the old tires. I've got it pulled up on the platform if we want to go back to it.
This and you can link certain charts with certain ladders, which is cool.
Yep. But yeah, there's a ton of stuff here. I would check out the Help Center article. If you click the question mark in the lower left, you'll find an Active Trader help article to help you navigate through this. But yeah, I turned on one-click trading. This is another feature of this view on the trade mode, Active V2, which you can get up here in the drop down. But you can turn on one-click trading, and that will enable you to just click one button to get in and out of positions. So I'm just going to follow Katie here, and we'll smash. What are we at? 1332. Let's smash the 19.
A couple ticks lower than me.
Yeah. So I clicked it once. I have one order in to buy one contract. We'll see if we get filled on just one little tick here. Come on now.
I'm long the pound on the Tasty FX count.
Okay.
2 microlots.
There you go. Yeah, Tasty FX, of course, a great way to get the same or similar exposure. But once this fills, if we can get literally one tick down, which I guess is impossible, I'm gonna just move it. So you can I just clicked and dragged it up to move it.
Great.
Yet again. There you go.
There was
filled at 13321.
No asks.
So now what's interesting is, so you'll see here, now I'm long. You can see it on the chart here. I'm long at 133.21. So if I'm just sitting here watching this thing, I can flatten the position. So this is a one-click flatten where you just get out immediately. So if you're doing this for a binary event or you're doing this day trading, whatever, you can flatten the position. You can reverse the position. So it would make me short if I clicked that. But yeah, nice feature. You can enable one-click trading in the upper right here, and you can be super active with the minimum amount of clicks to get in and out of orders. So love to see it.
Yes.
Little shout out for the futures folks out there.
Mm-hmm.
BT Dubs, Tesla, only down 25 cents. And thereabouts. It's fluctuating around, but
you have the 8-day 475.
$1 as soon as I said it. Yeah.
Yeah, so it's gotten back $100 in this 4-point move. So just goes to show how sensitive these options are still to delta with 8 days left. But the 1 day is still worthless, 475. So actually it's gained a little bit back, but not nearly as much as the 8 day. So that's the nice thing about those calendars is if you're doing short-term calendars, even if you get a move against you, your long option has already been reduced by 30, 40, 50, 60, 70, 80%. We saw at Netflix, it was like 80%. So you have a lot more space to be successful with that type of trade if you get a reversal.
Yeah, it feels like it's like, so you're saying there's a chance. You know what I mean? Like essentially is what this trade feels like when it does this on earnings and then it starts to come back. You're like, okay, for my 8 day, you're saying there's a chance.
Yeah, what a reversal. Crazy. All right, popping over to the YouTube chat now.
What's up, chat?
There are 5 billion phone plans worldwide.
5 billion, and how many people? 9 billion? 8 billion?
I mean, yeah.
But I guess you could have multiple phones on one plan, right?
Listen, again, if you're living in the hills of like Mongolia, I don't expect you to have a phone. I mean, I don't.
Yeah.
I mean, they're a part of the however many billion people we have in the world, but that's not what I mean. I need some type of differentiation for it, but I would love to know, like, is there anybody in the city of Chicago who owns a home, owns a car, and doesn't have a phone? I don't believe that exists. Is really what I'm getting at.
Yeah, no. There's no way.
Or renting a phone and renting a home and renting a car. I think you have to have a phone. You almost have to have a phone and a car nowadays.
Yeah. I don't have a car. I guess my now husband does. So I guess I'm not like.
Yeah, see, what's yours is mine. What's mine is yours.
Yeah, I mean.
So that car, huh?
Oh, well, you have to drive it till the wheels fall off.
Oh no, Katie, that's your car too now. You know that, right? It took me a long time to come around to this realization, but you just have to.
I know.
Okay?
I know.
That's what it is.
It's still, I've still got my things versus his things, but I guess it's our things now.
I love my car. I'm driving my car for the next 20 years.
For the next 20 years.
Nobody can stop me.
That's what I did with my car, basically, until I got. So I don't even know if I tell you. This is like a couple weeks ago. I got a Bronco.
Nice.
That's right. Oh yeah, you rode in it. That's right. Right. You rode in Bronco Chandler.
What color?
Red. Yeah.
Nice.
Yeah, we love Bronco Chandler. Bronco Chandler's great. But yeah, I rode my car for like 15 years into the ground. It was great.
Yeah.
It was like whatever. And it's a total different mindset when you have a car that you've had forever.
Yeah.
You'll park it anywhere. You don't care where you park it next to, whatever. But then you get a new car and it's like, oh God, it's like a baby and you got to like park away from everybody.
Yeah. Get those little like rubber bumpers on your bumpers.
If it looked cool and I could.
No bumper stickers though? No, like my kid is an honor student
Hell
at XYZ
no.
High School.
No way.
That was the classic one.
No. Mm-mm. No, not a bumper sticker guy.
Yeah, I was never an honor student, so I couldn't provide my parents with that bumper sticker.
You weren't?
No.
I feel like you were very studious.
I was, but I just wasn't getting like 4.0. I was like a 3.3, which is unfortunately.
That was me.
It's like a B average or something?
It's like A minus.
Oh, okay.
Yeah, I was like 3.3.
God. Remember when like GPA mattered so much?
Yeah.
Yeah.
Now it's like.
Now my
realize
biggest
it's a farce.
nightmare. My biggest nightmare now is like I'm wandering through the halls of my old high school and nobody's there, but I have a test and I can't find the room.
Mine is my locker.
Yeah.
I forgot my locker combination. I'm like, oh God, like I can't get in. Yeah.
Man, what a time. All right, what are people asking in the chat is the real question.
People loving the trades. Love that. What's the difference of doing a currency trade with futures versus Forex? Is futures better price fills? So the main difference is sizing. So Forex, if we look at the TastyFX platform here, we can see my positions. You can create positions as big or small as you want, but I'm doing 5 micro lots in terms of my tranche size, which is very small. So like the Aussie dollar franc, you can also get more creative with the pairs. There's way more pairs in the TastyFX world versus the futures world that are actively traded. The futures are mostly USD based, so Japanese yen, euro dollar, Canadian dollar. You can get non-USD exposure in TastyFX. But yeah, I would say the biggest differences are more pairs to trade. Sizing is completely up to you. and you can make your size as granular as you want it to be, and it's a continuous hold. So continuous contracts in FX, so you don't have to do the rolls. The rolls are baked into the daily adjustments. So yeah, I like tastyfx because it's like a set it and forget it trade for me. To where I'll just let it run if I have a loser, or I'll add more tranches. Like you can see my short dollar CAD trade here. I've added 3 tranches. We're trying to get back here. I'm trying to keep my perfect record with tastyfx trades.
Short dollar, long loony.
Yeah, we should get more long dollar trades in here, but
Just to set.
That's all I do.
We'll blame Glenn for this one.
Blame Glenn for everything.
Yeah.
He got me doing. Well, he didn't get me doing karaoke again at the holiday party or the employee party, but I did do another song with him. So we took it back to Miami.
Yeah.
We did Bowling for Soup again.
That was honestly the first time I ever hung out with him, was when he did karaoke with you, and I was like, I kind of like this kid.
Yeah.
I kind of like this
Good
kid.
egg.
Yeah, he is. Yeah, he is.
Yeah. Brings the fun.
Yeah.
But yeah, those are the big things. And then another thing, you can get paid to hold positions. So like euro dollar, if you see a positive swap bid, that means if you short the euro dollar, you get a small payment each day based on the adjustment because of the interest rate conversion. So just another thing, like I'm long this dollar franc position, and this dollar franc pair, if you are long it, you are getting paid to hold it. So I really like those positions where I want to be long anyways or short anyways, and I'm getting paid to be in that position.
Aussie dollar, Swiss franc.
Yes.
So exotic.
I know, it's great.
Yeah, he's gotten real exotic with some of these CFX trades.
Okay.
But yeah, it's been fun.
Australasian.
It's been fun. Australasian, yes. That's the one I can't ever remember.
I know.
It's time for me
I should have just let him pronounce it. It's great.
Australasian. Okay. Hopefully that helps. But yeah, you can open an account. If you don't have an account, when you go to this tastyfx tab, it'll prompt you to open an account through your tastytrade account. And then you'll see all the stuff we're showing here.
Project Pat.
He's performing on Halloween.
Is he?
I'm very seriously considering going, but we have that flight to San Diego the next morning, and I know that I would probably misbehave.
I remember my sister-in-law was asking me and my wife, like, you guys know probably a couple years ago, you guys know Project Pat? Like, yeah, we know this song. I remember this song. He had like one hit one, right? Definitely one.
He's got
a couple though. He's got a couple.
Stuff,
He's got a couple hits.
And 3-6 Mafia's coming with.
3-6 Mafia, man, I can't believe it.
Yeah.
I was in Atlanta when they first came out. They were like they were like a freight train. Everybody wanted to hear their songs.
Yeah, it's fun.
Yeah.
I don't know. I'm debating going. We'll see.
Yeah.
Wu-Tang just played at United Center like a month ago.
Really?
Did they? I don't think I even knew that. Wow.
Yeah. That's the benefit of when I walk home from the gym, I know exactly what's happening at the United Center before I even get to Madison, because it's just, my favorite one is when that country thing is happening.
Oh yeah. Oh my god, that's
because then I'm walking down the street, I'm like, these people are cosplaying as Southerners. They live in Chicago, and they are like,
the Nashville
no, I don't.
of Chicago.
Yeah.
Totally.
But yeah, if there's ever a Bulls or Blackhawks game, you know immediately.
Yeah, last night, because I drove by last night, and I noticed that it was like, oh yeah, Bulls game coming on tonight. And then Tate McRae is probably supposed to be there soon, right?
Tate McRae played last night or the night before.
Right, okay.
Because one of our coworkers
I saw the big
went.
thing on the side of the. Yeah.
Tesla positive. This call that you're long went from like $2.60 up to $4 in 15 minutes. So
sir, we will take it.
Love to see it. Do we have a profit target we consistently use? I notice you often take trades off much faster than 50% profit. So it depends. There's guidelines that we talk about, and then there's reasons why you might bend those guidelines. So, for example, profit target trades. So yes, if I'm placing a trade and my profit target is 50%, but I get 20% in 2 days, I know for a fact that I'm well ahead of my expected P&L curve if I'm just thinking of theta decay and implied volatility crush. So like, if you look up, so if you're on tastylive.com and you look up optimal management, you will see a ton of segments where we talk about just that. So it kind of lays out the average expected return for a 45-day trade, which is usually around 21 days. 14 to 21 days is where you would get 50%. But if you have a trade where like your max profit's $300 and I get 60 cents or 90 cents out of it in the first week, I'm likely just going to close that trade because I will be ahead of my expected profit curve. And with short premium trades specifically, the more profit you see on the table, the less you can make going forward, and you still hold all the risk and the risk of losing your unrealized P&L. So, yeah, we're taking things off the table quickly if they move quickly in our favor, and the taking off of that position means that we're booking a decent winner. Like, I'm not booking a winner for 10 cents or 20 cents in a day. Like, it's not enough for me to take it off. So I think that's important to say too. But yeah, for binary event trades, like earnings trades, those are more just like, if it works, we're taking it off. If it doesn't, we're managing it. But for your traditional 45 to 60 day trades or 30 to 60 day trades in equities or ETFs, yes, we will take it off at like 25% or 30%, or sometimes even less if that means that we're booking a 50 cent to $1 winner minimum, I would say is where we're at.
Exactly. I mean, for me, like, case in point, this is Quad U. We just put on today on the 40 strike. Like, this thing has already come in from when I put it on like 20 minutes ago or a half hour ago, whenever it was. I sold it at 205. The offer's at 195 now. So, I mean, you know, another 40 cents, I might be like, I'm out. Because I know this is a risky trade to some degree. I also know this is a very high probability trade as well. So, you know, just taking all that into account, I think, you know, Mikey said it best. It really does depend sometimes on the name, on what's currently going on. I like to trade a lot of event-related stuff. Case in point, like the BE, I'm sure to put. Sold that yesterday. I'm already up 27%. That could be one. If I get to 30%, I might analyze, like, just take this thing off because this moves around a whole lot. So certainly there are guidelines, but you adjust those guidelines sometimes based on what's going on with the name, what's going on with the market itself, you know, to that effect.
Yeah, so we had a call calendar spread on for Netflix earnings where we bought the 14-day, sold the 7-day for $300. And we were talking about how if we hold this past earnings, this could be a $300, $400, $500 winner or more if Netflix goes to $1,300. But a couple days, like literally 3 days after, this actually was a Friday trade, and then I closed it on Monday. So for one trading session, I was up $100, and I was like, okay, I'm just taking this off because I'm up $100 in one trading session on a 14-day trade. I don't have to hold this through earnings anymore to book a profit, and that actually turned out to be a good close because Netflix sold off. But
yeah, it was a smart close because I held it. It was a really smart close. I believed in K-pop Demon Hunters. He didn't, and that tells you what happened. You know.
But even still, this option is still not worthless. Like if you get a 50, 60 point reversal, this thing can go from 20 cents back to over $1 or $2, and you're fine. But
yeah, it's actually dancing around the 200 day moving average right now, and it's trying to find support here, but it's looked pretty weak after earnings.
But yeah, hopefully that helps. But yeah, everything has a degree. Everything has layers. It's not necessarily always, and you could do it that way. Like you could just be super mechanical and just ignore everything and just go with the mechanical 50% close. But there are going to be situations where you have a winner, a nice winner on your hands that's like 30, 40, 50%. And if you don't close it and it reverses, that can be a mental hindrance. Any other questions here? Let's see.
Somebody asked something about the platform. There's no issues. I personally think if you're seeing what you feel is artificially low IVRs, it's not artificially low. Just think back a year ago and where volatility was. It was actually pretty elevated compared to a year ago.
Yeah.
Yeah, this is a 52-week IVR, right? So everything that happened back in April is in there. Thank you for sharing that. Yeah. So like you're saying, I mean, it's just contextualizing where we've been the past year.
Yeah. So
in a sense.
In April, Tesla's IV rank was well over 100%. which tells you that we were setting new implied volatility highs in April. And now this is the new upper bound. The new lower bound, or the current lower bound, is in August at -10. So yes, IV rank in Tesla is low, but it shouldn't surprise you that you have a massive IV crush after earnings. But even still, this is where you always have to look at implied volatility rank or implied volatility percentile if you're using one of those contextual metrics, and you have to weigh that against the actual implied volatility of the product. So without even looking at IV rank, I can tell you right now, all day I would sell premium in Tesla if I'm looking at a 60% IV across the board. And that's just because even if IV ranks at 0 or 6, this premium of 60% is still plenty to give me, if I had a large account, I can still get plenty of return on capital for a short put or a strangle or whatever you want to do. Where if you look at GLD has an IV rank of 32 right now, but a 26% IV. I'm not selling premium in GLD. I have a short premium component in GLD, but it's a diagonal spread. Even if IV ranks at 60, 70, 80 in GLD, if I look at an 80 IV rank in GLD, I say, okay, but if that is a 30% IV, I'm still not selling premium because 30% IV is not enough in my opinion, to offset the intrinsic value risk that you have. Like to sell premium in an undefined risk way, I want to see 50%, 60%, 70% implied volatility, regardless of IV rank. And that's just because, for me, I think you get more bang for your buck with debit trades in products that have 30% IV or less, because the extrinsic value relative to the stock price is just super low, especially if you go further out in time. So that's where we get the zebras from, the diagonal spreads, calendar spreads. But like my year-long trade in IBIT, IV rank in IBIT has flown around. If we look at IBIT.IVR, we've gone from over 100 to well below 0. But if you look at implied volatility in IBIT, it's almost always been at 50% or more for the whole year. And that's what's most important, especially for a year-long type trade. Mm-hmm.
Question from the chat about like charting in Tasty. So Mikey currently has the desktop platform pulled up, and you can see what we were talking about earlier, where on Active Trader V2 there was a couple of extra like buttons and bells and whistles and things of that nature. So the question was like, will this eventually be replacing what is currently in the desktop platform? I can't say for certain what the future like holds, but what I can tell you is that the web-based trading platform, which is basically what this is pulling in the desktop platform, does have a little bit more of a robust feature set at the moment. So I could anticipate that would become like the new norm for the desktop platform. If you want to check that out in more detail, you can of course head to the web-based trading platform, or try to reduce the size of the ladder on this current interface if you are a desktop, diehard, if you will. I personally don't even have the desktop on my device anymore. I just use web, but I do. I'm not entirely sure, but I think that there is obviously a more robust feature set on this current interface, which, for some may be good. Otherwise, maybe you like it a little bit cleaner, but it's pretty user-friendly to add and subtract things at will.
Yep. Mm-hmm. And it gives you the ability to layer on different symbols. Yeah. So like, I'm looking at a chart of gold right now, and if you click the compare button, you can compare it to any other product, and this just shows you the difference between the two.
Yeah. And then if you could toggle back and forth between percentage or like performance or like just the pure outright numbers, depending on if they're close together, right? Like if you were looking at two tech stocks that were trading in the same relative range, you could just change it to actually seeing like the price action as opposed to just like the percentage return over whatever time frame you're examining.
Mm-hmm. So yeah, if you just right click on this, you can go to regular percent or logarithmic. So lots of cool stuff here if you want to utilize it.
Yeah. And so if you're new to Tasty and you don't even know where to go for the web-based trading platform, it's just my.tastytrade.com. And then you can just sign in with your typical Tasty credentials.
Mm-hmm.
All right, time for one more.
Yeah, pre and post market data on the chart. You can, you just have to go to like a 1 minute or something less than a day, and it'll pull up here. So like Tesla, you can see from 7 a.m. through 8 a.m. to 8:30 open. So that's pre and regular market. And then you can go back to yesterday too, where it was trading after hours. So it dropped at 3 o'clock, ripped higher, 3:30, sold off. So you can get continuous as long as you have a time frame that's less than a day. Is that it? I think that's it.
I think that's it.
Perfect. Well, that wraps up this edition of Options Trading Concepts Live. If you want to see anything in future episodes, just tweet at us. I'm at Trader Katie. Mike is at Trader Mikey B. Jamal at Jamal Chandler. Ooh, lost my voice at the end there. Good luck, good trading, go golf, go football. Let's go eat some chicken.
Yee.
Peace.
Peace.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
This is Breadwinner Trivia here at Tasty Live. I'm here with Nick Batista. We're going to present him 4 questions. If he gets all 4 correct, I have to make him a peanut butter and jelly sandwich. Let's dive right into it.
And I'm hungry. I want 2 of those.
Which commodity is often considered to be a safe haven asset?
Gold.
Gold is the correct answer.
The shiny rocks, boomer shiny rocks.
What does the Sharpe ratio measure?
Return relative to risk.
That is correct. What is a credit default swap?
It's a credit that originates somewhere else, and it's traded for different amounts across many different parties.
That is correct. It's not gonna exactly match what they have on screen here.
No, come on. I'm not the smartest guy here.
For all the marbles, for the PB&J, what is the national animal of Scotland?
It's the Highland cow.
It is a unicorn.
What? That's a trick question. I hope nobody heard that, because I want to see a peanut butter and jelly sandwich get made.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
What's going on, everybody, and welcome back to Risk and Reward. Another volatile market. We're kind of ripping it to the upside, maybe a new all-time highs. I don't know, but we'll get into the platform. We'll get in touch with what other news that we got coming up here soon. But before we do that, Gus, how are we doing today?
I'm smiling because I've just noticed that we're matching, and this is like
I know. I saw your smirk and it threw me off for a second.
Yeah, I don't know. I've been sitting next to you all day, obviously, but it's just occurring to me right now that we are matching again today. I know that we were matching.
We got the collar going and everything.
Yeah, exactly. Yeah, we were matching yesterday, and the white. We don't plan this, guys. I promise we don't plan this. But Errol and I just like our staple muted colors.
Exactly. No, I like it. No, you've been walking in with the fire quarter zips, so
I have quite the Rolodex of quarter zips.
Yeah.
They're so versatile.
They're fire. They are versatile, especially fall season. I mean, perfect.
Well, yeah, and it bridges all the gaps. Like you're going out with friends. It's not like the quarter zip is too dressy, but
you go right after the studio.
Work and it's yeah, exactly, exactly. So yeah, I'm a big fan.
100%. I hope everybody's doing well. Kim, Whit, Jared, Stefan, everybody else. Hope you guys are doing well. Glad to see you guys today. I know the market's been volatile. Volatility collapsing on us a little bit. We know that the market's ripping to the highs right now, so we'll see what we get there. But before we do get into it, I mean, what's standing out on your end to you, Gus? I know Oracle has been one that's really been catching my eye, selling off many points, bouncing right back like nothing ever happened. Is there anything that's sticking out on your end? And you guys let us know. What are you guys looking at? What are you trading? What's sticking out to you?
Yeah, you guys are maniacs in the chat talking about being short puts in Tesla and Palantir at the same time. That's insanity. But it's a boring answer, but VIX is honestly what's had me captivated today. We finally have gotten the crush there, so I have that turning over into a winner. I was surprised with all the earnings that donked this morning. I know IBM had a rough morning. Holy cow, they've gained it all back. It didn't matter at all.
That's what I'm saying.
I know Tesla had a rough morning. Holy cow, they've gained it all back. It didn't matter at all.
No, it doesn't make sense.
The market cares not for frivolous things like fundamentals. Okay, the market cares about vibes, and the vibes are high. So, I mean, just those earnings movers that have made the full corrections by this point are kind of my the main things that I've been watching today. Wish I would have scooped some longs at the bottom, but it was very. I respect anybody, especially you guys who are short Tesla puts. If that's a naked position, holy cow, I respect the cojones to put that on because that's nuts.
No doubt, and I mean to that point, the overall market like Nasdaq, we didn't even try to sell off from the open. We actually ripped to the upside. We tried to consolidate for a little bit around noon. I mean, I guess it's noon right now, and then into the afternoon, trading towards its highs. And then now that you mentioned IBM, some of those other tickers, everything's at its highs right now. The whole market just getting dragged along. So we'll get into the platform here in a moment and see what positions we got on, see if we're going to do any management and go from there.
Yeah, no, it's very interesting. It was this. I mean, on the earnings, I mean, you and I were talking about it earlier today. I was like, with all these earnings open in red, like I think that this has to be a red day, and that just has not manifested at all.
Yeah, no, I mean, it's been a really crazy day. I mean, even on social media, sometimes I'll just try to get a feel for what the sentiment is. The sentiment was extremely bearish.
I know,
which was like caution signs at the same time, seeing that. But I mean, right at market open, pre-market, a lot of people feeling very bearish right now.
Well, yeah, and I always think it's funny when you get this kind of post-earnings action in these individual names, because, I talk all the time about how I like to trade over extended earnings. That's like a favorite spot for me is when earnings go too parabolic and I trade the other direction. Like, that happens all the time. Usually when I'm placing a directional trade like that, I am not expecting a full-scale recovery and or collapse to the levels that were there before earnings. I'm expecting a little bit of one of those two things to happen to be a profitable trade for me. And so I just think it's really interesting because markets are efficient. Right? So when Tesla reported earnings this morning, the efficient market said this is terrible and Tesla needs to be valued lower. And now, 4 hours later, the efficient market is saying Tesla is awesome and I can't believe we sold off in the first place. And I always think those kind of things are interesting and nuanced. And obviously, it's pre-market, especially that pre-market volume is mostly institutional, and then retail begins to enter the market a little bit more during market hours. So be interested to
that efficiency seems like it's quite volatile in terms of what is efficient at this moment. Because to your point, we sold off. We're right back to where we started.
Yeah, it's like which price is right. We just the Tesla's earnings
maybe both were right.
Don't matter.
For the time being, for that hour of window or 30 minutes of a window for whatever new. I don't know.
Yeah,
so great question.
Yeah, it is interesting. Jumping over to chat here. Ooh, Stefan. I kind of like that. I did notice you called Steven Stefan. I was like, that's a little French. Gen Z, Mike and Nick. That's absolutely right.
Which one's the tan one? I'm just kidding.
Gus, I'm a Razorback fan. How much can we buy your football coach for? LOL. $1 billion. I love Mike Elko. If Mike Elko has 0 fans, I am dead. I love that man. We gave you Petrino. We tried. We tried to give you a football coach. Driving right now, but I'm all ears. That's great, Rancher. We speak here, so that works well.
We speak here. We talk. We got audio. You know what I found the other day? I found the risk reward watch list. We built that earlier this year.
We did.
We're going to check it out, go through that a little bit too. Maybe we add some new ones to our watch list. Maybe we take some out. We'll see what gets kicked off the boat, but the risk reward watch list is alive and ready right here.
Yeah, that's a good call for sure. We haven't revisited this
been a while.
Ever. We were excited when we made it, and then we just never looked at it ever again.
I took a peek at it, and I was actually curious to know what underlyings were on there. So it's going to be fun. We're going to go into this together, and we're going to be like, oh yeah, we threw that in there. Oh yeah, we threw that in there. Oh, get that one out of there. So we'll see what our initial reaction is when we go through this.
Yeah, it's crazy telling us like over 6 months since we made this list. It feels like very recent.
It's 6 to 8 months potentially.
Yeah,
it's getting up there. No doubt.
We'll see.
Yeah, we can pull up the Tasty Trade platform here, and we'll get into some of these. We'll get into the risk to reward watch list. And if you guys have any ideas that you want us to throw in our list, these will be tickers that will come back around pretty frequently. So if you got any fond of any tickers, let us know. We'll get it in there.
Also, Mike, your name is Mike Evans, so we will accept you at Texas A&M if you wanted to switch. we could do that instead.
Mike Jones. Starting off at the top, we got good old VIX. Good old VIX coming in a little bit now. Volatility popped, volatility contracted. Very quick story. Nothing much to write home about there. But MJ, some of the wheat stocks. I forgot we threw that in there. The ETF here.
Well. Easing regulatory environment for the wheat stocks.
Yeah.
Well, nothing concrete yet, but seemingly easing regulatory environment.
Yeah, it's been beaten down a little bit. IV rank is 29 right now. The thing that stands out on this underlying is the fact that the volume is almost dead. I mean, we got 39,000 shares traded on MJ. We can see what the market cap is because it's always relative, right? But it's pretty dead. Not too active right now. Pretty choppy when we look at the chart as well.
Can you zoom out to the yearly and tell me if you also see this candle in February?
Let's see what we got. February. So we're back a year. Go all the way back to February. Oh, yeah, that's definitely.
I can't find the top of it.
Are you talking about the... I'm glad you said that because I was already starting the scroll.
Oh, I found it. It goes up to 302.
Okay.
302. Yeah, there you go. That's a chart right there.
There you go.
I don't know what happened here. Obviously,
this is what the market is going to look like when AI takes control.
Yeah, it's some kind of clearing error or something.
Have you played with the idea at all and just sitting there thinking about it, like how you think AI might affect trading or just the industry as a whole? Like when I think about it, it's like I know we're getting new elements of AI, but we've never had this level of AI. And you would think if there were things out there right now, right, hedge funds would be implementing that like as we speak. So I would just think how does AI affect the trading environment at all, or the industry environment? What comes to your mind when you hear that?
Yeah, I mean, I definitely think that it has very interesting implications. I mean, obviously, algorithmic trading is a thing that's been around forever. I mean, since the dawn of computers.
Right.
But this just feels like the next level to that. There can be more nuanced decisions that are made. Like, I don't know. Like for instance, I don't know. I think that AI for sure will make algorithmic trading much more accessible to retail traders if that's something that they want to pursue. It's never been something that I found particularly interesting, but if you're a super sharp technical retail trader, I think that with AI really just where it is now, I think if you download Windsurf, you could probably code your own trading algorithm. So I think that's one interesting element of it. And I'm also interested to see how much to that end it is able to level the playing field between institutions and retail as well. Because that's always been something, is that the institutions have, entire teams of data scientists and engineers that work tirelessly to build these algorithms and maintain them and make sure that everything is running smoothly. But if you could have one AI write the algorithm for you and run it, and another AI monitoring that and your returns and everything, and maybe you could even have the second one actively making tweaks to the first one as it makes reads. I think that that's all very interesting, and I think that it will just help get a little more of that human element into algorithmic trading.
Right, well. and that's the one thing I feel AIs and robots have always lacked, and that human element almost feels like sentiment, context, however you might want to describe that human element that an AI might need. But it is just an interesting topic to talk about because I know it's just more of a trending topic right now, and I'm just always curious to hear people's perspectives because I don't know. I have no clue. I don't even know what people are building right now that they got up their sleeves that they're going to eventually release to be a little bit more disruptive. So
yeah, and I think that it can make like the mathematical elements a lot easier too. Like something that I will use AI for on occasion is I will say I have an option that's down or up X amount. What will it be, what's my break even price, or what will it be worth at this price? Because I'm obviously we're trading on the asset, but we are dealing with options which are sort of separate. And so, yeah, instead of doing all the mental math with the Greeks, I can just fire into ChatGPT real quick and say, I'm holding this option with this expiration. It's worth this much. What will it be worth if this goes to this? And then you have to give it some Greeks and volatility and everything, but it'll figure it right out for you and like little things like that.
Yeah, that'd be super. Almost have like your little buddy, like your little AI buddy. And I don't know if you saw the post about Robinhood, but Robinhood did come out and present some type of new AI features. I think it was more so just to get into the headlines. We got Robinhood pulled up right here. They're not doing too bad. I'm not gonna lie. They're doing pretty well.
Everybody rolls out these AI features, and every single time, 100% of the time, without fail, it's just stuff that other AI already does. So all they're doing is just integrating a LLM into their platform, which is nice. I mean, it's nice to have things quickly accessible like that. But
100%.
Ultimately, it's no different than just having ChatGPT on a second screen.
And I mean, that's exactly what the presentation and I'm surprised Vlad and them did that because I was like, it's literally a branded Robinhood ChatGPT. How is this so revolutionary? I don't know if it was just let's get a head start on the conversation of AI. Let's get our shareholders a little bit excited that we're thinking about AI. We're going to implement AI in some way. But when I seen that, I was like, it's cool that you guys built that, probably have it on your platform or whatever, but it's like I could just clip my tab to ChatGPT and use the same exact function.
Yeah, and I'm sure that they have the legal jujitsu in the terms of service that you just click through that you're not able to sue them for bad advice that this AI gives you. But even with that said, I would be shocked if a lawsuit does not pop up in the coming months as a result of that integration because, it's like, I mean, you could even manipulate it to say whatever you want. I see all the time people will when they're dealing with like a customer service, like AI chatbot, they'll do funny things to them or like send like lines of system code such that the chatbot will override itself and just start spouting whatever. And I always think that that's really funny. And I think that you could I think that's pretty much something you can do with any LLM. I know that there's security issues going on with the ChatGPT Atlas browser right now because people are able to, because it's an LLM and you can speak to it in plain English, people are able to hack your information much easier because you can just enter prompts on the back end. Right. That's my understanding of things. I'm not a data scientist or a machine learning specialist, but it's interesting. It's got maybe scary implications.
Grumpy Mike says, I want an AI that yells at me when I do something stupid. That would be useful. What you're talking about is a coach, an AI coach, is what you're talking about there, Grumpy Mike.
You could pretty much assemble that now. You would just have to tell it every time you do something stupid. It couldn't wash you until you do something stupid.
I will say
that's called a wife.
Grumpy Mike and Big Deal, just that duo is crazy. No, but with that being said, we'll see where the AI landscape takes us. Not to take us too far off track here. We got VIX, we got MJ, SMH. We got the semiconductor ETF. Semiconductors have been a little bit more quiet, but they've been making moves in silence, right? They're consolidating a little bit at their highs here, so they haven't had any significant pullback this year so far. IEUR was
that
MSCI Europe
That sounds
ETF.
like a Europe ETF, yeah.
Yep, Europe ETF indeed. This one's been sitting at around $69.
You got to keep up with what's going on in the other continents.
I love it.
This is a nice channel right here. This makes me want to get short and then get long and then get short and then get long. This is bouncing.
This is nice. I mean, they do things simple in Europe, I guess. We'll keep this one on the back burner. Look, we can't get too married to these. All right, we got to take it at least one or two or three. We got to relegate three underlyings in our portfolio.
It's worth noting also that the Europe ETF it totally experienced Liberation Day when that went down. They got some lows in there. Just remember that next time somebody tells you America is the most powerful economy. We tanked Europe.
So everybody's economy bounces back. Bounces back. QQQ in the list. Got to always have that in there. We got steel. Steel has been a little quiet. I haven't traded this one in a little while. I'm not sure why the
move up is from, this is total conjecture. I do not know this for sure, but I know that Ford Motor Company just announced they're moving back to steel for their body construction.
That's huge.
They had an issue with their aluminum manufacturer, so perhaps they signed with U.S. Steel. I'm not entirely sure.
I got you. They popped. They're holding their gains so far.
Well, that's like months ago, though, huh?
It wasn't too long ago. I mean,
Ford news
the pop in steel.
This week.
The pop in steel was about maybe, 2 weeks ago, May 20. Oh.
Wait, is this unlisted? Did they unlist this?
This looks unlisted.
They totally unlisted this.
So I know back here, if we can go back a little further, the last 2 times I had traded steel, there was an acquisition that did not go through, and I happened to be trading this at the time, and it tanks. It happened to be one of the times that I was trading an undefined risk strategy. So some of those names were, seem that they could be a little bit more safe. Sometimes they will catch you off guard. Steel was kind of one of the bread and butters for the cheaper underlyings.
They were acquired by Nippon Steel, the Japan company, in June.
Okay.
And so they've been delisted. They're listed on the Nippon Stock Exchange now.
Okay.
But the single letter X ticker is available. So if Elon doesn't get on that, what are we doing?
Well, that also means that we got to take steel out of the breadbasket of risk and reward list.
True. Yeah, we gotta give it to Bootsky.
The Bootsky. We got J&J, Johnson & Johnson, trading at around 192 right now. Volume trading about 2.5 million shares today, 17.5 IV rank. Not extremely attractive to trade here. I don't even think to sell much premium on either.
Yes, everybody
we'll
in chat, you absolutely beat us to the punch on Nippon Steel. We were unaware of that. But yes, you are all correct, Greg, and
Knew something was off when their quotes weren't populating.
HKMB? Is it HKMB Lane? I'm not sure. Beelamine? You know who you are. I appreciate the comms on Nippon Steel. You guys are great.
LMT Lockheed Martin, 14.5 IV rank, around 600,000 volume or shares traded on the day today.
Yeah.
This thing's been going ham over the last couple years.
Yeah, when there's war, Lockheed go up.
Yeah, I'm just trying to remember when and why did we put LMT in there? I'm not complaining about any of our underlines, but I'm like, man, when did we talk about this?
I don't remember exactly what we called it. I think we said we were doing like a war ETF or something.
Okay,
I think these are companies that, or maybe we just said crisis ETF. Like, there's a few companies in here that benefit when there is turbulence in the world. Was the thesis there?
We got GEV. Trading at about 2.5 million shares, very low IV rank right now. Probably going to definitely clean this list up a little bit. I mean, even just looking at the daily chart, sometimes with how choppy these candlesticks are, it's like, man, I don't even know if I want to be in a market like that. But we got GEV, we got Tesla. We're going to keep Tesla in the breadbasket. It's only right. This looks like a very difficult market to trade for Tesla unless you were selling premium over like the last 2 or 3 weeks. Tesla, we got WM, we got Waste Management. Over or a little under 1 million shares traded. We got Eli Lilly, we got Apple, we got Palantir, Pfizer, Uber, Humana. What's that company?
I don't know why we have it.
I was like Hummus, Humana.
I have no idea why we have Humana.
Let's see why. Not trading many shares today. Not super liquid. 25.5 IV rank. They have earnings before the bell on my dad's birthday. That's what we're gonna call November 5th, so that I don't forget. And then we got Lyft, we got QCOM, CMR, DKNG, NVIDIA, BABA, and AVGO. Any of those stand out to you? We can add more to the list. I know we've been talking about Oracle a little bit more. We could probably add Oracle.
Am I still long some AVGO? I was long them forever out of a dip. I'm not.
You in there? No.
What?
No more AVGO?
No more. No? But yeah, I think Oracle. I think we could. Well, I guess quantum is kind of.
We got healthcare.
I've been gone by now.
Insurance.
Yes. Big deal. You asked, right? Yes. Big deal. Lockheed Martin does pay a quarterly dividend. Is the answer. Yield is 2.82% annual. Quarterly dividends this year are $3.45 per share.
I'm gonna add Oracle to this list. You on board with that?
Sure.
You guys on board, chat? We'll do some Oracle. I think that one's gonna be pretty active, at least for a little bit.
Let's straight swap Humana for UNH.
Okay. UNH?
Got to.
We got some UNH. Do we want Beyond? Is Beyond dead? Is anybody trading Beyond still? Is anybody looking for a dead cat? Or is everybody taking that off the table?
I refuse to put Beyond in this freaking thing.
No, so do I. But chat, we'll do it for you. Is anybody trading Beyond right now? It's been getting hit.
It kind of has bounced back a little bit. Errol and I were discussing this morning. It's going to be very interesting to see how Beyond settles in here, because this was a substantiated move due to Beyond Meat being added to Walmart stores, followed by a meme move to the upside. And so it's going to be very interesting to see where the market lands on fair price for Beyond, because all we're really trying to price in is the Walmart news. No meme stocks. Heck no. Everybody's off it.
Dead. Everybody's dead. Everybody's dead.
Good. Yeah, I agree. No meme stocks. Do a fun stonk like Poet.
Poet, what do we got? Let's see, 8 million shares traded on the day, 55 IV rank. It's a cheaper underlying.
Is.
But it's
oh,
got
yeah, we could just add the meme ETF. That's a good point. If we ever just want to track the
we could do that too.
Meme thesis.
I think that's better than adding like 7 meme stocks. Just put the ETF in there.
Ticker meme.
In our list at least.
Yeah.
Cool.
Gus is beyond. Indeed. I'm fine capping my gains at 100%. Good job. No, not serious on Poet. Okay, I was gonna say I think we're getting a little low hanging there. I'm down for some fun companies though, like.
Yeah, Lone, what's going on, brother? I know you just joined. You got any companies you want to add to this list?
This is a viewer curated watch list, by the way, guys. Yeah, well, you guys come first here. We're listening.
So I know right now
RTX, Raytheon. That's Raytheon.
RTX.
Right? Yeah.
What's RTX at right now? What's that one?
RTX is Raytheon. I mean, that's a $180 stock.
Oh, not bad.
That would be alongside Lockheed in the war chest.
This one's pretty volatile. It's been moving the last few days too.
Yeah, this is a. Oh, you and your short-term charts. I never know what.
I always got to double check too, brother.
Bear Superpowers, Big Bear AI, and Bath and Body Works. Oh, Build-A-Bear Workshop, BBW. I was thinking BBWI. I was like, that's not a pair. Yeah, we could throw the meme ETF on the watch list. Let's do that.
Yeah, we can do that. What is that? What is
the ticker?
Meme.
They went right for it.
There we go.
Butte.
Right now I'm sitting in Baidu, gold. Oh, we might have to add gold to the watch list.
I guess we do.
I mean, it's getting a little bit more volatile where it's worth watching,
Yeah.
at least on a week-to-week basis.
I mean, yeah.
What are your thoughts?
It's topical right now, yeah. We're supposed to be managing this watch list more often than we are, so yeah, I say throw it in.
All right, cool. But the ones that I have on the portfolio right now, I got Baidu, Gold, Oracle, QQQ, Unity Software, which is just U, and then UNH. So far, we've added Oracle, UNH. We already have QQQ in there. That's what I got, Gus. Is there anything in your portfolio, just from what you have, that sticks out to you that you want to throw on the list as well?
Let's see here. Do we have Rivian in there already?
I don't believe so.
Oh, Peace Guy. Come on.
Oh, Peace. Come on.
My goat.
There we go. The goat.
What's Rick? Rick? RCI Hospitality? Oh, yeah. They're, that's Giant Company, right?
We got TMUS Big Deal. We'll check that out.
Oh, T-Mobile?
Good to see you, Big Deal. That is T-Mobile, right?
Earnings what?
Getting hammered.
Yesterday? Today?
Who's that, T-Mobile?
Yeah.
They had earnings before the bell the 23rd. What's today, the 22nd?
Today's the 23rd.
Today's the 23rd, so before the bell today.
Yeah.
Let's see. Yeah, they've been getting hit. Getting hit pretty hard.
How about GD, General Dynamics? That's actually a fun one. I'm down for that.
GD.
That is a fun company.
General Dynamics, 22.5 IV rank.
They do robots, right? I'm not mistaken.
I'm not too familiar. They are trading a little bit lower volume. Not too bad. Earnings is going to be before the bell October 24th.
Global Aerospace Defense Company. They're just also like a Lockheed Martin.
That's what JD is?
Yeah.
Okay.
That's what. Yeah.
They have earnings before the bell the 24th, so we can add that to the list. Just be mindful we have earnings right around the corner on that one.
I wish we could like break the list into like subcategories. Like I would love to divvy these up into like why we have all of them.
Oh yeah, that'd be fire.
BRB coming up with a better username. That's not bad. Ismail Velaka, that's not bad. I mean, it's just your name, I assume.
I think it's Velasco.
I stopped.
Oh, okay.
I stopped halfway through the word. Velasquez, I think. Is right.
There we go.
In my American accent.
There we go. That's perfect.
I'm not going to try it in a Spanish accent. Hey, gents, what about Toast? T-O-S-T?
Toast.
That just is Toast, right? Yeah.
T-O-S-T. There we go.
Yeah, I'm down for this. I mean, we should. I think we should add Square if we're going to add Toast. If we're
Square used to be one of my favorite underlyings to trade back in 2020, 2021.
Yeah, they're blocked now.
Yes.
Switched. XYZ is their ticker. I remember that.
They're not Square. They're not SQ anymore.
No, they switched to XYZ, which is like so annoying, and they did it on purpose. But it's like anytime you read like any article, you're just talking about like you need some arrarbitrary stock. You say stock XYZ. Yeah. Now you can't.
These guys. I'm kind of surprised they're the first ones to do it.
Is there an ABC? No. Are you kidding me?
An ABC?
Yeah, nobody's got ticker ABC.
I could have swore ABC or something like that was a marijuana stock.
There's ACB.
ACB
is
that's
Aurora Cannabis. ABC, there's an ABCB, Ameris Bancorp, and there's ABCL, Abcelera Biologics. Oh, and ABCS, Alpha Blue Capital. See, they should just be ABC. Why does nobody have ticker ABC? People are lacking. You're telling me that there's single letter tickers and ABC just hanging?
All I gotta say is I don't think Beyond is dead. We got one share trading in there right now, and I think it's Jared. But along those lines,
leaps here because YOLO. I mean, honestly, though, like, is that a terrible idea? I don't know that it is. I don't know that it is, because if we've moved past the meme stuff now, if we're going to call $3 fair value for this stock right now, and they just got put into 2,000 Walmarts, and there's a big push for plant-based stuff and more of it, I mean, yeah. But that said, everything I just said was the thesis when the stock IPO'd in 2020, and we saw it go from $90 to 50 cents. So I don't know about that one. However, in the case of Leaps, I guess there's not too much more downside.
Yeah.
Especially
I mean, we're trading
shares.
$3 right now.
If you go shares, it's like you can only lose $3 a share.
At this point, should we even consider fundamentals? Because, I mean, was the rip off of fundamentals? Was the drop off of fundamentals?
The initial rip, like this, I'm looking at the daily, but like this candle on October 20th.
I'll go back to it.
That was a substantiated real move. And then the meme traders got a hold of this thing. Which, yeah, I'm talking about that little respectable green candle.
So we gapped from like 69 cents, and we opened up the next day to like $1.02. So it's not a huge move, but percentage wise, almost a 50% gap, almost a 100% gap.
Yeah, I mean, it closed up over 100% that day, and I think that's fair. If you're in 0 Walmarts and suddenly you're in 2,000, I think that it's fair that you go from 60 cents to $1.60. That's fine with me.
Yeah.
But when you go to $7.71. Pushing the envelope a little bit.
I'm curious what the float was on something like this.
Bed Bath and Beyond Meat. You're right. They should just do a merger.
I didn't even realize their market cap was $49 million. That's tiny.
It's tiny.
That's little baby cap. Yeah, I didn't realize. Their float probably had to have been very small too.
Yeah. What's their revenue last quarter?
Bed Bath and Beyond Meat. I literally think the same exact thing every time we talk about Beyond Meat. I think about Bed Bath and Beyond every time. TMUS thoughts on this interesting year chart. Let's see what we got. Big deal. TMUS.
I'm reading Beyond's corporate issued Q2 report right now. This is really wordy.
What is that one you're looking at over there?
Yeah, they did horrible. This is their Q2 fiscal year 2025.
Was that T-Mobile or Beyond?
This is Beyond. I'm still talking about. We'll jump into T-Mobile in 1 sec.
No, all good.
Yeah, net revenue of $75 million in Q2, a decrease of 19.6% year over year. Gross profit was $8.6 million. Gross margin 11.5%. Loss from operations was $35 million with an operating margin of negative 46.6%. For every dollar that goes into this company, 54 cents come out. Oh my God.
That's a funny way to put it.
That's what it means.
Yeah, no, 100%. Beef jerky and candles. Yeah, I'm over Beyond Meat too, guys. I know whenever we get to just roasting them, having fun with the name, I think we're all over Beyond.
Beef jerky and candle.
Beef jerky and candle.
Oh, I see what you're saying. Well, it would be plant-based beef jerky and candle.
Oh, miss me with plant-based beef jerky.
If I'm getting a beef jerky candle,
I'm not getting no plant.
It better be a real beef jerky.
Wait, a beef jerky candle? That's diabolical. A meat-scented candle?
I'm sure, man. I guarantee there's a bacon candle.
For sure. For sure.
Oh, yeah. There's Yankee Candle makes one.
Bro, I'm sure a lot of...
Are we talking about candles again?
But chains probably use candles, for the aroma.
Yeah,
probably,
Yeah, when I worked at UPS, we had a candle in the UPS store.
Oh, yeah?
Made it smell nice in there.
Oh, nice.
Sometimes too strong. We'd have to blow it out. Anyway, okay. T-Mobile. Thoughts on this interesting year chart?
T-Mobile's been very beaten down today. We're down almost 9 to 10 points on the day, almost 4.5%, 27 IV rank, 5 million shares traded. The liquidity is there. The implied volatility is there. And we're also down on the day. Right. Let's look at some of the puts. Oh, right. We just looked at this. We have earnings before the bell.
This is
today's the 23rd, not the 22nd.
This is a buy. I'm getting long this. I'm sold. The year chart, this is just...
I'm sold.
It's too beaten down. This company is way too big to fail. I think that they're only growing. I think that empirically they have the best cell coverage in the United States right now. And yeah, this is... They're below where they were on Liberation Day. I don't know the last time we've looked at a company where that's the case. I mean, we're talking 217. This is a low... close to low of year. It's really hard to set the low of year because they set the low of year on January 6th, which was the day I started at this company.
Oh, nice.
At 2:08.
6th.
Yeah. Yes. At 2:08. So, yes, and nothing more. Obviously, just Gus's work anniversary and not the anniversary of anything else. But yeah, that was when they put in these lows. So 208 would be the low of year. We're at 217. We touched lows of 215.97 this morning off earnings. This just feels juicy. I don't see much more downside.
I have
here.
a feeling Big Deal knew we would be a little fond of that just because he had brought it up like 3 times.
Yeah.
So I was like, he probably knew.
No, yeah. This does look good. I'm gonna get long this. There is if you went on a wide enough time frame, this would be a bull flag too. Actually, you can kind of see what I'm getting at there. Yeah. So let's do this. Let's go. Oh, I want to do this. I want slightly more leverage. I don't think I just want to be a naked Alip. You know what? Maybe I do. What do the premiums look like?
217. What cycle are you looking at?
I'm looking at end of next year, like December 18th, 2026 is the expiration I'm eyeing right now.
Oh, my birthday. Let's go.
How high has this been?
$10 strikes.
270. What's all time?
276.
276.30. Mm-hmm. Yeah, so I don't want to go too far above all-time highs. That's too much premium on these December 18th. What about just like a year out next September? That's like not that much more attractive for 100 days closer.
Go ahead.
Okay. Yeah, I'm just going to go. I don't know what I'm going to go. I'll go September 18th. I'm just going to go naked call. I'm gonna go for this 280.
Nice.
A year. I mean,
what, about $9?
Yeah. No, cheaper. Mid is 470, but this is a $215 wide spread. So we're gonna see if I can get a fill on this. Hope somebody else in the world is eyeing T-Mobile September 18th, 2026 expiration cycle right now. Let's see if we can get a fill at the mid.
Their internet is surprisingly good. Not the best, but good. I've actually been a little. You get filled over there?
Yeah, I didn't get filled.
Not yet.
I was nodding along to the internet.
The internet.
I'm quite fond of the T-Mobile commercial right now, where they're yelling about T-Mobile home internet off into the abyss. Do you know what I'm talking about?
No, I don't think I've seen it.
It really makes me chuckle. I don't know why, because it's like just the most like straightforward, low-hanging fruit humor I've ever seen in my life. But it really makes me laugh. It's just like two guys and they're shouting off they're on like a balcony and there's like a big open valley in front of them, and they're like, T-Mobile has home internet, and then people are yelling back.
I don't know if
it's good. It sticks in my brain. I don't know.
If I see it, I'd probably be like, oh, I've probably seen that before. But I gotta say, you've used their service before? So I just got some new Wi-Fi over the last couple months, and I've always had a modem, I've always had a router. I've never gone through a cell phone company to get Wi-Fi, so I was a little hesitant at first.
Oh, sure.
So I was just curious, how was your experience with the Wi-Fi?
I haven't had T-Mobile internet.
Okay.
No,
Do you use a cellular service?
The commercial. My internet now actually is just in my building.
Okay,
we
cool.
get what we get, and I'm very grateful that it's very fast. That was alarming to me when they first told me that information. But I actually don't even have any idea who our provider is. It's just wrapped into our utilities.
Oh, that's fire. This isn't a promo for T-Mobile.
I had AT&T forever though. I mean,
and it worked fine for you though?
Yeah, it was
okay. I don't know why. I think maybe just growing up without using other services. I don't know. I was just iffy on using a cell phone service's Wi-Fi for like multiple connections. If that makes sense.
It's nice. Well, it depends too if you're doing the like Verizon has internet right now as well, but I think it's 5G internet, so that's like a different story where it's satellite. I've always just had standard wired home internet. But yeah, AT&T was fine. Had them all through high school when I lived at home. I think my parents still use them now. Had MetroNet while I was in college. I have nothing but good things to say about them. I have nothing but bad things to say about Spectrum, who I had first in college, which they're Optimum now. Hate them.
Wasn't a big fan, but did use Spectrum for a while.
Yeah, Optimum, Spectrum. Just terrible.
And look, Steve gets it. T-Mobile just needs to say AI a bunch of times in the earnings call, and we're golden. Did we not learn from the last regime of what was popping last time? Semiconductors or AI or something you just had to mention in the earnings.
It's just been AI for a long time, yeah. You say AI.
It's still AI. We're still on the same topic,
I think so.
I think it was AI.
I think so. I mean, unless you want to say quantum computing. If I was T-Mobile, I would have said, we have AI-powered home internet with quantum computing specialists working on it. We have AI cell service that has quantum cables in the towers, and we have AI cell phones now that do AI. And they would have gone up 15%.
100%, maybe 20, maybe 25.
Yeah. T-Mobile, get at me. I'll do that job for nothing crazy, like $400,000, $500,000 a year.
Nothing crazy.
Nothing crazy. Something light to a guy like me.
That's cheap for my boy too.
I'll take that down to help you guys out.
You're so humble, brother. I love that.
Yeah,
you know the shtick where you know what I'm talking about. The shtick where his personality was being humble and literally like just faking that humble, and then he actually is like extremely popular now because he put on that facade. I forget his name, but he's hilarious.
I know who you're talking about.
I love that guy.
I've seen those TikToks.
Love that guy. As for quantum computing that we just had mentioned, quantum computing had bounced today. I believe there was some news that was released and it had all the quantum names bouncing. They're back red on the day, so they were green for a little bit. had debated on maybe getting on something short, but I would have kicked myself if I caught myself on some unnecessary risk with these quantum stocks. But I do believe they still have a little bit more room to go to the downside. Because,
This is dead cat. I'm not scared of this at all. Fairy dust, pixie dust. It's not effing real.
It's not real.
But I think RGTI specifically has so much more downside. I don't even know what I think fair value on this company would be.
Fair value might be. Hey, at the point being, fair value apparently $38. Apparently, these things should be trading at these prices. But I definitely think we got more air to come out of these names.
RGTI's current valuation at this minute is $12.76 billion. And then in Q2, they reported $1.8 million of revenue. So we're talking about, that extrapolates to $7.2 million with an M dollars of revenue a year for this company that is worth $13 billion.
Yeah.
I said this when the company was worth $18 billion, and I'm going to keep saying it when it's worth 13, and I'll keep saying it until it's worth about 1. I do not understand. I'm all about, trading ahead of your forward PE, getting hyped about companies that might have a promising future, but I don't even want to know what this ratio got to when this thing was at an $18 billion market cap. I mean, that's thousands and thousands of times your rear-looking PE.
It's insane. Excuse me. It is funny how a lot of these, hyped up tickers, it was a quantum names and they cracked, and then I feel on social media over the last couple days or this week, it was the beyond names. AI is so chuggy, bring on the quantum computing.
Chuggy, good word. Ain't playing Coinbase. 6-7 that AI BS. Straight skibbity rhetoric. Clip that chat. No cap.
Hey, yo, big deal.
You guys got it. You guys are on it.
Who gave Big Deal the playbook? That's the whole playbook, actually.
That is basically the whole playbook. You're missing a Riz and a Gyat.
Stefan saying no cap got me dead.
Riz, Gyat, Livy Dunn, Baby Gronk, 6-7 AI skibbity. Yeah. There you go.
Yo, Stefan coming in with the no cap after that just
the no cap. Really.
He's like, wait, I know one. No cap. That's
really sealed the deal on that one.
That's hilarious.
And the way back machine, there was... Wait, no, way back machine. There was an Errol's Internet that was big in East Coast DC area. I'm confused.
There was and Errol's Internet. Jay, say that one more time.
I need some clarity on that one.
As my eyes water a little bit.
Happy you guys are enjoying the brain rot. Yes, as I die inside as we spam brain rot on this wonderful network.
Lastly, before we do pivot, we added P-Sky. We still have NVIDIA in there. It's not as hyped up. And that's what we've added so far. We got Oracle in there as well. We'll take out a Steel. We'll take out Hum. We'll take out a couple of those names. But if there's any other last minute before we move on from the watch list, we'll get anything else in there.
Yeah.
Put the fries in the bag. I love that
Just
one.
put the fries
in the bag.
Big deal to your question about any play in coin. I mean, maybe this looks a little bit like bullish consolidation to me. I personally avoid Coinbase just because it's too correlated with crypto for me, which adds like a whole other layer to how I try to evaluate this company. Same is true with MicroStrategy for me, or just strategy now. Don't mean to speak out of turn there. But yeah, it's just a little bit too correlated to the moves in crypto for me to get involved, which it shouldn't be. It shouldn't be. If anything, when crypto gets volatile, that actually should make Coinbase go up. I mean, that would make their volumes higher. I would assume that makes them get deposits. Actually, not entirely sure how Coinbase is generating revenue. Is there commissions on Coinbase?
I believe so. They most definitely, they're the middleman for something, 1,000%.
I'm sure. I bet it's like a currency, when you go trading currency at the bank and they're skimming a little bit on the spot price of Bitcoin or something like that. I'm not exactly sure.
Coinbase.
I don't even mean that in a derogatory way. I think that's just fine. But I don't know exactly how that's working. Typo. I see. Shut the front door. Adobe.
Kim, I don't know if that was for the Gen Z slang. I'm gonna get you off the hook on that one, but I think shut the front door is more of a millennial play, I feel like. Maybe.
I think maybe she was saying that to us.
Oh.
Because we were doing that.
Oh.
Yeah.
Let me shut the front door. My bad, Let me shut the front door.
Yeah, I think that's very
We got Adobe, 29 IV rank, trading about 1 million shares today, a little bit over that. We got earnings December 10th, so just right around the corner, but you could probably get something out of Adobe before.
Yeah, you got to go back to May 18th, 2023. May 18th, 2023 to find the last time that Adobe was at these levels.
Okay.
So if you're a believer in Adobe, but I believe that the reason Adobe spent the last 2 years gradually sliding is because of AI, if I'm not mistaken. I think people are put off of Adobe.
Yeah.
Markets are quite wild.
I would say that was the similar language, especially with the earnings reports earlier this year. They had touched on AI quite a bit.
What about Figma? They do anything?
Markets are quite wide. FGMA?
FIG, rather, Fig.
They look a little dead, as of recently at least.
Yeah, this was a shining IPO when it happened, but yeah, I wonder when this turns over to a buy, because I mean Figma to me is just new age AI Adobe. U-Haul mentioned.
U-Haul.
Is that
what a business
U-Haul
model,
for real?
First of all.
I didn't know this was a publicly traded company. I'm not gonna lie.
Yeah, they've been beaten down.
Yeah,
Not trading a lot of volume. The IV's there.
I mean, this is I mean, what industry is this? What industry do you even class U-Haul as?
Transportation.
I mean, I guess it would have to be transportation. It's not consumer discretionary. People move. When people have to move, they move.
Would it go under? Not exactly sure. U-Haul might land under.
I wound up
earnings
when
November
I
5th.
moved up here. I rented I think I wound up renting a Penske actually.
Is it a Penske?
Did I have a U-Haul? No. Yeah, it was a big Penske.
I ended up whipping a U-Haul, and it was a pretty good experience.
Yeah. No. Yeah. I had the same experience.
Dropping it up, the location drop off. It was,
Yeah. I just did my comparison shopping. I can't remember if what I wound up going with, but I do think I went. Oh no, I got a budget truck. That's the answer for sure. We rented a budget truck.
Is that the brand? Is that like the name?
Yeah, budget.
Okay.
And I specifically did not do Penske because Penske was the only one that wouldn't just give me a quote. They were like, give us your phone number and someone will call you with a quote for your trip.
Okay.
What year we living in?
So they lost a customer because of that,
number.
right?
I'm letting you blow up my phone with your quote. Yeah, when your entire competition lets me put in my to and from and gives me a quote in 1 second, and then you want to call me? No.
Yeah.
And I know that they would call me, it would be higher, and I would say no. And then I got some Penske sales rep calling me all the time, trying to see if I'm still interested in the truck. Consumer cyclical. Yeah, I said, yeah, okay, good. Consumer cyclical. That's correct. That's correct.
Dopamine said, I'm back, yo.
It is cyclical.
I'm back.
How correlated is U-Haul stock with home prices? It's an interesting one to look into. Might have to commission a research study on that. Because I can't do it.
U-Haul and home prices?
Yeah.
That's interesting.
The way that I would do it is pull up a chart of home prices and pull up the chart of U-Haul and say, it looks pretty correlated. Pretty correlated.
Everything's looking pretty correlated right now.
No kidding.
NASDAQ, Oracle, everything. NASDAQ's looking to take its highs right now, too. We'll head into the TradingView platform here in a minute.
I see I see the username change has gone through.
Wait, who was that before?
That was Velasquez. I don't know. The first name is escaping me. I apologize, but I like the new look. I like the new look.
U-Haul 56, 68, and 57, not good area. We'll have issues all the way up to 59. A pain in the butt stock, a thorn in my side.
Home prices or home builders? Another fascinating question. Yes, to both, I guess. That's
home prices or home builders?
In terms of the correlation to U-Haul. I think it's, I don't know. Actually, if you're saying like which one would it be more closely correlated with, I do think that's an interesting question to answer. I would assume it's lightly correlated with both. I mean, both of those make people move. Make people move is
yeah, same. It's like you would think you would get some type of exposure to that industry.
I need to ask you guys what are your names. New here. I'm Gus Downing. That's Errol Coleman.
My name's Errol Coleman. Nice to meet you guys.
Good to meet you.
Nice to meet you, man.
No big deal. Is PNC worthwhile?
PNC. Guys, what do we think? We think NASDAQ is taking the highs today as we go to PNC?
Yes.
I think we're taking the highs today or tomorrow?
No, I do.
We got about
you mean the high highs?
The high highs. We might.
I think we might need 2 days on that.
We're right around the corner.
It could happen.
Yeah, we're close. We're close.
I thought you meant like high of the day.
Oh, no. So right now,
those every second.
We're at 272, trading 272, 273 on NASDAQ. High is 25,400. So we're right around the corner. That's another 130-point move. I mean, it's possible today. I'd be pretty surprised if we had another significant leg up like that within the next 2 hours. But, I mean, I don't think tomorrow's out of the question for sure.
I must say, I think I do like PNC in this spot. My gut reaction when I first pulled up this chart was, I think that there's probably just a better bank that you could get involved with. But then as I sit here and I just did a quick look at JP Morgan, Bank of America, Wells Fargo, their charts don't look like this in a longer term context. They are like down, but long term up. And PNC is like down, but and by long term, I'm talking like 1 year here, is like down, but long term, slightly more beaten down. So of all the banks, of all the major banks, I mean, like what about Fifth Third? What does Fifth Third look like? FITB? Yeah, this fifth third chart looks fairly similar to PNC, but yeah, I think this is sort of an attractive spot for both of those. But I don't usually involve myself with banks, kind of in the same vein of why I don't involve myself with Coinbase. I feel like there is too much macro stuff that I have to keep track of when I'm in banks.
These markets have been going so flat after we pop on volatility. If you've been taking advantage of those pops on volatility, selling some premium, they've been coming in pretty quickly.
Thanks, guys. I'm going in. Good luck, Tom. Wish you the best.
Yeah, good luck, Tom. You got it. If it goes well, you're welcome. If it doesn't, hey, hit up my boy Gus. Have a talk with him. Have a talk with him. I know we got a little.
You're welcome to send your angry tweets my way. Hands by Gus. I will be the punching bag. You can air your frustrations. No, that's especially if you're going ratio back spread. That's good. That's not gonna.
QBTS is on top. QBTS is top of the list for the high options volume.
Oh, interesting.
We got quantum names at the top of the list.
Yeah, I mean,
for the day at least.
That's true. I suppose that's true.
I mean, we had a gap up. It's trying to hold the gap.
These quantum names, they all like.
I think it's a game. In my opinion, I think quantum games it's just a video game now.
I agree.
Catch the dead cat bounce, get a good risk or whatever. Like fundamentals out the window. It's gamified to the max.
I think we're just I agree. Yeah. And that's the best way I could describe it. As the words I were going to use is it feels like people are just doing whatever. Like it feels
same
like
thing.
Yeah, it feels
Same
like
thing.
nothing matters. Like this is all just people are just doing whatever. I don't understand it.
Yeah. Selling vol been free money for a few weeks now. You're not lying, Jared. I mean, you're not lying. Maybe not free money, right? But I mean, these names have been playing out so well. The volatility back and forth. I mean, you come back a week later and you're actually sitting at the same price. So the only thing that changed was really that theta decay and that vol getting sucked out.
I'll leave Gus alone. You hear me? Yeah, Lone Sophos is my bodyguard. Don't stick my
You see that
Armenian
profile
muscle on
picture?
You see that profile?
You see that profile picture?
Scary dude. Don't cross me.
Yeah, quantum top of the
list. You know he's hard. Oil barrels on the move. What are you eyeing stock-wise? What's up?
Oh, no, I was just thinking about the European stock.
Oh, like what, the European ETF?
Yeah, I was thinking about the European ETF when you were talking about loan right there.
No. IEUR?
Nah.
Oil barrels on the move. What are you eyeing stock-wise? I do not touch oil with a 10-foot pole. I will defer to Errol, who at least keeps up with oil.
No, I've been keeping an eye on oil. Oil is one of those where I kind of stay out of the kitchen, to be honest. It gets a little too hot in there for me.
Most I keep up with oil is when I drive past the gas station and I say, oh, prices.
That's true.
It's gas prices.
I do like USO. Whenever I get involved in oil, I don't know if you ever look at USO dopamine, but it's a nice product to trade. It typically has a very liquid. And
I did used to trade some USO like back in when I was first starting out. It's very liquid, but it also doesn't move like too fast. It's nice. Like USO in just a pure like technical vacuum is a very good like beginner product in my opinion. However, once you get outside of that technical vacuum, which technical analysis maybe applies less to oil than anything else, it gets a little bit dicey. You gotta keep up with the macro stuff. But I don't know. I got long. I made a really good trade getting long a bunch of oil when it was like $- a barrel in 2020 or
like the one time I get long, oil goes negative.
Yeah,
one time I get long.
I did the other way. Well, it was just when I started seeing the headlines like, oil 10 cents a barrel, oil $0 a barrel. Oh, oil is in the negative. It was like, this is preposterous. It's oil. It's black gold. It's amazing. So I was like, I'm getting long oil. It's a no-brainer.
Black gold. I like that.
Came back. Yeah. I didn't invent that. I've heard that.
I was like, that has a lot of significance to that name, actually.
It's true. It's true. It's the gold rush of the South.
What's up with iron? Let's check it out. But yeah, no, USO is a great product to trade. It's usually the options that are on USO that's a little bit more attractive.
Yeah, and it's just, and I say the beginner thing because the options are just nice, slow moving, and it's not gonna, it's not an Nvidia where it's gonna turn over overnight and suddenly you're
completely
crying your eyes out and you blow in your portfolio and you poop your pants and everything.
100%.
That's what I do when I lose trades. I don't know how you guys choose to handle it.
Iron is up a little bit on the day. Big deal. I'm not sure what the news is over there, but it's 52.5 IV rank, 20 million shares traded on the day. We'll check it out real quick. Say that again.
USO was my first ever leaps buy when I started trading options.
Okay.
Planning on retiring with millions in proceeds. Didn't work out. Just sell the USO 100 calls. Free money. Iron, I don't know what's happening with this. Is this quant? What is this?
Let's double check real quick. Let's see what type of news they've been releasing.
Based in New South Wales, Australia, with 257 employees. Shoot, I think
Iran rises after
Iran
rises after pricing $875 convertible debt offering. Okay, IREN eases from record after announcing convertible debt deal. Bitcoin miner IREN falls after planned $875 convertible bond sale announced. Okay, so maybe a little bit of exposure to the crypto industry.
Incredibly critical here is that yesterday, I have a Jim Cramer quote.
What's that?
From yesterday. He said, quote, "Oh, no. IREN, let me tell you something. You are going to sell IREN. I'm going to throw another one in. I'm going to give you a twofer in the same side, Nebius. I'm looking for insider selling to descend upon this group, and I will not be wrong. I will not be denied.
Wait.
I sense that I'm trying to get people out ahead, and IONQ has already demonstrated my perspicacity? I've never seen that word in my life. Has already demonstrated my perspicacity. Take that," says Jim Cramer. So Jim Cramer is incredibly bearish on IREN.
And he said that yesterday.
Nebius. He said that yesterday.
And we popped today.
Yes.
Does Jim Cramer know something we don't know? I'm actually now on the other end of the spectrum. Does this man know something we don't know now?
NBIS.
It started off as a joke.
NBIS is the other one. Do you mean is he actually saying things wrong on purpose this entire time?
Yeah.
Is it a big conspiracy?
Is it because look, Jim Cramer, if he wants connections in the industry, bro has connections in the industry, literally to everybody if he wants to. He's the face of whatever it was at the time being. But I gotta say, thinking about it legally, that's like the perfect. Don't buy this. Buy. Right?
Yeah.
Like read between the lines.
Oh, yeah.
But like legally you could get away.
Oh, you're saying like he's trying to
No, I don't know what he's trying to do, but
he can't like
I don't know.
I see.
But like from a legal
conspiracy.
From a legal
From a
context
perspective,
though,
he can't say you should.
Almost to a fact. but like literally there's
Yeah, but he's like, if I know that if I get super emphatically against this, everybody will buy it.
Well, maybe people will catch along as time goes on.
What if it's all okay? What if it's crazy reverse psychology? What if he gets crazy long in the stock and then he goes on air and he says, "Nobody buy it. This is a terrible company." And because he said that on air,
but you
nobody
laugh.
can say
We're
that he
joking.
insider traded.
We're joking, but these seem like tactics that could actually play out.
We might have just figured this out. Guys, are we talking crazy right now, chat? Is this real? Inverse Kramer is minus 34% on quants. Does that mean inverse the inverse?
Oh, actually, I agree with Kramer on that one. I would actually say a little bit more than negative 34% on quants eventually.
Well, being Kramer, I want to start an ETF that quadruple reverse all Kramer trades. Yeah, it's a shame there's no inverse Kramer ETF anymore. But yeah, this is I haven't heard Kramer speak this passionately about anything since he told everybody not to sell their Bear Stearns in 2008. That's the last time I heard a Kramer quote that emphatic.
I'm going to answer this question real quick before we start to wrap here. But are you able to trade options through TradingView? I knew you could trade stock with TradingView via TradingView, tastytrade via TradingView, but being able to do that with options would be amazing. I don't know how far along their UI is with something like that, but from my own personal experience, this is no bias, but I don't think I would lean to trading options on a platform like TradingView, specifically for options. I had a question about that when it came down to order flow. Like if you want to read order flow, should we use TradingView? I would do a little bit more research on like their data package when it comes to order flow, and depending on what you're using it for, but options, personal opinion, I would stick to tastytrade. And then also when it comes down to order flow, I don't know how great TradingView is going to be for that either, but just a complete objective opinion on that. Just because it wasn't necessarily built for options traders per se. Yes. I mean, obviously, I might sound a little biased, but completely honest, it isn't.
Yeah, and
so check it out.
Though, you can still get the execution marks and all that good stuff, like from your options trades in your TradingView. That's still a thing.
100%.
I was just laughing at the chat below that, which I totally miss. Choose to handle it implies that pooping your pants is intentional. LMAO. It is.
We're all being Kramered.
That's how I choose to handle it. I was very intentional with my words. Oh man, Kramer got in trouble for that about 20 years ago. Interesting. So this ain't anything new. Us Gen Zers thinking we're figuring stuff out.
Well, that's why I also think it is now his strategy to say the exact opposite and let people eventually read between the lines to do the opposite.
It can't be market manipulation if he's against his own position.
Yeah.
Sure.
Or against it on the outside.
What if Bill Ackman was doing that with Herbalife this whole time?
Bro, I don't even want to know what Bill Ackman got going on behind the scenes.
This Kramer right a little more often. Oh, don't inverse Kramer. Inverse Kramer. This Kramer is right a little more often.
That means go delta neutral.
Neutral Kramer ETF.
Neutral Kramer. No, we are coming to a close here, though, guys. We cleaned up the watches a little bit. We added some fresh ones in there. Anything else top of mind before we start to wrap for the day?
Yeah, shout out to Big Deal for the what did I put on? Oh yeah, shout out to Big Deal for the T-Mobile position. That was a nice spot. Liking that trade so far. And yeah, nothing else to add for me. Happy the VIX is getting crushed. I hope that continues for 3 more days. 5 more days.
Oh, yeah. Love it, love it. With that being said, Jared, Organic Farming, Dopamine, Mike, Evan, Mike Jones, Steve, Kim, Tom, everybody else, thanks for taking the time to hang out with Gus and I. We appreciate it. We'll catch you guys here tomorrow, same time, same place. Be sure to stay tuned for more coming on next, and we'll catch you guys next time. Peace.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get backtesting at tastytrade.
Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Man, welcome to the Thursday edition of what it is that we are trying to do. I'm glad that you are here. It is only because of you all that we can do what we do, so thank you guys so much. If you're watching over on the tastylive network, I would actually bounce on over to YouTube. If it is live, if it is real time, if it is right around 2 o'clock Eastern, October 23rd, 2025, you can join the conversation and hop in the chat, man. You can celebrate if you are a bull. You can indeed commiserate if you are a bear, but it is, of course, a good time had by most. John, bring us into the market, though. Yeah, we're celebrating it for bulls, baby. It's back. It is 100% back. There you go. EME S&P is up 45 on the day. You've got the risk-free instrument, also known as the NASDAQ futures, extremely high-risk product, up 240. You got the boomers up about $1.90. You've got the Russell 2000 futures index up 37 on the day. You got bonds are down. You got notes are down. But I look at oil up $3 today. You got UB40 down. Look, the shifties are back. Gold up 89. Hunt Brothers obviously doing pretty well. You got silver, a little SIL for you guys, for you micro traders out there. You got silver up $1.16. So the market is up. The metals are up. We are back. Man, it's almost like we never left. Like, yeah, there was a little blip on the radar. It's a little 230-point down day in gold. Just a little, $5 down day in silver. Like, it's nothing. It's just a flesh wound, man. Like, don't even worry about it. We are indeed back in business. Of course, you got volatility is going to be down on a day like today. Let me scroll down a little bit here on the screen. You got volatility futures down 37 cents. And then spot volatility is getting smashed today, down $1.40, with the VIX now down to 17. It's kind of crazy to think that we were just at VIX 28, 29, a couple days ago, like just a week ago maybe. And now we're right back to the VIX at 17. That feels pretty paltry. It definitely feels like some slim pickings. And so, all right, so what I want to do, man, we got to talk about Tesla. We got to talk about IBM. I mean, it's like, man, what a turn of events for both of these stocks. I mean, one, we thought we had them and it got away from us. The other one, it looked like they had us and we got them in the end. And so it's a little crazy with Tesla and IBM. But if you guys have a question for me, I would drop it in the chat box. I see you guys in the chat box. Man, I just appreciate you guys. Greg Lutton's in the house. Man, look at Boulette's in the house. Man, Kimberly Thomas in the house. Sam L in the house. Man, this is awesome. Awesome stuff. All right, so let's take a look at what's going on. So So number one, let's talk about IBM. So last night, like when the numbers dropped, I saw IBM first, and then I saw Tesla second. And so when I saw IBM first, I mean, if we could bring up the chart here, I mean, you guys kind of know what happened if you saw IBM. First of all, let's look at this. Can we look at this daily candle? Can we appreciate the magnificence of this daily candle? Like, look at that. Like, if you look at that candle right there, if you don't really stop and think about what that means, you can just kind of gloss over it. You can just kind of be like, oh yeah, it's just another bullish day. It just kind of goes in with all the rest. Like, no, like not at all. Like, look more closely, right? Like, let me even zoom in. Like, put in your multifocal contacts and take a little peek at that. Look at that. So if we look at this, let me get rid of my random circle now. So if we look at this candle, right? Obviously, for all of my technical bros out there, it opened down here. Like, it opened down there and it went ahead and filled that gap forthwith. Like, not forth without, like forthwith. We filled that gap. Like, man, we just completely closed that gap. It's almost like there never even was a gap. And so that doesn't normally happen after earnings. That's very, very unusual, right? And we're going to see a similar thing with Tesla here in just a couple of minutes. And so this is a very, very uncommon occurrence, at least in my personal experience. Maybe there's some hard data. Maybe there are some, market measures and options jives that the team has looked at this before. I can't think of a study off the top of my head where they have looked at this before, but yeah, you don't normally see the gap close that quickly. Normally you see a gap and a go, or a gap and a crap. You don't normally see the gap and the close on the same day. Like, that's pretty uncommon. But when I saw this last night, I was like, this is it. Like, I didn't think we were going to go to Bonefish on Wednesday night, but I mean, obviously I'm making at least one reservation. Maybe I only go by myself, but somebody's going to Bonefish tonight. It's either me by myself or it's me with my wife. And I'm honestly okay with either. But I was really surprised that on a Wednesday night, no, I'd much rather go with my wife, for the record. Although I can assure you guys, again, for the 18th time, there is a zero delta that she will see this show. As long as you guys don't rat me out, we are good, man. We are 100% good. And so anyway, when I saw this last night, I was like, man, this is some good stuff. But then, of course, IBM just rallied it back right on the open today. Now, I could have closed it on the open for a really big winner. There's so many moving parts in the mornings for me. Sometimes that's really hard to do, obviously. And so I missed it. But maybe we should, do GTCs for vertical spreads now too. But if we go to Tesla, let's see here. So Tesla, same thing. Like, it's crazy, man. Same thing. It opened down around 420, right? Hit a low of 413, actually. And then all of a sudden, right? All the Tesla bulls just come out. They just came out of the woodworks, right? Like, all the Cybertruck bros, all the Rabovin bros, and all the Optimus bros, they just came out and they started gobbling up this stock. And so that was absolutely amazing for us and the butterfly that we have on. So it turns out that, is Dr. Jim's hot streak still intact? I'll let you be the judge of that. I mean, we're going to basically end up with, it looks like, about a scratch, a little bit in the red from these two earnings calls. We're going to pick up about $1.20 on Tesla. We're going to lose about $1.90 on IBM. So for, your official records, if you're keeping score at home, that would be a net loss. I'm going to put it down as a scratch, of course, but you could put that down as a loss if you want to. And so yeah, I mean, Tesla, for IBM, you could make the case, I'm looking at both of these guys. This is, it's interesting. So for IBM, let's think about this. So when I came into the show today, I was pretty dead set. I'm like, I'm just going to close both of these because it's about a scratch. It's about a wash on both of them. And, I think that's just going to be the way it's going to go. But now I'm looking at both of these with a bit more of just thinking through what it means. And I'm like, all right, well, IBM, like, take IBM, for example. Right now, I could, get out of the strategy and save 45 cents. Do I really want to save 45 cents? I mean, it's only 45 cents. And so it's really not that big of a deal, but there's only one day left in the cycle. And so I need IBM down below 277.5, right, for this thing to kind of get really interesting. So IBM would have to move about $7 tomorrow. That's not a huge move, but we are talking about IBM, right? We're not talking about Tesla. We're not talking about, Open. We're not even talking about Wolf at this point. We're talking about IBM, right? Like normally under like regular day-to-day circumstances, to get IBM to move 3%, like you've got to move heaven and earth, man. Like there needs to be a tectonic plate shift like underneath the earth's surface to get a 3% move out of that stock in one day. Now, earnings related, I mean, you can see right here, it's, it's moved by 1% or whatever. I mean, today it was obviously down a lot more this morning. I kind of think though, let's get rid of IBM for sure. Let's save our 45 cents because I really don't think it feels a little too far-fetched. And if you guys have seen the show, you know that I'm not opposed to going down some roads that are very, very far-fetched. But right here, I'm kind of thinking, let's close IBM, right? Let's keep our 45 cents. And again, I did make it out to Bonefish last night because they were all booked up, of course. And so maybe we'll be able to use that 45 cents for a future Bonefish trip. I actually have a date with Autumn tomorrow night, now that I think about it. So we are dropping the kids off at Nana's house, Nana and Pop G's house. And we are going to, I think we're just going to go sit on the beach for like 2-3 hours and just talk and just hang out. Which, I mean, that is a hidden gem if you live in Florida. Like, you know exactly what I'm talking about. Like the beach in the summer is obviously fun and whatever, but it's a battle, man. It is a battle from start to finish because you got to battle all the crazies. You got to battle all, the Florida residents. You got to battle all the tourists. You've got to battle the 118 degrees outside. It's just a battle everywhere you turn. But you go on like a late October like evening when really nobody's there. A few people are there. It's super nice outside. It's like 70, 75. You got the breeze off the ocean. You're basically just like sitting in a postcard. I'm like, man, I'll sit in a postcard, sure, with my lovely wife and chat with her for a couple hours. Like, yeah, let's do that. So I don't know how this 45, 50 cents is going to help me tomorrow, but I have a sneaking suspicion that it may prove to be beneficial. So let's go ahead. And let's close out of this IBM spread. All right, so I got 60 cents. Okay, so there you go. So now I go to Tesla. I'm kind of thinking, man, it's so, guys, we're right there, man. We are right on the cusp of greatness. We are just one tweet away from being up like $20 on this trade, right? Like, look at this. I mean, yeah, we can keep our buck, we can make our buck 38. So this is going to basically, yeah, I mean, it will be a little bit net negative on the two. But I don't know, guys. I really, really, really want to hold this. You know what? I'm not going to do it. I'm going to try to be a little bit disciplined. Let me do it. I'll take the wash on the two trades. With how everything kind of settled, I was like, okay. Although actually, so when IBM was down and Tesla was down last night, I'm like, okay, this is actually good for me. I'm probably going to end up positive because I'll make more on the IBM trade than I'm going to lose on the Tesla trade. It turned out that I'm actually going to end up losing a little bit more because I'm losing more on the IBM trade than I'm going to make on the Tesla trade. So a complete turn of events when it comes to what I was looking at last night. But it's just another good example that markets move and things change and nobody really knows what's going to happen. But tomorrow we are doing an educational piece to kick off the show. I'm going to do a little something on Volatility Crush because I feel like, man, this is so relevant. And we've still got all the heavy hitters next week. Excuse me. We'll take a look at this in just a minute. But let's close out of this Tesla trade because I do think that that it makes sense. Let's go ahead and do it. So let me go ahead and right click. I'll take the small winner. That's fine for 525. And again, yeah, I mean, we've got a lot of earnings coming up next week. So we'll see. Let me see if I go in here. Yeah, we'll do like 518. That should be fine. No takers at 518. Okay. Let me see here. 515 maybe? Am I going in the right direction? I think I am. All right, so we got filled at 515. Okay, so we made $1 on that trade, whatever. I mean, it's fine. So that's Tesla. And then yeah, if you look at the list here, let me go to our tasty default list. I mean, this is it, man. Next week is going to be, oh, wait a minute. Man, government shut down. Government's been shut down for so long. I forgot. Guys, hold on. Wait a minute. If you're multitasking, come back to me because we need to talk about something. Guys, this is not good. So if I'm not mistaken, the government is shut down, right? But tomorrow morning at 8:30 Eastern, we have a surprise CPI print that is unlike any CPI print to come before it. We have never had a CPI print that is of this much importance, that has just this much impact and magnitude baked into it, right? Not unlike the fictitiousness and imaginary numbers that they do have baked into it, but the impact that this could have on your financial future and your family's financial future and your lineage's financial future. Like, it is unprecedented. Have we ever had a CPI print when the government's been shut down? Have we ever had, and I don't even know who's going to give us the CPI print. I think it's just like a couple of guys on like some YouTube channel that are going to be like, all right, here it is, 8:30, boom, there it is, right? It's just as valid as what the regular CPI guys give you. But here you go, here's our CPI print, boom, do with it what you will. And so tomorrow morning at 8:30, we got something, man. I don't know. All I know is this is not good. I mean, I'm talking about beach dates. I'm talking about living in a postcard. Like, we're not going to get to that. Like, we've got this tomorrow morning. Man, I'm going to have to see if Autumn wants to move that date up to tonight because I'm pretty sure that this is going to be it. So anyway, next week, though, let's assume for a second that we do get to next week, which, again, it's only about a 20 delta. But you've got Chipotle. Look at Chipotle. They took us down last earnings. And so, man, I mean, we're going ride or die through this earnings, obviously. Chipotle, we've got Google. We've got Meta, the artist formerly known as Facebook. We've got Microsoft. We've got Starbucks. We've got Apple. We've got Amazon. Right? That's all next week. And then the following week, got Snapchat. Somehow they're hanging on. I don't know how that's even possible. You got Cisco, a little sipping on some scissor for you guys. You got Disney. You got a lot of things happening. And then, of course, next week as well, on Wednesday, we have the USA earnings on Wednesday. Whereas Jerome Powell will report the state of the country in terms of the interest rates that they will be targeting. I think at this point, somebody let me know in the chat on the Fed funds futures, what is the probability of a cut? Is it 99%? Is it 100% at this point? I think it's pretty much a slam dunk that this guy is going to be that they are going to be cutting rates by a quarter point. And so let me know though. I haven't looked at the Fed funds futures in a few days at least. I think it was 90+% the last time I looked at it. And so by now it's probably even higher than that. But anyway, that's next week. We've got lots of capital in store for that, but I forgot about the CPI print tomorrow. And so, I mean, I don't know, guys. Should we do it? We haven't done it in a while. I don't know. I see you guys in the chat. I appreciate you guys so much. Look at you guys, man. Look at DJ Wang in the house telling me to hold my Tesla position. Sorry there, DJ, but we already went ahead and you guys are making me laugh. We already went ahead and closed it. So, but don't worry, there'll be plenty of other trades that we can hold. Let's go to SPX. So when I think about this CPI print, right? And again, just apply common sense. When you think about the CPI print, and you think about the market reaction to the CPI print tomorrow, I mean, just the simple fact that the CPI print is going to be coming out of some unverified source that does not have the government rubber stamp of approval. It's like, man, how can we draw any meaningful conclusions from this number? And so I think that we're just going to be all kind of left scratching our heads. I think we're all just going to be left like, all right, what do we do with this number? And what does the market hate more than anything else? Uncertainty. What does the market dislike more than anything else? Uncertainty. Right. And so I think after tomorrow morning's print, since it's not from the regular CPI guys and gals, nobody's going to know. Nobody's going to know how to handle this print. And so I see the market going down. I see the market going lower. And so I kind of think, let's go to SPX. Let's go to a 1 day. And I mean, what can we get for like a 30-point butterfly? Are they going to charge us out the wazoo for it? 635, 605. 66.75. Is this under $5? 385. 385. Man, they're just giving these things away. That's crazy. I'm shocked that it's that cheap. 635, 67. I'm sorry. 67.35, 67.05, 66.75 are going to be the strikes on this butterfly. It's only $3.70. And while we did come out with a net loss, i.e. scratch, across Tesla and IBM, we actually hit the butterfly, which is kind of nice. And what was interesting about the butterfly is we didn't even hit it really, right? I mean, we just got up to the bottom long strike, and that was all that was needed to kind of eke out a tiny little profit on that trade. And that's really a product of the fact that there was so little time left in the expiration cycle. And that, again, is my favorite time to do butterflies. And so it's kind of fun. Have we had a CPI print on a Friday in recent past? It's been at least a few years, right? Like, when's the last time we've had a CPI print on a Friday? Friday is reserved for NFP. Friday is reserved for PCE. Friday is reserved for like those inflation expectation numbers and like the University of Michigan consumer sentiment and like whatever else. They're all just as fake as all the others. But on Friday, you don't normally get a CPI. And so this is kind of fun, I think, right? Like, I mean, we've got CPI on Friday. We've got, again, I'm going to be with you guys for Uncle Jay next week. And so we can all debate, like, the hex colors on his purple tie because we know it's going to be purple. The only question is it like a pinkish purple or is it like a burgundy-ish purple? Like, that's the only question left. Like, we already know it's going to be in the purple category. But I don't know. I kind of think we play CPI to the downside tomorrow. If for no other reason, it's going to be fun. So 67.35, 67.05, 66.75. This is it. This is it. Now, what should you do? You should find a way to do the opposite of this. You could do the opposite of this in a number of ways. You could do the opposite of this by playing it to the upside. That'd be the easiest way. You could do the opposite of this by probably doing something neutral. That would also probably count as being a Dr. J fade. And so 67.35, 67.05, 66.75. Let's do it, man. So 350 on the debit. Can't get filled there. Let's try to, let's see here. Let me do, I almost forgot about CPI tomorrow, which is not good because there may not be it tomorrow. So, all right. So we got filled at 355. And there you go. So we did SPX. And then, everything else, I mean, the strangles are cooking. I mean, they're cooking. No reason to kind of do anything there. I think we can let them just keep cooking. We go through tomorrow and we go into next week or whatever. And, everything else is looking pretty good. I mean, there was a little bit of a scare last night with rigatoni when, Trump basically said, hey, listen, like rigatoni is now the official noodle of the White House. And so when I saw that tweet and I saw that announcement, I'm like, this is not good. And the stock obviously rallied on that information. But then I think when cooler heads prevailed and everybody realized, like, wait a minute, rigatoni, it's a number 4 at best. At best, again, you're penne, you're farfalle, you're even just straight up spaghetti before you're rigatoni. So I really think that once the cooler heads did indeed kind of think it through, the stock cooled off a little bit too. So that was good with rigatoni only up $2 today. So anyway, I think we're looking good. But let's get to you guys, man. I want to see where you guys are at. Man, look at you guys. I appreciate you guys. Man, look at you guys. Oh, who's trolling me on IBM? Hold on. Let me surprise and delight somebody in the middle. Oh, this is good stuff. This is that looks like that's Julian. So Julian Musto 985. What's up there, Julian? Hey, Dr. Jim, great job with IBM. I did the opposite. Smiley face. See, this is it, right? This is how you go from theory to practice. This is how you go from theory to practice to practicals. Right? You do the opposite, you make money. You don't do the opposite, you lose money. Right? I don't know that I can make it any simpler for you. I really, truly don't. Right? And so nice job there, Julian. You've been paying attention. You've been listening. You've been taking notes. And you've been applying the information. Like, this is very, very, very good. And so I'm really glad to hear that there, Julian. Nice job, my friend. And so, and then Doc Trader 67 is in the house. I'm going to surprise and delight somebody right next to the other person that I surprised and delighted. And so Doc Trader 67 says, hey, Dr. Jim, Doc here. What's going on there, Doc? Great to see you again here. Good to see you too, my friend. What about a strangle in GDX? December expiration DTE, still a juicy premium. Well, I already have a position on in GDX. So we have an inverted strangle on in November that we've been battling for, quite some time. But you are correct from the standpoint of GDX still having pretty juicy premium. You've got the IV rank is at 43, and so that obviously looks pretty good. I'm not opposed to, laying something else out in this underline because right now, I mean, the metals they're where it's at, man. Like the metals are where the action is at without question. And so I kind of like where you're at here there, Doc Trader. So let's go into December. And you basically just said juicy premium. Okay, so you didn't give me any strikes, but you did say a strangle. I like it, man. Let's do something. I'm kind of thinking, let's do a strangle, but I actually want to skew this one to the upside. So now that, the metals have sold off a little bit, I actually, if you want to know, you're not asking for this, but I'm going to give it to you anyway, because it's my show. I see more weakness on the near-term horizon in the metals. I could see gold touching down below 4,000. I could absolutely see that. I do think that by the end of the year, though, I could see us not necessarily back to the highs, but I could see us back on the rally train. And so I think, based on that, you could kind of, if you wanted to just play a straight up strangle, just be very neutral, of course, that would be a good play. If you wanted to skew it in either direction, based on how I just kind of laid it out, you could actually make a case for skewing it in either direction. You could skew it to the downside or you could skew it to the upside. I actually think I'm going to skew it a little bit to the downside to kind of, maybe lean into some near-term weakness so that if we get that, maybe we're able to manage this guy really quickly. And maybe this is something that we manage a bit more aggressively than we would otherwise at, 50% of max profit, whatever. Maybe we take it off at 30, 35. If we skew it to the downside and then all of a sudden the metals do cool off even more, like let's say going into just next week, maybe we're taking this thing off before Halloween. Like maybe we're taking this guy off before next Friday. That'd be kind of nice. So I'm going to start with, let me just start with a basic neutral strangle and then we'll skew it together. So I'm going to sell like a 19 delta put. So that's a 65 strike. And then I'll find a 19 delta call. That's going to be, whoa, look at these markets. What's up with these markets? Guys, look at that. Look at that market. What is this? You got like a 60, 70 cent market on the 88 call. Man, that's really, really wide. That's like surprisingly wide I mean, we're talking about GDX. This is a pretty liquid product. And so I'm really, really, really surprised by that. Maybe I'll go in a little tighter. I'm actually going to make this strangle a little tighter there, Doc, just because, I mean, hopefully you can see what I just circled on the screen. The markets look pretty wide at certain spots. This is so weird. It's just weird because like the markets are like, for example, look at these 3 strikes right here. This is really, really weird because the 64 strike, 26 cents wide. That doesn't really make any sense. The 65 strike, 5 cents wide. That makes a lot of sense. And then the 66 strike, again, 23 cents wide. That doesn't really make any sense. And so you see, wow, the GDX markets, So I'm actually, Doc, I wanted to do this. I like the idea, but I don't like these markets. I don't. So I'm going to pass, actually. A lot of times when you are met with like really wide markets for whatever reason, just walking away and just passing is the move. Like walking away, excuse me, walking away, walking away and saying, hey, I don't like these markets. That's always an option. And so you should never feel like you have to make a trade. And you should never feel like, man, like I really have to get into this product. Like that's really rarely the case. I can't even really think of a time when that would be the case. I mean, oftentimes you're like, hey, I like the stock. I like the activity. It's got earnings. It's got, CPI prints, whatever. Then, most of the time you're going to trade the product for those reasons. But if you ever come up against something where you're like, man, I don't like the bid-ask spread differentials. I don't like the pricing on like a spread or whatever. Just walk away because it's not going anywhere. I promise you, it's not going anywhere. I mean, it's all going to be over tomorrow after 8:30. But assuming hypothetically we somehow get to the other side, it's not going anywhere. And so, so thank you there, Doc Trader. Anyway, I'm sad that we were not able to put that on, but I didn't like the markets. And so, all right, let's see where we at. Let's see. Kimberly's in the house. What's going on there, Kimberly? Big Deal Donuts in the house. Sam L is in the house, says, good morning, Doc. Even the stocks are starting to fade your strategy now. Yes, with their weird moves last night and into this morning. When the market starts front running your trades, the B- magic is working overtime or it's not working hard enough. I'm not sure which one it is, but yes, let's see. Big Deal Donut says, I'm guessing t-shirt. Oh, you guys may have been guessing my attire today. So no, this is like the 3rd or 4th day in a row with a collared shirt. Like with a polo. And so we're going to hit a pretty hot t-shirt streak here pretty soon. I can assure you of that. But I appreciate you. Scramble everything in the house, Dr. Jim. I heard you called into the Wall Street Journals to leak that info on Barron taking a stake in rigatoni. You sly dog. Going to need a recommendation to gain more volume in my lower lats. What you got? Yeah, man. Do some lower lats? Yeah, you got to do some straight arm pull downs. Like where you got the bar on the top of the stack and you kind of step away from it. And then you kind of do one of those deals. The one thing I've learned with that movement is you just simply have to accept the fact that your triceps are going to be on fire. They're going to be on fire. There's no way to do that movement without getting some tricep activation. If you can, then you just have much greater mind-muscle connection than I've ever been able to achieve. But once you're just like, hey, it's okay, I'm going to get some more tricep activation here too, you can really, really, really torch your lower lats with that movement. That's usually my go-to. You could use a bar, you can use the ropes, you can mix it up with whatever. You can do one arm at a time if you want to do it that way. That can help with the mind muscle actually. But Big Deal Donuts was back in the house. Greg Lutton, what's going on there? Oh, Greg, Big Deal Donuts was surprised I went polo. And so I got to keep you guys guessing, man. We got to shock the muscle, And so we got to do a little something. Greg Lutton in the house. What's up there, Greg Lutton? Let's see. Brian Dowdy's in the house. Hello, Dr. J. Are you sure doing the opposite of you is going to bring me closer to my financial freedom? Yes. but you have to have a long-term focus. This is no different than when a financial advisor sits down with you. What is he or she going to say? They're going to say something to the tune of, hey, look, am I going to beat the market? No. Am I going to underperform the market? Pretty consistently. But here's what you need to focus on. You need to focus on the next 30 years. You need to focus on the fact that because of all of your work, I'm going to be able to get that vacation home. And I'm going to be able to get that second Range Rover. And so you got to remember, this is up to you, right? This is on your shoulders now. And so keep that in mind. But also look at the market performance over 30 years. Right? It usually goes up. It usually does this. It usually does whatever. So you, Brian Dowdy, in the here and now, don't be too focused. Don't get too distracted by a little Tesla magic, a little Bank of America magic. It's all just smoke and mirrors, man. Like, don't worry. Like, wait till next week. Wait till next week when all the heavy hitters come and I hit like 1 out of 7 or 1 out of 8. Or maybe I really am in a little bit of a hot streak and I go 7 for 7. Only time will tell. This is why you got to watch the show, right? I mean, again, the content's not going to create itself. And so we gotta see where it takes us. But Ashfin's in the house. What's up there, Ashfin? I appreciate you, my friend. Wolf. Thanks for everything, Dr. Jim. Let's go, man. Let's go. Let's do it. Let's see. Brian Dowdy, are we also going to play Procter & Gamble for earnings? Not sure what else is on the plate for today. Wait, no. Procter & Gamble's not today. Are they? Oh. The official. I said Procter & Gamble was the official start to earnings season. I meant Domino's. That's what I meant. I don't know why I thought Procter & Gamble. But yes, of course we're going to play Procter & Gamble. This is so perfect. You think this happened by chance? Like, do you think this just happened complete happenstance? I don't think so. We've got a surprise CPI print tomorrow, right? That is unlike any CPI print to come before it. All those 1, 2, 4, nothing. This one, the big kahuna. This is it. We also have tomorrow morning Procter & Gamble earnings. Now, when you think about the apocalypse and when you think about, the safe plays for said apocalypse, what do you think about? You think about Procter & Gamble. Like, what do you think about? You think about personal hygiene. You think about soaps and lotions, toothpaste, right? Things like that. So, how could you not go into tomorrow being just mega bullish on Procter & Gamble? Again, you don't have to apply any additional analysis. You probably should, but you don't have to. You could just think about this. You could just think about this with just some common sense. And so, I don't know why we wouldn't do anything other than something to the upside. So when I look at Procter & Gamble for tomorrow, I've got the stock at 152. We've got earnings in the morning. And so, wow, tomorrow's going to be a busy morning. We've got CPI and we've got Procter & Gamble. Yeah, we got a lot going on. They've only got 2.5 point wide strikes. Man, that's a real kick in the pants right there. You've got dollar wide strikes and then they kind of throw you for a loop. Look at this, man. I've got dollar wide strikes all the way up to 150. And then if I grab my Glacier Freeze color, I've got 2.5 point wide strikes. It's like, man, how am I supposed to do something that's symmetric on both sides if I wanted to do something on both sides? That's going to be a little bit more challenging to do. But also for kind of like the fine tuning aspect of the butterfly strikes, that's going to be tricky. Let's give it a shot. We may have to just play this guy just kind of more straight up. Which is okay too. But if I did like let's see. If I did like a 150, 155, 160 butterfly, what would that look like? Yeah, it's $1.32. It's $1.32 for a $5 butterfly. That's very, very, very tight in my opinion. It's going to be hard to make money on this trade. So I don't like that trade at all. I'm going to walk away from that. I do think though, why don't we just keep it really, really, really simple? And let's just do a 150, 155 long call spread. Like this will be a pretty small position. We're going to pay about $2 for this. We're going to risk 2 to make 3. So that's kind of nice. And so if we do get a rally on Procter & Gamble's numbers tomorrow, then that's going to be good, of course. And if Procter & Gamble in their conference call gives, some hints to added probabilities around said apocalypse, that's probably going to be good for the future guidance of the company. Right? Like when you think about, an apocalyptic world, like chances are Procter & Gamble, they're going to keep moving merch. Like they're going to keep moving product. Right? And so that's what I want to see. That's what I want to see as a Procter & Gamble bull. So 150, 155 is your long call spread. And that's it. Let's do it. So thank you for reminding me of that. And so Brian Dowdy, I appreciate you, my friend. So Procter & Gamble to the upside. So you guys know what to do with that information. Again, I'm trying to make this as clear as I possibly can. I'm not sure if I can do any more, but I'll keep looking. Let's see. Boulets says inverse Dr. J didn't work for Netflix and Tesla. I know. And so again, could it be the start of something new? I don't think so, but it's possible, right? It is theoretically possible. So you guys have to, buyer beware, man. Caveat emptor. That's just the way that it is. And so let's see. David C. This is what I'm saying. David C. says, it's celebrate today, but CPI tomorrow. That's correct. That is correct. And so if you knew what was good for you, David C., and everyone else for that matter, I would be calling Bonefish now because they will fill up. They will absolutely fill up. And so I would be getting on the horn with them tonight or today for tonight so that you make sure that you have a spot. And so Griffin Jones, hey, Dr. Jim, what's going on? What's going on there, Griffin Jones? Sam L., the best show. You've officially become the market's pre-workout scoop. All hype, heart rate. Yes, all hype with no follow-through. Heart rate and unexpected P&L swings. Yes. That's 100% true. I've still been sipping on that electric limeade Ghost from yesterday, and that's good stuff, man. Like, that is just some good stuff. And so what I will oftentimes do, like, throughout my day, like, I'm in here most of the day, obviously. But then I might like walk in the house and I might go for like a 15-minute walk around the block just to kind of, move around a little because I'm so sedentary. Like if I'm not training or whatever, I'm just in my seat. I'm, on the microphone or whatever, doing other work, whatever. I'm stationary. So like I'll pass through my garage very off, like 30 times a day probably. And I'll very frequently just take a little sip off the top, off of the electric limeade or whatever Ghost might be open in the fridge out there. And so it's good stuff, man. But Kimberly says, so Saturday is 10/25/2025. Great numbers. Yeah, that does sound kind of feng shui. Not perfectly feng shui, but it's on the right track, I think. The Preston, Dr. Jim, you're crushing it. Microsoft releases earnings next week. What do you do, brother? Man, I appreciate you, and ask me next week. Like, we'll definitely be doing something in Microsoft next week for sure, but I don't want to do it now because it's a little bit too early. And we've got other things that we have to, there are other fish to fry with, Procter & Gamble's and CPIs and apocalyptic, outcomes and things like that. So just remind me next week, though. Again, that assumes we make it to next week, which I don't want to put my, count my chickens before they hatch. So I don't think I'm going to do that necessarily. But Emmett Morrison says, hey there, Dr. Jim, what's the play tomorrow for CPI? We're playing it to the downside, my friend. And so for all of your bullish plays, you are welcome. You are absolutely welcome. I do what I can. I mean, I'm only one man. I'm one man with an intern, but we do what we can. Like, we are here for you guys. Don't you ever forget that. And so Ranch is in the house. Howdy, Dr. Jim. What's up? Scramble Everything trade idea. Dr. Jim, sell an MCL contract. It's the USA Taco CPI trade. So you mean just outright oils? Just outright oil, short some oil? I mean, it's not the worst play I've ever heard. I think I want to do it with maybe some premium instead, though. Like, what if I do, like, let's see here. We could go into like the November cycle with only 25 days to go. So we could do something a little shorter term. And maybe, I don't know, maybe carry it inside of 21 days, maybe go for maybe like 14 days or something like that. I mean, the gamma risk on like undefined risk positions, it doesn't really kick in until probably closer to inside that 14-day marker anyway. 21 is nice because it's a very easy thing to remember and, it keeps you on the right track. But the reality is, and I've said this many times on the show before, any time between 14 and 21, I think is totally fine. When it comes to trying to mitigate the gamma risk that kicks up at the end of an option's life. Like, that's the whole basis of the 21-day rule. And so if that is the spirit of what we're trying to do, getting in at 25, which is what we're going to consider here with the November cycle, and then getting out at maybe 14 or like 11 even, let's give it a shot. Like, let's give it a go. And I mean, we were already disciplined on IBM and Tesla. You can't expect me to maintain that discipline throughout the rest of my trades. And so, beggars can't be choosers here. But I don't know. Let's do, what if I do like a 25 delta strangle? Like I sell a 66.5 call, and then I sell like a 58.25 put. I mean, this is a nice trade, man. Look at that buying power effect. $700. That's great. MCL is a really nice product to trade, for those of you the guys that might have smaller accounts or whatever. And I mean, futures options and the buying power that you get is so advantageous. And this is a really good trade. I mean, it's $1.86. So it's $186 in terms of your max profit. We'll manage this at probably about 50% of max profit. You can see the probabilities look good. Probability of profit is 62%. There's no P50 on futures options, which I think the developers are working on that. And so hopefully that they'll kind of bring that bring that to the forefront here sometime soon. But yeah, I mean, this is a really nice trade. I like it. I think you were saying to just be straight short. I kind of like more of a premium play here, and so I'm going to do this with premium, and we'll kind of see where the wind blows us from here. But $1.86. I'll see if I can get filled. Let me do a little. Let's do like $1.84. We'll probably get filled. Yeah, so we got filled at $1.84. So there you go. So there's a little oil for you. So thank you there, Scramble Everything. I appreciate you. Jared Kramer's in the house. Dr. J, is tomorrow the print that will end us? I mean, the fact that you even have to ask, that's not a good sign for you in terms of where you're at right now and the mental state that you need to be in. The fact that you still think that there's a chance that it won't be, it's not promising, Jared Kramer. Not promising at all. So if I were you, don't click off the stream yet because I still need that watch time. But once it's over, I would be on Amazon Prime and I would be filling up your cart. Again, forthwith, not forth without. Do it quickly, like ASAP. Get the bunker materials shipped to your house and on your property very, very soon. And then you're going to be up all night. You're going to be up all night putting it together. And again, the fact that you don't have it ready yet, that's on you at this point. That's 100% on you. Sergio's in the house. What's up there, Sergio? Appreciate you. As you know, my friend. Ranch, I got out of Baba spread today. Finally, ouchie. Yeah, Baba's been doing some crazy stuff, right? Baba up $6 today. Yeah, I think it's been getting bamboozled though, right? Let me bring up a chart of Baba. That's a daily chart, a 2-year daily chart. Yeah, look at this. Yeah, a couple months ago. I mean, it was down around 120, down around 100 back in July. Now it's been up to 195 or so. And now it's back down to 172. I mean, this thing is a mover, man. This thing is an absolute mover. I haven't traded Baba in a while. Maybe we'll have to get a little Baba exposure here in the near future. I'm not going to do it now because there's just so many things going on. But remind me about Baba when when earnings season's over and things kind of cool down in terms of like November, like mid-November, you get into like holiday season and things like that. A lot of times it's pretty slow. So there's, we're looking for things to do. So remind me about Baba because that'll give me 3 days worth of content right there. I just need one stock. You give me one stock, I'll give you 3 shows. Like that. That's the deal that we can make. And so let's see. Kimberly is in the house. What's up there, Kimberly? I appreciate you so much, my friend. Thank you so much for being here. Sam L. Doc, fake CPI data dropping tomorrow. I know. Feels like the market's getting a 2-scoop serving of pains. It's getting something. I mean, it's going to be getting something for sure. And again, this is not coming from the official CPI crew. This is coming from like Johnny Poole's 47 and Johnny Poole's 48, right? And so this could be an uptick, actually. Like, I think it's a downtick, but maybe not. Like, maybe we need some fresh eyes. We need some fresh ears. We need some fresh ingredients, right? Kind of in the batch of cooked up fake CPI numbers. And so let's see what happens. And I'm really, really interested to see what goes down. But Steve Aguilar is in the house. I need that VIX back up so I get some premium selling going again. I know. But again, I mean, this is why we do what we do. Like, when the volatility expands like it did, selling premium is just such a good strategy. And again, if you actually, take that kind of one step further and you think about like my favorite strategy, which is a short put, it's like, man, when volatility spikes, I mean, selling puts is just such a profitable strategy. It is just such a good, sound strategy. Now, of course, for every gimme, there's a gotcha. That's always the case. And so when you sell puts, the gotcha is if it keeps going down, you get double whammied. Like, you get hit on the delta, you get hit on the vega, and that's the way that it goes. And that is, of course, what you are signing up for with that. But you have so many things working for you. You've got the positive theta, you've got the negative vega, you've got the positive delta and the positive drift of the market. I mean, all these things are kind of tailwinds for you. And so it can be really, really beneficial in that regard. But let's see. Rand says, if I can get this going through till tomorrow, I can make a little money. Oh, if we can get this going through till tomorrow, I can make a little money. Well, be careful because you've got those CPI print coming out in the morning. Let's see. Ash is in the house. Algos killing options. Yes. Algos are killing everything, I think. We got Scramble Everything with a Michael Scott reference. I'm a big Office fan. Michael Scott is one of my favorite characters of all time. And so that's good stuff. JM's in the house. Let's see. Ash is in the house. Ash talking about the algos killing the options. And then don't order the mahi-mahi. The mahi-mahi at Bonefish? No, dude. If you go to Bonefish, like, listen, I shouldn't even have to tell you guys this. If you're going to Bonefish and you're getting mahi-mahi, or if you're going to Bonefish and you're getting grouper, or if you're going to Bonefish and you're getting fish, that's a rookie play. This is novice stuff, man. You go to Bonefish and you get the fillet. You go to Bonefish and you get a steak, right? It will be the most B- steak you've had in your entire life, right? But you're going to pay an A+ price for it. And so that is indeed what you're signing up for. But that's what you do when you know what you're doing at Bonefish. Everybody knows that. And so see, Wit7 in the house. What's up there, Wit7? Joel James. What's up there, Joel James? Oh, Joel James says, don't do it. Close them up. Yeah, we did it. We closed them both up. So we came to our senses. But let's see. Joel James, Rats Media. I had to come to YouTube for this. Let's see. Dr. Jim. Yes. Bears scratch. I don't know what that means exactly. Maybe you're talking about the IBM and Tesla. Maybe you're talking about the Chicago Bears. I'm not sure. Let's see. Scrum thing. Those earnings are going to keep the PEAK, post earnings continuation. Oh, yeah. That's the PEAD that I've talked about before on the show. The post here. Let me get my marker. PEAD. So that's post earnings announcement drift. This is something that there's a lot of academic literature on this. I had to read all the papers back when I was in my doctoral program, and I've since forgotten what most of them had to say, other than the fact that I do remember the acronym. So that's good. But the basic idea was when a company has a big earnings surprise, and I can't remember how they actually define surprise, but they had a way of doing it that was quantitative and consistent. But when a company has a big earnings surprise, they do tend to continue to drift in that direction. And so it is that actually makes what happened today in both IBM and Tesla even more surprising, because that's not normally what you see. Normally you do see the gap and go or the gap and crap. Like that's normally what you see. You don't normally see the gap and close on that day, like on the same day. That's pretty unusual. And so this is a very commonly known phenomenon in the world of academic finance. Let's see. Tom Wamsgans. Man, if that's your actual name, that's a power move, man. Tom Wamsgans. That's awesome. If I'm even saying that right, I'm saying it how I think I should say it, and that could be wrong. But that's amazing. Like, Mr. Wamsgans, your reservation is ready. Like, that's just like, I mean, you'll be turning some heads for sure. There's no doubt about that. But would a ratio backspread, thank you for being here on the show, by the way. Would a ratio backspread on PNC be a good one? I don't know, man. Let's take a look at it. I've only got 1 minute to go. Let me look at PNC really quick. Whether it be a ratio spread or just, okay, so you only have an IV rank of 11. Do they have earnings coming up? Let's see. No earnings coming up. The IV rank is only 11. So Tom, I would probably not do anything with selling premium in PNC right now, whether it be a ratio spread or a strangle or a short put or verticals, iron counters, whatever. I think waiting for the IVR to be a little bit higher is probably the prudent move here. And so with the implied volatility rank at only 11, I'd probably be a bit more patient to consider any premium selling strategies, such as a ratio spread like you suggested. But guys, I got to go. Man, I'm totally out of time. I can't believe it. It's so fast. But I appreciate you guys, man. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal coming up next with Engineering the Trade. In the meantime, guys, trade them small, train them heavy, and stay generous. We'll see you guys tomorrow.
So Tom, what is your definition of underwater?
The futures close 15 minutes after the cash markets close. So underwater means when the futures close under fair value, under the cash price.
If you're selling in the hole, what are you doing?
Oh man, if you're selling in the hole, you're puking. That means you're selling it at a price you don't like, but you have to do it because it's hurting too bad.
Tom, in the pit, when somebody would say it was an out trade, what would that mean?
An out trade's a mistake. That means one person thought they were doing one thing and the other person thought they were doing something else. And so an out trade is just another word for mistake. You can use an out trade in anything in life. When you just have a misunderstanding, that's an out trade.
When Tom says double whammy, what does he mean by that?
Ooh, double whammy is when you roll down calls because the stock's going lower, and then all of a sudden the stock goes higher and you start rolling up puts, you're getting double whammy.
We're going to get him there. We're going to see, guys. We're going to see where this thing all ends up. Meanwhile, I know I got to share this video with you guys at some point in time. I got a couple of videos I'm going to have to share soon with you in his football. There's this one play from this past week, and even though we lost, he just like blew up their whole line and blew up the backfield, got a nice little fumble recovery. We should have won that game. I talked about it on Monday. We should have won that game. It was a tough one. But that's not really what I really want to talk about. I'm just giving you guys the update. We got to talk about some professional sports stuff because there's a lot going on there. First of all, Bulls win. First game yesterday, they win. The kid who I think you're going to hear more and more about, Matas. I've talked about it before, but I remember him about 5 years ago when he was in high school. My oldest son was working out with this one trainer, and this kid was also working out with that trainer, and he was big then. You could see it then. I mean, he must have been like I can't remember. Is he like 20 years old? I think he must have been 15. Matas Buzelis. I think he might have been 15 then. Okay, so he's 21. So he might have been 15, 16 at the time. And his birth. Yeah, I think he must have been like 15 or 16 at the time. And yeah, he was pretty tall then. You could see the talent then, but who knew, right, that he's going to be in the NBA? Pretty wild. He balled last night. He had a good game. But look, there's nothing more to talk about other than the main game last night when you talk about games was the Dallas Mavericks and the Spurs. Wemby put on an absolute goddamn show. If you did not see any highlights, you got to see it. It was the most amazing thing. I mean, seriously, this dude was doing stuff. He had control of both ends of the court. It was incredible to watch. It was incredible, I tell you. So, oh, really? Missed half of what story? Sorry, what story? Tell me what story, which one you missed. I'll retell it, no problem. Apparently I was muted for a little bit. He missed half the story. Well, I don't know what half the story was, but Matas, but I've known who he was since high school. Again, last night, Wemby was incredible to watch, and Cooper Flagg's debut. You could tell Coop was just a little bit was a little bit nervous, definitely a little bit nervous. Not in the first play of the game. He almost had this highlight alley-oop. I think when he missed that, kind of messed him up a little bit, but he's going to be just fine. Trust me. I've watched that kid play a lot, and again, you got to remember this is a kid who impressed 2 years ago or a year ago and change when he played against the biggest stars in the world in the USA select games. So no, he's the real deal. Don't worry, just a rough night. But it's hard not to talk about this huge scandal that's going on in the NBA right now, man. That is really fascinating. If you haven't heard, there's a huge scandal. They clearly dropped the news for this on this day, as opposed to even yesterday, knowing that the NBA is drawing a huge audience right now, and they just want to make it known we are watching this. We are watching betting and things around the sport. And it's going to be a big scandal. There's going to drag other people's names in it. I'm sure the league's going to have to clean it up. It's going to mess with their reputation a little bit. But I tell you, it is something else, man. It is something else. So, yeah, you got to keep watching out for that thing. There's going to be more and more news coming out, I'm sure. I got to tell you, just watching those games yesterday was something else. But, yeah, I mean, then you hear about Mr. Big Shot and, Chauncey Billups, for those who don't know. And it is, I don't know. I feel like it's not the end. Let's pull up the slides. Let's talk about what's going on here today. Woo! Lots happening. Quantum computing stocks, they are in the crosshairs once again. They're talking about the government possibly having investments in them, and it's not surprising if they are. I mean, again, you've heard about not only the government doing different investments in different areas, but now you also heard JP Morgan mention it last week during their earnings. They're setting aside money looking for investments in areas. These are the things that are making markets move, and I would not be surprised if they're actually doing it. A report came out during the day saying they're not actually looking to invest, but then one of the companies, I think it was IonQ maybe, came out and said, no, the government has approached us about getting a stake. So this is something that has been talked about throughout the whole year of these quantum computing stocks. They have traded heavily. I'm in a couple of them right now. It is something else. You've seen the movement in them, and they have the vol. I'm sure a lot of you are trading them. I just think it's going to continue to be the gift that keeps on giving as far as trading these stocks right now. Oil has been so quiet, but it's a huge jump today, and really kind of a 2-day jump. The U.S. is sanctioning Russian big oil companies. They're saying that they're taking their time ending the Ukraine war, and so as a result, there's sanctions there. Of course, you're seeing the big move. Another situation where you're able to, if you bought oil in the 50s, you're loving this right now. You probably got out though. I feel like most people didn't hang on to some of their oil longs down there. It really did feel like oil was headed for a new lower range, and now, moving much higher now. Really strong, really stark comparison to just a week ago. So keep an eye out for oil here. Finally, we got CPI coming out on Friday. Now, is it going to be hot? I mean, that's what we've seen, right, in recent times. CPI a little bit elevated, but they've been mixed. Sometimes CPI has been hot and PPI was lower, and then vice versa. I'm not really sure what to expect. Can we expect a move? I mean, you would think so after this current environment. Bonds have been pretty quiet. I feel like this is going to be the thing that makes bonds move at the very least, and we're probably going to see a gold move. You can see gold moving up higher today after a 2-day drawdown, and I think it's in response to some this report. I want to see if gold's going to cross 4,200. It's a different trade now, you know. I mean, as much as I pounded the table on gold falling recently, going back to earlier this week. Now that you had the big 2-day trade, now it's kind of cleaned out some of the big time sellers, and I feel like some of the buyers might step back in, which I think you've seen more recently. So it's a different trade. It's not like the big short like it was before. I mean, it was clear that the short, it was such a huge short on Monday, but now, not so much. Leftovers, the U.S. ranks 7th in worldwide rare earth reserves. Let's move to the next slide. So this chart shows you where everybody ranks. This is why we've been talking about these so much of China. Obviously, China controls a lot of it. Matter of fact, China controls 70% of rare earth mining and 85% of the refining capacity. 44 million metric tons China has. Brazil is next, 21 million metric tons. Are they? I always forget. Geographically, are they the same? I'm curious. Off the top of my head, let me know. Are they like similar longitude? I mean, obviously Brazil is, pretty big, but I wonder if the meat of Brazil is around the same as the meat of China, and that's why they both have so many. Let me know. India, 6.9 million reserve. You see where I'm going with this, right? And you see where India is, right? Okay, I'm just saying. 6.9 million metric tons. Australia, 5.7 million metric tons. Russia, 3.8 million metric tons. Vietnam, 3.5 million metric tons. Where do they hide that? In the forest in Vietnam? In these hot, sweaty forests? United States, only 1.9, 7th on the list, 1.9 million metric tons. Greenland, 1.5 million metric tons. That's why we're buying Greenland. Sorry. I couldn't resist. That's why we're buying Greenland. Tanzania, 0.9 million metric tons. South Africa, 0.9 million. Canada, 0.8 million metric tons. Now, that's interesting because, again, if it's a latitude and longitude thing, you want like Russia and Canada, right? Same level, but yet a whole lot less in Canada than in Russia. So there's your mining in metric tons, those who hold the rare earth metals. Let's move it to the next slide. I see you guys in the chat. I'm going to get to your question a little bit. The last 3 weeks of VIX futures curves here. We're in the middle, right? Last week, vol was a little bit elevated. We were in backwardation just a bit. Got more so by the time Friday. And the week before, which was my oldest son's birthday, October 8th, this is the last 3 Wednesdays. And so the week before, we were strongly in contango. We've jumped up a bit last week. Now we're kind of in the middle. Anything could tilt us either way at this point, honestly. I mean, another strong rally, and we're going to look like contango, especially if it happens tomorrow heading into the weekend. If for some reason some news comes out tomorrow and we drop, I don't know if we go back to backwardation, but we could be close and have a real nervous time heading into Monday. I mean, that's basically what it was last week, right? Right? Did we drop last Friday? I'm already blanking. Like, I know gold dropped. No, it wasn't last Friday, was it? Actually, we bounced last Friday. It was the previous Friday. It was 2 weeks ago. On the 10th is when we dropped. So, yeah, this is where we are. Let's move to the next slide. I told you rates have been fairly quiet. Bonds have been fairly quiet, I feel. Also, we're not in the middle on this one. We're at the bottom here as far as the rate curve. So the rate curve has dropped to the bottom, which I guess is in anticipation of the rate cut coming up next week, matter of fact. But yeah, you can see each of the 3 consecutive weeks, rates have started to come down. I think I just saw something today that housing prices are the lowest that they've been in quite a while. I can't put it into context, but if I had to guess, they're probably the lowest they've been in 3 years. I mean, my guess, 4 years probably. 2021 maybe, Let's move to the next slide. This is what we got coming up here, and as far as things go, the stuff in the white is macro, which again, we don't know about some of these things, and then the purple is what I could do on some of the earnings, big earnings that are interesting. CPI tomorrow. We got FOMC, of course, on Wednesday. In between, you got some earnings from Boeing, from UNH, from Google, from Meta and Microsoft, and Amazon and Apple next week. So the bulk of the Mag 7 report next week. So far, my earnings trades haven't worked out. But again, that's the nice thing about having calendar calls. They're pretty cheap, And arguably, you could say I messed up the iSurge one. Some of you probably took off. It's probably smart. I didn't expect iSurge to keep going up. Holy cow. PCE theoretically is on Friday. I can't exactly figure out why the end of the month vol is so elevated there. Right around where I have ExxonMobil and end of month, EOM, and PCE is supposed to be Friday. So, I don't know if PCE is expected to be equivalent to CPI. I really don't see that in the past, but maybe it is. And again, we're not even sure if PCE comes out, but it will be the end of the month. And you know how end of the month flows go. So it could be fascinating to see how that plays out. I think we're up 6 months in a row on a lot of the indices, maybe even 7 on like the Dow. I can't remember. Then the following week, we got Palantir, AMD, Uber, Hood, Humana. It's all about earnings at that point. You got MP earnings. I don't know if they're going to move on earnings, but it's fascinating. And you got ConocoPhillips. Theoretically, you have an ADP and a non-farm payroll number, but we didn't get one last month. How are we going to get one this month? I don't know. Then you got Disney the week after and a bunch of others, but Disney's the most interesting one, I thought. And then after that, you got options expiration about 29 days away from today. Let's move to the last slide. Intel, Newmont, Deckers. I know somebody just asked me about Newmont earnings. ALK, Ford, Procter & Gamble, and GD have earnings coming out. September CPI report on Friday, and of course the FOMC next week. Number of S&P 500 stocks above the 50-day moving average is 241. Probably is higher by now. I actually did this earlier in the day when we were only up like 10, 15. Let's move to the platform, the Platty. Did Billups get caught up in this? He got caught up in a separate situation, but still an investigation. So apparently he was running they say, I don't think they were saying he was running, but from what I understand when I read the story, he was part of this illegal poker operation whereby they would bring in these famous people, and him being one of them. And again, he's still currently an NBA coach, right? So high visibility there. So he's doing the poker games, and there's rich people that want to play with celebrities, right? And apparently the whole thing was rigged, whether it was the cards or everything. And I actually just saw a video of this guy talking about this 2 years ago, so it's probably been going on for a while. You could probably easily do it. You get rails to come in. Matter of fact, isn't this the same thing that Molly's Game kind of was, that movie? I actually need to watch that from start to finish. I've watched some of it before. I don't think it was rigged. Nah, it was kind of rigged, actually. I think it was in the movie. Or at least this one guy rigged it, and she didn't realize it was rigged. Her job was just to get the whales to come in and kind of handle the whole thing and manage it. But it was kind of like that, I believe. So yeah, it's there's a lot going on in that situation, and the whole thing was backed by mafia families. It's being talked about a lot today. Matter of fact, I'm just risking my life talking about it. I'm going to stop right now. Seriously. So questions. Let's see. Questions. I know somebody's asked about earnings. Happy Thursday, Jamal. Who do you like tonight, Minnesota or the Clippers? Also, what are we doing with Newmont earnings after the close? I gotta say, I like Minnesota. I love Ant. That dude is something else, and I might even watch a little bit tonight. That game last night with Wemby, that's probably the most of first of all, that's the most of an NBA game that I have watched prior to December in a long time. I mean, I watched majority of that game. Ended up watching the whole thing. I mean, I like Cooper Flagg out of Duke, of course, neighborhood. I'm a Duke fan, so of course I'm watching him. But and then to answer your other question about Newmont, Newmont took off, didn't it? The stock took off today. Yeah, look at that. I tell you what, I really hadn't had anything in mind to do. I was looking at some of these upside plays in it. It's typically not something that I would look to play in earnings, but I mean, I'm going to stay away. I don't know how much I believe it's going to move on earnings, but I tell you what, if there's ever been a time to play it for earnings, it's now because of what's going on with gold. I could see it doing something. There's a lot of options trading in here, that's for sure. I mean, I think you know what? Let's do this. We'll do a little something. We'll do that. That's not too expensive. We'll do that. And gosh, I really want to find something to sell against it. That's not enough. I want to do there's not a whole lot of premium, to be honest with you. I wanted to do like a call spread. I mean, this thing's not going to run $10 on earnings, is it? We'll do this. We'll do this. $4.32 on a $10 wide call spread. We're long the at the money in Nove, and we are short. I could go further out on this. Let's see what further out looks like. Long at the money here. What is regular Nove and like the 105? That's a $15 wide call spread for $5.80. I like that. We'll do that. We'll see what happens there. Immediate fill. Oh my God, you guys know what to do. I'm just going to play it that way for upside. I mean, obviously, this type of environment has been good for it. And so when something's in the zeitgeist, sometimes it's really interesting to play earnings on it. I'm going to play it for upside. I just bought the calendar, a $15 wide calendar for a little more than 1/3 the width of the strikes, right? That's $15. $5 would be a little more than 1/3 the width of the strikes. There we go. Ranch, appreciate you, man. Jamal at the Dr. J brings balance to my life. Appreciate you, man. Hey, Jamal, what do you think about adding Netflix? Thinking about buying the Jan 1200? First of all, yes, I love the idea. I love the idea of adding Netflix. I've been thinking about that too. And yeah, you're right. I think it's smart to go out a little further. I don't know how cheap these are. Looking at the stock here, it bounced off of this 100-day moving average, which tells me there are some buyers here. They're not going to let it go below 1,100. So we should play it back for a bounce to 1,200, right? You're looking at the Jan 1,200 selling 220, playing for the Netflix recover. I mean, I love the idea. I feel like Jan might be expensive, though. I don't know. Let's see. What kind of pockets you got, big dog? How much you are spending here? 1,200, 1,220, huh? Ooh, that's kind of rich. I mean, to be honest. $1,300. Well, they really don't make it easy, do you? What about Dees? What about Dees to Nove? Dees to Nove. I mean, you're playing for the capture more earnings. It's going to be a while too. $1,200. This is a beefy trade, but I'm going to do it. 1,200. That's $300 more. 1,500. Let's see. This is $20 and that's 1,500. I don't love that. I just love the regular calendar. Let's see if we can make for a play back to immediate fill. Like, what is going on? Immediate fill once again. Okay. Yeah. We're playing for another rebound in Netflix there. We'll see how that goes. Molly got caught taking a rake from the table. Yeah. Let's see. Do you think CPI in the morning has any real consequence? Well, I mean, look, CPI CPI has moved markets at times. Let's see. The market is expecting a 40-point move. I mean, I think it has some type of bearing. I think for the fact that we haven't received a report in a while too, I think is going to be part of it. So yeah, I do. I actually think it's. I mean, I think it's having a bearing on markets right now. Actually, a little bit. I mean, you know, gold is running back up, bonds are fading a little bit. I think it will. I do think it will. Wemby was definitely a beast last night, bro. Wemby was a beast last night. It was something to see. Hasbro was good on earnings. Can't make an omelet without bringing a few Gregs. Yeah, I like that. I like how that sounds. The person who famously said that, well, wow, there was a big turnaround here today. Big range on earnings, $8.88. You know it's a crazy market when things like Hasbro and Mattel are moving. Isn't Mattel moving too? Didn't I hear that mentioned recently? Another name, in other ways. I know Netflix mentioned one of these two, or both of them actually, on their earnings call about toys for K-pop Demon Hunters. Boy, that thing is really. I mean, I've like heard of it loosely, but I didn't realize how popular it was, particularly overseas. Really popular there. Let's see, what other trades have I done today? I'm sure some of them you guys have seen. I think the main trade of the day was Quad U. Did that today. I actually, speaking of trades, Meta, and I had to close deal with some things that are finishing early. As a matter of fact, I need to pay attention to this a little bit. The Tesla trade has worked out. Somebody, I think, asked me earlier about how I'm managing it. Look, I'm just playing this for. I'm just going to hold on to it, at least maybe till tomorrow. Maybe I close it tomorrow. I mean, you could also just be long an upside call at 475 in Tesla. That's back towards the highs. 470, I think, is for the year highs here. You know, I may determine to do that. It just depends on how the stock is moving. But for now, I'm not closing it today. I'm going to see what it does tomorrow. We have a tendency sometimes for Tesla to move on a Friday for whatever reason. Don't ask me why. iSurge, like I said, I messed this up. I will say, though, this is wrong. I think it's wrong. So let me explain what I mean. Right now, it's showing this call spread as a $20 credit. That doesn't seem 20-cent credit, right? 20 cents, 1, 2. That doesn't seem right to me. There's no reason why there's this call. The whole thing about these calendar call spreads, there's no way this call should ever be worth more than the other call. However, I'm starting to worry a little bit. I'm wondering, I think I might close it today because I think these calls are going to get assigned, is what it feels like to me. And it almost feels like there's a dividend or something I don't know about, but there's not a dividend. I looked just to be sure. There's no dividend coming up. But the way this thing is trading like there's a dividend, just because usually you don't see this amount of downside calls trading. Like there's 1,000 of these trading on this 450 strike. Why is anybody trading these? Not really sure. And so my whole thought process prior to today was to hold this and see if maybe it fades back down to the 400 strike, because then these things would basically vanquish. But the fact that I'm seeing all these deep in the money calls means I think somebody's going to get assigned me, especially on the strike today, 1,000 of these traded. I'm going to get assigned on this, bro. And so I hate it, but I almost feel like I have to close it out. And it sucks that I can't close it out for good prices, I think. I don't know. I don't necessarily. I'm trying to think how I want to handle this. I mean, I basically have to close it, but there's a lot of things happening here on the deep in the money strike, and that's a clue that something's about to happen maybe tomorrow. So if I can pay 10 cents to get out, I will. Shoot, rejected. Why was I rejected? Spread check. See, I know it's all screwed up. Paying to sell the calendar. See, it knows that, and so something's wrong here. Yeah, something's off on this spread. I'm not exactly sure what the situation is. One of the things I can do, and so if I get assigned tomorrow on those calls, I'm going to be long, naked, and the money calls, right? So, and say the stock were to drop, which I don't expect it to. But here's what we can do. Just in case the stock drops tomorrow, I don't think it will, but just in case, we don't want to get screwed over. Let's see here. I could buy 2 of these or maybe just buy 1, but we'll see. if let's see, if tomorrow these close, got to do some real-time analysis here. If they close these and the stock falls, I would be exposed. But if it drops, I could still make a little bit of money. Maybe I need to buy 2. I'm not going to spend $300. I'll spend $1 for a put just in case something's going on that I don't understand right now. And I'll buy this put just in case some shenanigans happen here. And then I'll be protected a little bit on these downside calls that I have. Protected just a little bit. So we'll see how that goes. You got to, you don't want to get too caught up in it. But let's see. Hey, Jamal, can you show me how to lock in? Look at the charts in GC backwardation. Well, I'll tell you what. One of the things you can do, GC, you just look at the futures. 4151, 4183, 4216. That shows you right now how the futures are. What you can also do is just create a watch list and put in the different futures, the Z contract, and it tells you all the contracts right here, GCC, Z5. You can make a watch list out of the different futures, and that way you can see if it's a contango or backwardation. Hope that helps. If not, you can email me at jamal@tastylive.com, or you can tweet me at Jamal Chandler anytime. Folks, that's the show. Thanks for watching, and as always, be smart, be patient, trade them small, trade them often. See you.
If you say way to go out on a ledge, what are you doing?
Way to go out on a ledge is just another expression when you make fun of another trader who's not willing to take any risk, who's very risk averse. So when somebody's very risk averse and doesn't want to do anything risky, you say, "Hey, way to go out on the ledge."
When you say you're going to whack the bid, what are you doing?
When you whack the bid, that means you're selling at the best available price.
A scoopy.
Scoopy! That's always something. The penny or the position is, do you want the trade? Then just pay up to get the trade. But do you want to squeeze it for a penny? That means you're just going to wait until you get filled.
When you say Omaha, what happened?
When I hear Omaha, I know I've gone too far.
Hello, everybody. Happy Thursday. We are going to catch up on some charts together. Just as a quick note, I'm going to be traveling tomorrow, so I'm not going to see you again until Monday. But tomorrow is going to be a very interesting day because of the CPI. And next week it's going to be unhinged because not only do you have everyone's big names in there reporting earnings, but you've also got the Trump-Xi meeting on Thursday, and you've got the FOMC on Wednesday, and you got Halloween on Friday, so it's going to be crazy. So I'm glad I'll be here all 5 days next week because it's going to be a lot to follow. Let us thumb through charts right now, which are by and large are at the cusp of breaking into lifetime highs. It's really all up to the CPI at this point. So you're going to see a lot of that theme. So it's the spider. And that horizontal represents the former lifetime high on an intraday basis. And as you can see, the past 4 trading days we've been kind of hanging out just below it. I think the market's just looking for a reason to burst above it. A chilly CPI might do the trick. Of course, we're in a world now with very little in the way of data to go by, except for the earnings. And where the disposition toward China trade is vacillating day to day. Right now, it's really positive. So they've confirmed the meeting next Thursday. I wouldn't hold your breath for anything amazing to come out of that. We went through the whole shtick with the first administration. China trade talks are going well. That phrase was uttered a few billion times. And at the end, when all the trade talks were settled, it was like a nothing burger, just absolutely inconsequential. So this is just, hope springs eternal. This is just a way of kind of keep feeding hope out there about some great new thing that's going to go on. And yeah, wait till after the meeting. The diamonds are hanging out near their own lifetime highs. On an intraday basis, we achieved that on Tuesday, it looks like. But just a lot of smoke, very little in the way of fire right now. The IWM, small caps are up pretty nicely. Yesterday was down pretty hard. We cracked for the first time that ascending trend line. We're above it again. A really trendless market. You can zoom in here nice and tight, and you can see for weeks now, just kind of ambling along and not really going anywhere, even with now plenty of earnings coming out. And those don't seem to stick anyway because not a lot of direction there. So, last night it was Tesla and IBM, both down hard. And last night, Tesla was up nicely, and IBM was down a lot less than it was. We'll look at those charts in just a moment, but no real direction. And speaking of China, which of course is the complete focus of all trade, second largest economy on the planet, here we have the FXI, which on the one hand has been below its broken trend line for weeks now, but on the other has stabilized quite nicely, as you can see. We could lay down a horizontal. Where are you? Round about, that's not quite it. Something like so. And that delineates the break where we've been beneath and kind of a ceiling we're dealing with right there. So should, like the spider and the diamond burst above there, the spider burst above its former lifetime high. Likewise, I think this too would leap over that green line. As far as those earnings go, the biggies were first Tesla. You can see this huge green bar here showing a weak opening and quite strong right now. We're up about 1.5% at the moment. And I listened to the earnings call, and the main thing that we're pushing is, hey, you shareholders, vote on November 6th, because there is the trillion, yes with a T, $1 trillion pay package for Mr. Musk that's being voted upon, and other incidental items like I believe they're voting whether Tesla should invest in XAI, which is another Musk company. So, he sort of made the case for the $1 trillion pay package, which oddly was, I don't want to build an army of robots and then get kicked out. Okay. So anyway, whatever concerns folks had last night have been shaken off. Although we're still, look, it's been like a month and we've just been kind of hanging out in this egg right there, this egg yolk we've got in the middle of the screen. Again, lots and lots of smoke, but precious little in the way of fire. And did not make lifetime highs either. You can see from that horizontal farther back, that peak was sort of in the kind of post-election Elon's going to rule the world mania, and that obviously preceded a big tumble, which has largely been undone. The other big earnings was IBM, and that fell really hard, but it's been pushing up all day long. It is still down 1.3%, but it's pretty much shaken off all those concerns. The lifetime high remains the shooting star up here. The next big test would be if it could beat Wednesday's peak, right? Like so. But yeah, those who sold early today probably are regretting it because it's been fighting its way back nicely. The actual big news today is crude oil. And again, politically driven, more sanctions against Russia. And so crude is up nearly 6%, very big move. Long term, you may recall that we've been watching this level of support, and we've got a big all right triangle pattern forming right there. It has held steadfastly for a very long time. That triangle goes all the way back to 2021. Should we ever break it, it's going to be pretty serious, but as it is now, it seems to keep avoiding. So the closest it got was about a week ago, and then it's gone flying higher, although now you're hitting a lot of overhead supply here. So that's probably just about all she wrote in terms of crude strength. Having said that, for the bolder among you, you might at least take note of this gap with XOP, the oil and gas exploration and production ETF, right? Like so. Nice gap here, down a couple of weeks, and then boing, up it goes again. It might be worth considering a bearish position against this with that gap as a stop. Like I said, I'm traveling tomorrow, so I'm not I'm keeping my positions light and simple. I'm not going to add any new positions. But it's an interesting chart. Wanted to just mention that. Over in semiconductor land, always important. NVIDIA seems kind of like, you've probably seen the meme of the guy poking the stick, like do something. That's what NVIDIA is doing right now, because NVIDIA is the same price now that it was in July. So biggest company in the world, all sorts of announcements and deals and giant, $500 billion deals with OpenAI, et cetera, and nothing. It's just sitting there. So I guess it's trying to kind of grow into its value, I suppose you could say. But its own lifetime high was earlier this month, but it's just kind of sputtering, even with a strong tech market right now. Even with that, SMH is in the green today. It's up over 2%. And kind of the same deal you were seeing with the spider. We've got this ceiling going on here, this resistance level. It did peak its head above it just a little bit, like so, but this is the key level to break. And once more, if there is a bull-friendly CPI in the morning, we could easily see all this stuff, the spiders and the cubes and the SMH jump right above that resistance. And lifetime highs tend to get more lifetime highs because everybody's in the green at that point. What else is going on? Well, always got to talk about precious metals, and I've got one or two things to say about that. Gold is up nicely. The front month is up over $81. It had a really bad session back on Tuesday. Some more weakness yesterday on an intraday basis, starting to recover a little bit. I don't know. I'm not fully convinced. That was a big hard sell off. It makes sense now that some parties are coming in because gold is on sale in quotes. But I'd be more enthusiastic if it took a bit more of a pummeling than basically a day and a half. So it's trying to undo a lot of oversoldness in a very short amount of time. That could be it. Yesterday's low could be the low for years, who knows? But it just, I'm not fully convinced the selling is over in spite of this bounce we're getting. Looking over at silver futures, those are also up to 2.22%. Those peaked earlier than gold did. But here again, we've had this tremendous rally and it's had very little in the way of selling going on. The one thing that kind of leads me to think maybe there's more selling to come is the miners ETFs are pretty vulnerable looking. And it's because of these price gaps here. Here's GDX, which is the principal miners ETF. It's up about as much as gold, but that's going to be an important level of resistance for the miners. I could easily see this resuming the sell-off. And to be clear, I have no precious positions at all. And I'm going to talk about palladium in a sec. The junior miners, exact same thing, just a different price. We've got that gap right there representing resistance. As far as palladium goes, I took profits earlier today, made a nice little profit, just like I did on those two or three dust trades. But here's my rationale, and I may regret this again. But PAL will be a fantastic buy, I think, anywhere south of 120, 119, 118, if possible, 116. I can't see it really going much below that. It is cheaper than it was. That's true. But it's not a bargain. And I guess between my travel tomorrow and the fact that gold and silver are still pretty lofty, I decided to just play it safe, take the profits, and wait. Because as you know, the long term, it's a beauty. And I've hammered home my fondness for this chart many, many times. This looks a little risky to me. So I took advantage of that pop yesterday. And like I said, got out earlier today at a nice profit, but I'm out. I'm out on this one. You're gonna have to excuse me for it. There's something funny. You've seen this from time to time on the show where the cursor just stops. I've got to press a button. I'll just disappear sound-wise for a sec. Okay. I should be back with you. There. I don't know who's causing that. I don't know if it's the browser or what, but easy fix. Okay, moving on. Now, Jenny mentioned SO yesterday, Southern Company. And not much to say about it. Like I said yesterday, I'm kind of a Rain Man with these charts because I don't look at SO hardly ever, but I remembered I sort of took a shot saying, I think that's a perma-riser. And it is. It is a perma-riser. What I mean by that is this. This thing just goes up in perpetuity, it seems. Year after year, decade after decade. It has its ups and downs, but on the whole, it's one of these generational wealth-making companies. Shorter term, I have very little to say about these wiggles and waggles. I mean, it's this is more the thing on a long time horizon. Makes sense to talk about because it just seems like a solid long-term bet. Short term, it's having some trouble here, and I guess I'd be more inclined to say down than up. But there's really no pattern there to speak of. So I'm sorry, Jenny. There's no opinion on this side. Oh boy. I see that we are out of time. I'll just close with one last chart. IEF. This is the 7 to 10 year bond fund. And because the CPI is coming out tomorrow, I just want to make mention again that in order for interest rates to really be conquered, in order for this bond fund to thrive, it's got to break above this trend line. And it's close, and a big bond rally would do it, but it's not there yet. So anyway, like I said, off tomorrow, but I'll be back Monday, and I hope you do well. See you then. Bye-bye.
tastytrade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
We
wanted to call in because recently some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted, and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you.
This was not a paid, you're not getting paid for this advertisement.
Mikey, my friend, we are back, and man, it has been a grind fest for the better part of the last 5 hours. It seems like we've got E-mini S&P 500 futures are up 44 right now. They're about 4 or 5 points off the high of the session. You got the NASDAQ up 231, the Dow up 154, and the Russell, the strongest of the group, it's been the most volatile in both directions, up 33, a little over 1.33% to the upside there. Oil catching a big old bid. That must have worked out for you if you had that MCL contract. I think we got in last week. /CL 6171 up $3.21. Huge move there. Bonds are down 19 ticks. You got gold down 76 or up $76. Silver up $1. Bitcoin and Ethereum both strong all day. Bitcoin's up 1,700 from the open of the overnight session. Spot's up 1,700. Futures are up 2,600. Ethereum up $41. The real story today is volatility in my book. /VX 1895. It's come in about 40 cents, about 2%. The VIX though has come in, has been absolutely smashed. $1.31 coming in on the VIX at 1729. It's been just an absolute bludgeoning of volatility today across the indices. Across individual stocks. It's just been vol just getting absolutely vaporized. That's been the story of the day.
Yeah, that is for sure. We are now at the lowest point we've been in since the big sell-off in the broad-based indices. But yeah, I mean, that's what happens when you get a rally after a sell-off when vol was already in contango and vol was already low. But yeah, I think the steeper this contango gets, if it continues to steepen out, I think it's just a matter of time before we get back to highs.
No, we're there. We're 10 points off the highs pretty much, or we just were.
Yeah, it did. We have erased the Friday sell-off here from 2 weeks ago. Yeah,
as has been the case of all other sell-offs. They are swiftly bought up. It's been a wild session. You guys get any new positions on? I've been itching for some new stuff because I've been taking off so many trades so quickly. I had some trades even from yesterday. Like I did just a short put in VST. This was one that came from somebody on Reddit, posted us a trade to sell the 165 put. I mean, the stock was down when we were trading it at 185. It's rallied $5 or $6, and that put has come in a full $1 overnight. I mean, today I closed it at $4, and it's trading at 360 right now, 380. I mean, it's just crazy the amount of volatility coming out of the market so quickly.
Yeah. But yeah, it's been the case. Even in the biggest sell-offs, we've seen swift reversals and big vol crushes. If you just look at a chart of the VIX for the year, I mean, that's been the MO this whole year. regardless of how high it got, it's been a just immediate crush soon thereafter. The only period of time where we've had elevated IV was during COVID, really. I mean, for more than a month, we'll say, of elevated IV. And that was much longer than that. But yeah, crazy times, to be sure. We did do a bunch of trades. It was the 3 trade ideas session on Options Trading Concepts Live. So we did get some positions on. Katie bought a M6B position. So did this on the Active Trader V2. So if you're looking for getting in and out of positions with one click, that is one way to do it. If you go to the Active Trader tab, V2. But yeah, we bought these just at price extremes, and we love that. I got into an SPX one-day Iron Condor, so I did the cookie cutter setup, collecting $200, risking $300, covering almost a 100-point range for tomorrow between 66.70 and 66.65. We are near that upper range now with this intraday rally, but if we get a chop tomorrow or a little bit of a sell-off, that'll be perfect for this position. And then Jamal sold a call in Quad U, sold the call in November at the highest strike available for $200. So that's the 40 strike. But this premium is really interesting because they have earnings coming up beginning of November. There's a 7-point expected move for that expiration date or expiration week. And if you look at these strikes, the November monthly strikes, the 40 strike, this was trading for $2 earlier today. So speaking to your point of just a massive vol crush, already coming in aggressively, but look how flat this premium is. Like if you wanted to take advantage of this upper tier implied volatility on these strikes, you could even do something like a call ratio spread or a butterfly or broke wing butterfly. And like this trade, the 30-40 call ratio one time is a 50-cent credit. You have a 10-point wide spread here that offsets your risk 10 points higher than 40. So you literally have a break even above 50 on this trade with the stock trading at 20 right now. So that's why this pop is so high. Even if you just do the short option, it was at like 93% when he placed it. It's higher now with the vol crush, but yeah, lots of premium here. And that's for good reason, though. You can see this stock has gone from single digits to 30, back down to 20. So it is a mover, but definitely interesting.
I like that. I did like a sort of crab trade, but I'm naked on the upside. So I bought the 25 in December. I sold 2 of the 35s in the November expiration. I did it at a 65-cent debit, a really cheap, upside play here. You do have risk on the upside though, so you got to keep that in mind. But put everything you said playing into it, and just with the amount of skew on the upside and the amount of premium on the upside, I just figure why not give it a little shot here.
Yeah, and huge break even movement to the upside, but yeah, still got to be careful with sizing because this thing does move. For sure.
Yes. I'm naked 1. So I got 1 naked call. No problem. All good there. I'm with you on that. I also followed Katie in the 6B. So I did those micros as well. Did a handful of those.
And yeah, Tasty FX. I've got I closed out of my Aussie dollar franc. That was up like $15. My only position remaining is my 15 micro lot position with 3 tranches in the short dollar CAD. But this was a $100 loser to begin the week. Now it's at 50. So we're moving in the right direction, and I don't need that much more to get out of this thing for a win here. If I pull up this chart, you can see my dollar cost average here at 1393-ish. So I just need us to get down here. We'll be okay.
Okay. We do have a couple earnings after the close today. I will say Tesla was one of the bigger names after the close yesterday. Sold off about 20 or 30 handles. It's now up 7, so big move there. Today after the close, we have Intel, which reports earnings here near the highs. NEM, Decker Brands, we have Ford, and then I think there's a couple in the morning tomorrow. Procter Gamble, not something that we really mess around with. Do you have a position in Intel? I went with a 1/3 ratio on the upside in the like a crab type trade, but I did it for like a penny credit. So I sold I bought one of the 40 calls in December, sold 3 of the 45s, and I did that basically for nothing.
In the 1 day? Or
No,
November?
I did it in the November monthlies. I figure there's got to be a vol crush across the board here. I mean, Intel implied volatility at 75%. Even in the November cycle, you got 70% in the December cycle. I feel like there's a couple points of juice at minimum to come out of that, especially if you get like kind of a sideways move here. That's really my play, because I have some short premium as well in November. I'm like short a strangle that's right at the money, basically. So I'm really doubling up on this vol crush thesis.
Yeah. So if I push this to tomorrow and the risk graph, and if we crush implied volatility, let's see, these are at like 50, let's call it 55%. These will probably go to. So if we bring this down to 55 in the short, and then we bring this down to the long, yeah. So if you get a non-move, even though this is a call ratio, you're still profitable on this option because you have this $3 option on for nothing. So you just need this to be worth anything for you to be profitable. Assuming this gets vaporized, the short does, and the long option holds on to value, which would happen on a non-move. But yeah, nice little trade here. And even if the long option, so this is if you crush both to 55, there is a world where maybe the long option holds on to a little bit more volatility.
Yeah.
And because we're kind of seeing that already with some of these stocks, they still have a ton of implied volatility for December and January. So yeah, I like it.
Yeah.
But no, I did not do anything.
A lot of the earnings have been kind of a sell the news event, even though Tesla has now bounced all the way back. If you see, like IBM has bounced back as well, but these were, IBM's candle is pretty incredible. Like, down 20 to flat is pretty wild of a move.
I mean,
just tells you how strong the buy the dip is.
Yeah. In all of these stocks.
All of them.
Like crazy. Like this is just like, it's just nuts.
Yeah.
Like this is insane.
That's what the market's been. It's been a buy the dip opportunity. I mean, anything that's gone down, I know you pulled up Netflix. That one is really the one that hasn't participated. It's on my radar here. It's kind of hard to trade though, just because it's maybe I do like a wide put spread, but it's hard to trade because volatility is just so low.
Well, Jamal said that he listened to the Netflix call and they were talking a lot about K-pop Demon Slayer, which is some it's just like the market probably didn't like that. Like give us numbers. Enough with the K-pop Demon Slayer.
I think I got to do something here.
I mean, yeah. It's the age old like vols down, markets up. Give me a Mag 7 stock that isn't at highs, and you smash the long position.
Yeah, I think I'm gonna do. Okay, I got filled on a call diagonal spread. I did the 1200 in December, and then I sold the 1220 against it in November. It's pretty expensive. Or I did the 1225. I'm sorry, 1225 in December. So it nets you about 15 deltas long. But I mean, volatility being so low, if you get a 20-point up move here and volatility kind of stays where it is, this will be a couple hundred winner at minimum. So I kind of like the thesis that you just lined out of, one of the bigger name stocks in the world, near lows on a day where basically everything seems to be higher.
Yeah. There's plenty of opportunities out there. You just gotta be nimble enough to find them.
Yeah. What's your portfolio looking like trade wise? Are you light?
Very light. Very light. So yeah, I've got some micro positions. So if we just look at all these, I got the micro 6B that I put on today. I've got the micro natty gas long paired with a natty gas iron condor on top of it. So no risk to the upside because this contract would offset my upside risk. So kind of like a covered iron condor, if you will. That one is pretty much flat on this move today. And just in general, up 90 cents on the iron condor, down 80 cents on the long contract. I've got this wheat position that could miraculously come into fruition if we get a continued rally here.
I closed mine this morning and I was like, damn, this thing is
that's how it works.
Now.
They got a notification that you were out and they mooned it.
Yeah, exactly.
ETH A, call diagonal spread there. That one's down $100 or so, but that'll be totally fine if we get a rally because my long option's right there. I'm short GLD by way of a put calendar spread that's up 60 cents and also a put diagonal spread on that I put on a long time ago. My IBIT strangle is flourishing in this environment and will continue to flourish if we keep chopping. Lulu short put spread, that's up 40 cents. So nothing, I'll hold out for that. Nike put diagonal spread, which actually is coming back because they rallied after earnings and then they've sold off since. But I'll have to ask myself why I didn't close it 2 weeks ago when it was at 65. But that's another discussion. And then everything else. So 1 day iron condor and SPX. SMR short put, I'll just roll this perpetually. Target call diagonal spread down $100. So like everything's kind of on the dance floor here.
Yeah. Yeah, but you're light because volatility has just been smashed.
Yeah.
I'm with you. It's been I've been a lot pickier with my positions here, trying to find stuff that's seems juicy here. The other story of the day is a lot of the not only meme stocks, but you've got like quantum stocks flying around. You've got some of the nuclear stocks. I know you mentioned SMR. That's kind of in that bucket too. So there's been a lot of these things are back in play.
Sorry, it's actually K-pop Demon Hunters. Not Demon Slayer. Sorry. Yes, that was very boomer of me. Can't merge.
You are not boomer yet. Unk, though. That was for sure.
That was an Unk move, yes.
Yeah, that was an Unk move.
I think my punishment should be I have to go watch it now.
Ooh, good luck with that.
Yeah, too bad there's football on tonight, so we can't do that.
That's right. Speaking of sports, have you read into the craziness of this gambling ring?
Yeah. It's ridiculous.
Insane.
I should sue them for any bet that I may have been a part of. I should.
Is that going to be part of it? You think that'll be?
Maybe.
I feel like.
There could be a class action lawsuit like through DraftKings or FanDuel or whatever.
Yeah.
Just basically like if you had a line on this game and they proved that they were moving it, like here's your credit. That'd be fun.
Yeah.
But yeah, it's insane. But there are some really funny clips on Twitter. Like Malik Beasley is one that was heavily videotaped where like it's 4 seconds left. The game's over. The spread was 8.5 and they were up by 9. He gets the ball and he sprints across the court while everyone else is just standing there and makes a dunk to move the line. I'm like, this, obviously this is what's happening here. Or that college football one where the kid, instead of taking a knee, he ran all the way back to the end zone and safetied himself. Did you see that one?
Yeah.
That's clear and convincing evidence of gambling.
It's a little crazy. I mean, these guys, they're like Terry has $100 million 4-year contract. Like, what are you doing trying to like steal $100K from some guy in sports betting? Like, what? It's nuts.
Yeah.
It's crazy. I can't wait for the Netflix documentary, Long Netflix.
Mm-hmm. Be amazing.
E-minis here have sold off. They've sold off about 3 points. We're only up about 38 right now. You got the NASDAQ up 210. Bonds a little bit weaker. I know we got CPI tomorrow. So, maybe that's telling us it comes in slightly hot. Who knows? But market don't care.
Yeah, they were pricing in a little bit more volatility in SPX for the 1 day than I was expecting.
Mm-hmm.
But CPI will be published to determine Social Security. So yeah, there you have it. I was wondering if they would even do it. But
yeah, that's what I thought. But this one, I guess they did some alternate reading of some sort. I don't know.
It's so funny.
I don't believe any of those numbers. Those numbers are as believable as a Chauncey Billups basketball game.
Yeah, if you look at an economic calendar, there's stars on every line item. But first star is temporarily suspended due to government shutdown. But then there's a star. CPI will be published to determine Social Security COLA. So we're getting it.
Amazing.
But yeah, lots of earnings next week. Next week we'll have plenty of written content on the News and Insights tab on tastylive.com. We already do for a lot of the tech stocks that have reported and will report. So definitely check that out if you want some written content from the peeps of Tasty Live. But yeah, the first ones are on like the 29th and 30th in terms of the big names. If we just look at volume, that's probably the easiest way to see it on the earnings watch list. So Intel after the close today, waiting on that. Amazon, Apple, both on the 30th after the close. Google, 29th after the close. Microsoft, 29th after the close. Meta, 29th after the close. So yeah, the 29th and 30th are going to be crazy.
Yeah, it's going to be interesting, especially with volatility where it is. I mean, markets at highs. What could possibly go wrong?
Great
question.
That's
the big question.
Yeah.
That's the big question.
Well, I think
E-minis here up 37. Go on. Sorry.
No, I was just going to say, I think if the market stays like it is now, there's more of a reason for people to really dive into these earnings if they smash. But if we get like a 60 point sell off tomorrow with a vol pop, I think it will create an environment where people are still weary of big investments in these companies just because the market isn't super strong at highs. If that makes sense.
I feel you. I mean, they're taking vol out to the woodshed here onto the close. You got the VIX futures down at the lows here, down 50 cents, while the E-minis kind of flutter around 67.75. I agree with you. I would like to see vol come back. I've been skeptical that vol, it feels like volatility has gotten crushed too fast and too much. Too quickly all at once. And so I've been a little skeptical. So I've been adding like some put diagonals in the Qs and SPY and IWM as just like a way to get a little bit of short delta. I mean, I'm perpetually long. I always have my long delta on, but I don't mind a little bit of a downside trade here given where we've gone.
Yeah, totally.
So maybe we'll get it.
But yes, if you want to see us banter live,
yes,
please do. November 2nd, we'll be in San Diego. We will be there all weekend. Shows on Sunday, after Sunday Night Football, I believe, or I guess during.
Yes,
because of the time change. But yeah, totally free show. Come see us. Say hello at the Music Box. It'll be a glorious time. tastylive.com/events. You can sign up for free. We got one tomorrow. Tom and Tony in Charlotte.
Yes.
That's at the Fillmore in Charlotte, North Carolina. 8 a.m. doors. Show starts at 9. Live trading. If you want to see the button be clicked a lot of times, go hang out at that show. It's a great way to just see like how how a trader operates in the morning and how to find opportunities, how to make strategic decisions, et cetera, et cetera. Yeah. Couple more through the rest of the year, and then it'll be 2026 somehow.
I know, it's coming fast.
Yeah.
I was going to say, if you don't have an account, we have a great promo.
Yeah, 1% cash match on any and all deposits. So you can bring in a couple thousand here or there. If you want to blast up to a higher amount, we will match anything up to a 200K deposit cumulative. 30 days commission-free trading. This one is really super cool because that's the one where if you're doing like 0-day SPX or 0-day whatever over and over and over, you don't pay commissions on that, which is great. Scan the QR code and sign up.
Yeah. And we're working on all of our supporters that have already had accounts this whole time. We're cooking something up for you peeps. So stay tuned.
Yeah. I'm excited for that one.
Yeah, for sure. E-minis going into the close here, up 37. You got the NASDAQ up 200 and change here. The Dow up 133. The Russell up 30. Oil remains bid above 61. We're at 61.65, up $3 and change. 5% move, big move there. Volatility futures at the low of the session, 18.95 on the vol futures. The VIX itself, 17.34. You got bonds down at the lows. 118 and change here, down 21 ticks. Gold up $65. Silver up 89 cents. Bitcoin and ETH remaining strong on the risk on day. Roughly all-time highs going into CPI and some big earnings next week. It should be a fun day tomorrow. We'll see what happens. Mikey, thank you for joining me. We're going to take a quick little 90-second break and come back with more Tasty Live. You've got overtime coming up next. We'll see you tomorrow morning. Peace.
Peace.
If you missed the live show, here's our cherry on top weekly recap. I'm sitting at my desk, so I wear my AirPods in most of the time. And I guess he was bellowing at me, and I didn't hear him.
I wouldn't call it bellowing.
Gus said that you were bellowing at me. So I'm sitting at my desk. I get a text message from Tom, and all it says is, "Where is this chair from?" So he was yelling my name across the office. I didn't hear him. He sends me a text message, and I write back, "Bitch, this ain't Chat GPT." And so Bat, I proceed to use technology to find it for him. And so then he complains to me about what the price is. As if I had set the price, and he was like, "Well, how much did I pay for it originally?" As if I would know.
But a helicopter, not my thing. I'll take another means of transportation.
Okay, all right. I mean, I don't want to take a helicopter too, but an electric helicopter with...
That's better?
I think so. I like the four little things as a
four things.
One big...
The four little things. Oh my God, you're so cute, Sosnoff. I'm serious.
Wait a minute, did you get the twirl?
We're going to the opening night now?
We are, 50-yard line.
Oh, you guys are going to another party together. Oh, am I just driving you there?
If you could, that'd be nice.
Be nice?
The best part.
You need to be picked up too?
I hope you're not mad, but I was hoping after work that day you could drop us off.
Of course.
Because the reason we need to get there early is because we got to start the tailgating on the balcony early because we're going on the field most likely before the game.
You're going on the field most likely before the game.
Might have an invite.
We might have an invite with somebody special.
I'm working at it.
You guys are special, indeed. You guys are really special.
It's so annoying.
Oof.
You guys are going to hold hands tomorrow before we start the show.
We're going to take a quick 90-second break and come back. We got more Tasty Live after
We're already
this.
out.
No, you're not.
Oh, we're not?
God, you're really good at this. You're really good at this.
Get the full scoop by checking out the archives at tastylive.com.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading. Okay, cowboy, here's an earnings event. Keep an eye out for them when you open your trade. They're fast, they're loose, and they can take you for a wild ride. But that's no reason to steer clear, because you can be your own personal earnings event if you take the bull by the horns. What makes earnings events so special? Before the event, people will start guessing how the stock will move once the earnings report is released. That, in turn, makes the options IV rank higher. Like way, way higher. The nearer the event, the more the speculation, the higher the IV rank. Then right after the event, IVR goes the way of the buffalo. If you sell high premium options right before the event, when IVR is really high, you can take advantage of inflated prices and lock your profits when volatility disappears. Only if, and this is a big if, the stock doesn't move against you. If it does, well, sometimes you eat the bear and sometimes the bear eats you. Earnings events can hit you hard. They can also pay off big and fast if you play your cards right. Pretty simple.
Ladies and gentlemen, we are back. This is Overtime. I'm Ilya Spivak here in San Francisco. That's Thomas Westwater and our returning champion, Mr. Mike Butler in Chicago. Gentlemen, this was kind of a strange day. Are we just sitting here waiting, twiddling our thumbs before the gods of economic data finally bestow some numbers on us?
Yeah, we finally get some soon. The one report that they are bringing people back for because it's tied to COLA increase or something. So it needs to be done.
Yes, indeed.
Yeah.
It's actually a 3-month benchmark. July, August, September is the annual benchmarking for the Social Security's readjustment of benefit levels and inflation adjustment window, the COLA. And they are going to do that. So COLA as in cost of living adjustment. And they need those numbers for that annual exercise. So begrudging furloughed workers have been called back into the BLS to burn the midnight oil.
Yeah, it's crazy. But yeah, we're finally getting a little something here. Market is pricing in a 40-point move in either direction tomorrow in SPX. So not nothing, but still an elevated number from what we've seen at least this week. This week we've been looking
at your kids, hide your wife.
Yeah. We've been looking at like 25, 30 points from day to day, but a little bit elevated tomorrow with the report coming out here, 7:30 Central. So markets will be moving before the actual market opens, the equity market opens, I should say. So yeah, we'll see what happens.
We got Intel
interesting
up 6% right now on earnings.
There you go. Yeah, they're up 2 points. $38 stock up to 40 right now. The implied move was more than this, that's for sure. Intel had one of the bigger implied moves that I've seen in Intel, period. Over 10% of the notional value of the stock price, around 4 points. It's up 2 points now, but yeah, nice to see. That's for sure. If you're long Intel.
The numbers are,
we
we're expecting just 1 cent EPS. Number came across at 23 cents EPS. That's a pretty good beat. Revenue expected 13.14 billion. It came in at 13.65 billion. So beat on the EPS, beat on the revenue. Stock up. Makes sense.
Classic.
Yeah.
Not
bad.
Not bad. What else is not bad is this momentous IBM recovery, which we talked about just a few minutes ago on last call, but I don't know if you've seen this chart. It opened at 265 and the market said, wait a minute, who cares about these earnings? Let's pump this thing to the moon. So it reversed the entire sell-off in IBM. Tesla's entire sell-off was reversed also. They ended up closing 10 points higher than the net change on the day, or from the close yesterday. It was down below 420. We closed around 450. Classic move here. 1 day reversal of the entire move. So yeah, I mean, this is nuts. This kind of paints a picture for potential craziness for the other big tech stocks, Apple, Amazon, Microsoft, NVIDIA, et cetera, et cetera.
Might also say something about the anticipation for this economic data, because the initial responses from these things tell you kind of what the markets thought of the earnings and go, oh, well, these earnings were crappy. Sell it. Okay. And then they go, wait, but do we really want to be leaning in a direction before we get the first real piece of economic data in 3 weeks? Maybe not. And so let's say this data does nothing. Let's say it comes out non-controversial. We already have well into the high 90s for the probability of a cut at this month's meeting. That's a given. Next month's meeting, pretty much a given. The market has shown really no appetite, and maybe this is just that we haven't had data, but they've shown no appetite to reconcile the disconnect for next year. Markets are way more dovish in their outlook than the Fed has owned up to, but nobody seems to care for the moment. So let's say this data comes in exactly in line with expectations, nothing to extract there, nothing new to price in. Do the markets go, okay, well, we didn't want to sell Tesla because we didn't want to be tilted before this data. We didn't want to sell IBM, but now the data is out of the way. It doesn't mean anything. Okay, now sell it.
Yeah. Interestingly enough, in December, we're seeing a reduction in the rate cut probability. We're up to 8% of a probability that we stay at the 25 basis point cut that's projected for next week. Do you think that's just simply because the market's pricing in some uncertainty around the CPI that is now being reported tomorrow? And then maybe we see it snap back to 99% after the fact if there's nothing crazy?
Yeah, I mean, it seems like it's a little bit fuzzy. And it's always a little bit fuzzy, right? Because there's an element of uncertainty to just not being able to know the future. So until things are well and truly there, it's tough to say. But if you look at this, so today we're at 98.8% that we're going to get this cut next week. Yesterday we were at 97.3%. So we're creeping a little. A week ago we were at 96.3%, but also a week ago there was about a 3.5% chance we'd get a 50 basis point cut. And that's how that was lower for one cut, because they were actually even more dovish. We've tossed that 50 basis points out the window. At this point, the market is not betting on 50 basis points. We do have a slight, and I do mean slight, 1.1% chance of no change at this meeting. And that's down from yesterday's 2.7%. So the markets are allowing for a sliver of a possibility. And I mean, you got to use a microscope to see it, that there's no change. But that would have to be, in my mind, just noise. Just the market basically saying, look, we don't have a crystal ball. We have to allow for some level of possibility that we can't see the future with 100% perfect clarity. But as our good friend Mr. Vecchio would point out, when you're north of 55%, close to a meeting, it goes the way that the probability tilts. So if the markets are a little bit better than even on the odds, that's how it goes. And we got the meeting next week. We're in the middle of a Fed blackout window, so none of the officials can speak. All we got to hang our hat on here is this CPI thing, and let's give credit where it's due, the S&P Global PMI numbers, because that'll be one of the few kind of consistent, uninterrupted visions of U.S. economic growth, of cycle dynamics, all of those things. That's coming out as well. So those will be the things we have to look at. And then the Fed. So if we're already in the high 90s, I mean, scratching at 99%, are we going to get back to 50 on the basis of this CPI report? I mean, I suppose it's not impossible, but my God, it would have to be a scorcher.
Yeah, I think this 25 basis point cut is all but guaranteed. I think there's enough time for them to shift for December if there's some
They could do a little song and dance for December.
Yeah.
They could do a little shuffle.
However, I would also say if the government stays in the current state of being shut down, I don't foresee that changing either. Like they're not going to make a adjustment without a lot of data to back that up. And I'm looking at prediction markets right now. 42% from the prediction market I'm looking at, 42% have the government shutdown ending after November 16th. So that's another 2 weeks, more than 2 weeks, 3 weeks. That's a pretty big number. Almost half of the bettors are on November 16th plus. What do you think about that? And what do you think that means for the overall market?
I think
so.
The Fed meeting next week, I don't think it matters. I think the inflation report matters a little bit tomorrow, especially because we're lacking other reports, so this report might command a little more influence. But unless it's way outside of the estimates, I really don't think it matters. I think next week the big things are going to be the big tech earnings. I think, not necessarily one, but together, like Microsoft, Google, Meta, those combined with other reports is going to be guiding the narrative more than Fed bets right now, more than the inflation report.
There's an interesting thing that's occurring here, and Thomas, maybe you have some insight on this. Much of this shutdown is basically linked to subsidies for Affordable Care Act premiums. Those subsidies are due to expire at the end of this year. The whole sort of shutdown story is really about we need to extend these subsidies, or premiums for health coverage under the Affordable Care Act will go up significantly, double digits for folks. So on some level, Democrats are seemingly trying to say, well, okay, just keep it shut, let the premiums go up, let everybody see what it is that this is, and it will become politically unpalatable not to extend these subsidies. We'll invariably get what we want. It's a strategy that makes sense, but it's also a strategy that takes us through the end of the year. Because for people to viscerally feel the rise, we might start to look at already the 2026 calendar year. Now, insurers are going to start to let people know, like, hey, by the way, your premiums are going to go up 20% or whatever it is. I've seen a lot of numbers getting tossed around. If you ask some of the Democrats that have been out there trying to make the case, Schumer's been out there, the numbers can get into like 75% in some cases. The average looks like it's 20-ish from what I've read. So maybe insurers start to let people know earlier, and people go, wait, holy moly, my insurance premiums are going to be this versus what they were. And maybe that builds a level of momentum. But it's also kind of a tertiary effect strategy where you sort of hope that people get upset. You hope that they call their congressman. You hope that in calling their congressman and in saying, hey, I'm pissed about this, those congressmen will vote differently to change the negotiation. It's a lot of things that have to happen between people get upset at the prospect of higher insurance costs, and that impacts the negotiation in Washington. Meanwhile, it seems like on the Republican side, they're saying, well, listen, we've been wanting to cut government spending. Obviously, we came into this thing with Doge in hand. That didn't really go as far or where we wanted it to go. But obviously, we've told you where our head is at on government spending. So you want to shut things down? Okay, we'll make some permanent firings then. And so both sides seem to kind of have dug in their heels. It makes you wonder if this is the kind of main thing that the whole thing hinges on. Does somebody finally just yell uncle and go, you know what, this is too complicated, this is going to take too long? And who actually has the leverage? So this might be longer lasting than even the last record, if everybody keeps their heels dug in.
Yeah, I mean, it's going to be long lasting, but the longer it goes and every day, the more pressure builds both on Democrats and Republicans to get something done, because there's federal workers, there's military not getting paid, and, one paycheck, a lot of people, all right, you can cover that. You start getting the 2 paychecks, 3 paychecks, then you're, that's a bad situation. So you got a lot more people going crazy. The other thing is the ACA subsidies expiring. Yeah, the Republicans wanted to push through a build-out, extend it 1 year. Democrats said back, you want to extend it 1 year so people don't feel that pain by the midterm elections in November. So, I mean, I don't know which way this is going to go, because Republicans and Democrats, Republicans more have changed their strategy a little bit on signaling how this government shutdown is going to go. Of course, each side is blaming each other, as they usually do. That's no surprise there.
Standard issue.
Standard issue, right? But how is it going to affect the economy and the markets? I mean, if you start getting the 2-3 paychecks, there's 3 to 4 million government workers when you include military. But there's a broader section of people, contractors that aren't necessarily government employees, stop working or slow down too, especially as you go on longer. So how is this going to affect spending? How is it going to affect things like that? Probably going to see a slight uptick in, credit card usage, all that stuff. So, I mean, I don't think we're at the pain point where it's really, bearing on their shoulders yet, but go past the 30th, go past another paycheck, and then I think you're going to see something happen in the first half of November. Something has to happen. But, it looks like for now, at least the next week, definitely no resolution to the shutdown.
It does look that way, yeah.
And with the current probability of November 16th plus, that puts it at like 45 days, right? Or more.
Yeah, I mean, we're the second longest government shutdown ever right now. The longest was, I believe, during Trump's first term. I think that was 32 or 36 days, somewhere in between there. So,
it's like a contest. See how long I did last time? I can go longer.
Right. And you notice the messaging. I mean, most people watching here are very informed, but most people really aren't, because you just don't have time working in your busy life to really look into things. And, if you look at the Republican messaging, they're saying Obamacare. The Democrats are using ACA, but there's been surveys done when you tell someone, how do you feel about the ACA versus Obamacare, they feel completely different about it. Even though it's the same thing, when you call it something else, there's a completely different shift in the sentiment around those two things. So that's interesting there. I mean, but how do we trade around it? I think you just keep doing what you're doing right now. And until the market tells you that, we care about the government shutdown, which will be reflected in price volatility, I think you just trade as you've been trading, really. I mean, it's interesting to look at, it'll get more impactful as it goes on, or the potential for it will at least. But right now, when I'm putting on a trade, I'm not really thinking, how is the government shutdown going to impact this trade? I mean, it's in the back of my mind, but it's not something I'm really considering.
Yeah. I think that's actually, so first of all, incredibly insightful, but secondly, very much reflected in the way that the markets have responded to this shutdown. If the markets were concerned, you'd see it. You'd see the markets really start to kind of get weak-kneed into this, and it's just not the case. And when the shutdown kicked off, the markets almost liked it, because they almost went to this place of like, well, if we weren't sure that the Fed is going to do all the easing that they're betting on, we're definitely sure now. Because with this shutdown, number one, they don't have the data to think different thoughts. Number two, this is obviously a hit to economic growth. You can see it in the way that break-even rates in the bond market have behaved. They've come down. I mean, clearly the bond market is saying this is some sort of disinflation, growth, risk, whatever. And obviously it is, because government spending is an input into GDP. Take away government spending, that's less GDP. It's not rocket science. And so when you look at all of that and you say, okay, from a market's perspective, granted, for the past maybe week or two, the markets have stopped rallying on more dovish positioning in Fed policy expectations. But going into the beginning of the shutdown, they were very much minded bad news is good, because bad news is more rate cuts. And they really haven't stepped off that square, at least as far as the shutdown is concerned.
How do you think this permeates through specific markets related to healthcare? Do you think it's XLV? Do you think it's specific names? I know United Healthcare has a lot coming out in the next couple of weeks. They've got earnings 28th before the market opens with a pretty healthy 24-point expected move, but they also have a hearing on November 4th, I believe, for the DOJ. And you can see that still kind of elevating this premium here. But XLV, kind of the obviously the ETF, healthcare ETF that you can trade directly with the lowest implied volatility for sure. Do you think you see like a snap reaction? If there is a resolution, do you think there's a snap reaction in something like this? Or do you think it's priced in to the current elevated levels?
It's an interesting question, because as I think about what the CPI might do sort of shorter term, my head is going to, this is if this becomes a thing, right? If CPI comes out and there is something controversial enough in it that Fed policy expectations go this way or that, or the market's growth expectations go this way or that, I don't think it's sector specific in that environment. I think it's more like a risk on, risk off. Equities go to closely correlated moves and all kind of do the thing, whatever the thing is, whatever the S&P does, whatever the NASDAQ does. And that would give you a different starting point as kind of shutdown specific, even earnings specific stuff starts to come out. So the context becomes different. If you spook the markets, and let's say XLV goes down, not because XLV goes down, but because the whole thing goes down, because CPI does something. And XLV, let's say, comes in and you hit the bottom of that range there from earlier this month. That's a very different point of context than where we are now, which is sort of attempting to scale the recent highs. So if in that context you then get, oh, the shutdown ends, la-di-da, it's probably good for healthcare stocks, especially if they're down.
There you have it. Thomas, what else are you looking at from a future standpoint? We were talking about how big this oil move was today.
Yeah.
I actually closed. I got long, like somewhere around here. I closed yesterday for $160 winner. Wish I had forgotten to, because that would have been a better close today, obviously, with the micro crude long. But I know we've talked on Options Trading Concepts Live about a new range projected or potentially being, in this upper 63, 64 handle down to like 54, 53. What is your summation of the move today, if you have one?
Yeah, I mean, so U.S. sanctions Rosneft and Luke Oil or something, two firms, Russian oil, and they're saying that to China and India,
as it were.
Yeah. They're saying to China and India, if you accept these tankers, you will be cut off from the Western banking system.
Perfect.
So of course, oil big surge because it was kind of unexpected. There was speculation that the U.S. would be imposing new sanctions, but it's kind of been that way for months. So when the news hit, oil prices spike. We saw strengthening backwardation, the near-term contracts, which is opposite of what the trend has been recently. So some supply concerns, most immediate, of course, because all those tankers to India and China are going to stop right away. And then India and China says, wait, we have to get our oil from somewhere else. So that demand is then going to be sourced out to, U.S., OPEC, et cetera. So they won't be getting as much of their nice little discount on it anymore. However, we've seen time and time again that Russia is able to largely go around these sanctions by doing these things like shadow tankers and stuff where you send the tanker out, it meets another tanker in the middle of the ocean, they transfer the oil, do something like that. There's a few ways to circumvent it. So in a few weeks, a couple months, they're going to be able to circumvent a lot of this and do it behind doors where they're not, China feels comfortable taking some Russian oil to where they're not going to get those penalties. But of course, it's an escalation. It hits supply right away. But I sold a call spread, and I did it in the contract only 15 days out because I think we're going to have a quick retracement after this. And that could very well not be the case. But when you look at the fundamentals, there's really nothing that's changed. Q1, we're going to start going into a surplus market. Q2 and Q3 will very likely, according to almost any agency, EIA, IEA, OPEC, and then all the other banks, Q2 is looking like a well-supplied market. So, I think we're going to tread down back towards 60, maybe even go down into the upper 50s. I just did it 15 days out, 62.75, 63.25. Works out. I'll make a couple $100, but really, it's just a sanction-driven, headline-driven move. We've seen these kind of moves, reverse themselves quite often, not all the time, but quite often over the past year. Sanction headlines, things like that, even geopolitical headlines. So that's kind of the route I'm playing this, that it's going to, go like that again.
Yeah, so first of all, unsolicited plug here. There's a great book out there called Choke Points about U.S. economic warfare from one Edward Fishman that used to work in the U.S. government over a couple administrations, most recently the Biden administration, on these things. And it's a really, really great account of U.S. economic warfare, in particular recently, and really sort of explains how the U.S. has managed to weaponize its economic system to sometimes great effect and sometimes not great effect, because historically sanctions don't work very well. But recently they've worked better, interestingly. And probably the biggest sort of successful example and model for this version is what the Obama administration did with Iran, and what they did to kind of get Iran to negotiate the joint plan of action, the quote-unquote nuclear deal, which Iran had no interest in negotiating until they were compelled to negotiate it by this kind of a thing. And what's interesting about this is ostensibly the Europeans are on board with this, because over the course of really the past 3 years or so, there has been increasingly more and more consensus out of Europe that they need to de-risk away from Russian oil supply, which until then was very difficult to get them on that page until Russia launched the full invasion in 2022. Before then, the Europeans were just, say, like when Russia made the land grab in Crimea in 2014. Never mind the land grab in Georgia, or the attempted land grab in Georgia in 2008. You couldn't get the Europeans to say, yeah, we're going to take ourselves off Russian energy. It's just not a point of conversation. The answer was just a hard no. So where the Obama administration was very successful with sanctioning Iran this way, Iran is a small producer and not a pivotal European supplier. So it worked. When they initially did it against Russia in 2014, thereafter, it didn't work because the Europeans were like, well, no, you have to carve out energy out of all of your sanctions because we're not doing it. For the past 3 years, they've kind of acclimated to that idea. This might actually start to bite then. This could really be an important thing. Now, obviously, Russia has been very good at circumventing these things with their shadow fleet and with everything else. They've also been obviously making a point that they can by doing things like dragging their anchor through shipping lanes off the coast of Nordic countries to sever fiber optic cables, just to show people, yeah, we're here. You don't know we're here, but we're here, and we're doing this, and there's nothing you can do about it. So we'll see if that continues to be the case, because it's one thing to say Russia can circumvent this. They almost certainly can. Where the previous round of sanctions, for example, on Iran, where the Obama administration was successful there, was not in trying to compel Iran, but trying to compel people that do business with Iran. And basically saying to countries, you have to choose. Either you want to do business in the U.S. financial system, or you want to do business with Iran. You pick. And obviously people picked. So one of the really interesting sort of aspects here is, yeah, of course, Russia can completely figure this out. But those transactions have to have two sides. And if you make it expensive enough for India and expensive enough for China, but really India, because China clearly is in the midst of its own thing with the U.S., and I don't think they're in a mood to be any less acrimonious. But if you get India to stop then you could really do something. You could really squeeze Russia's economy, because India is a huge part of what Russia sells now. So this could work, but it's not going to be in compelling Russia to do anything. They're going to attempt to run these sanctions. They don't have anything to lose. It'll be, can you convince India to really pay attention and really do this? You got a little bit of a sense that maybe Modi is ready to deal on this. We'll see. But if he is, if it's time for Trump and Modi to reconcile on this, and there's maybe a sweetener in the deal, like access to more U.S. exports, et cetera, and the Europeans have rubber stamped this thing, it might actually work.
Yeah, and I mean, this is a way not only to pressure Russia to end the war in Ukraine, because their oil is their war coffers filling up, but it's a way to pressure India too, because you could say, India, if you do a deal with us, we'll turn a blind eye to the sanctions that we put on. Even if we don't officially take them off, we'll turn a blind eye if you start taking Russian oil back. Not that that's going to be the primary driver for anything, but it's one thing to consider.
Mm-hmm. Yeah. Yeah.
Do you think...
Absolutely.
Do you think the bid in precious metals is completely coincidental to the move in oil today? Or do you think that they're somewhat tied together in terms of like a moving capital into something else other than the E-minis and NASDAQ? Because all three, platinum, gold, silver, all three up over 1.5% today. Oil is leading the way for sure. What are your thoughts on that, on the precious metals sector?
I think it could be in theory, but not necessarily, because, you know, the U.S. flexing its sanction power and stuff like that. Other countries see this, and, you know, it's the same thing as with the trade war. Like, we hold a lot of dollar reserves, let's diversify even further. So if this happens next time it's us in the future, you know, we're not as vulnerable. But I think this is just kind of a technical bounce in actuality. So I don't really tie too much to it. We've had 2 big down days. It makes sense to get a little retracement here. I'm not sure if this retracement will hold. We might have a little bit more downside. Long term, I'm still pretty bullish on gold and silver. So yeah.
Love it.
mean, I think that's spot. I agree completely. I am actually a lot less optimistic. I think that, frankly, that all you got was this lousy little bounce after the kind of selling that we've seen is actually pretty bearish for the precious metals, because, frankly, this could have been a much bigger deal. This is a big escalation. And it's a big escalation at a time when the US-China thing is escalating too. Frankly, gold might have become a lot more inspired here, because all of this narrative should be very gold relevant. How would Russia circumvent this? Well, considering China is probably not going to play ball with the US on not buying Russian oil, you again get back to this thing, well, why is gold going up? At least in part, it's China is buying tons and tons and tons of it because it is attempting, seemingly, to create something like a parallel system of transaction and monetary settlement rails that people actually want to use. Now, they've attempted to do this for ages because, of course, they looked at what the U.S. did with economic warfare on Iran, on Russia, and said, we're next, obviously, because our interests are divergent enough that they're going to use this on us eventually. So what we need is to insulate ourselves. We need to have backup payment rails, and we need to be able to do business there outside of dollar world. And until this Russian invasion of Ukraine, the story was, well, yeah, that's cute and all, Godspeed. But the yuan is not internationally convertible. There's no liquidity here. Who in the world wants to get stuck holding a giant bag of yuan because your payment rails suck? Nobody. Good night. We're going to do business in dollars. So then you get the Russian invasion of Ukraine, and all of these payment systems start to get giant throughput in settlement volume because Russia can only do business that way. They're already cut out of the dollar system. That's been a very big test of these payments systems that China has built, and generally a successful test. But the yuan is still not internationally convertible. How do you get other countries on those rails then? The most compelling argument I've seen is you backstop the transaction flows with gold. You don't back up the yuan with gold because that would be completely counterproductive. It's that thing that people who seem to advocate for the gold standard don't seem to get. Gold is finite, and that's a weakness, not a strength, because then you don't have enough liquidity to actually settle the trade volumes as you have them. So you're committing yourself to crushing economic activity and destroying the economy. Good luck. But from China's perspective, if they were to tie the entire yuan to gold, they'd have the same issue. They would essentially ensure that there's not enough of it to do the kind of internationalization that would give them the payment rails that they want outside of dollar world. But if you only back up the settlement of trades within this system and not the whole of the currency, well, then at least maybe you inspire some third countries like Brazil, like Argentina, like India to say, hey, you know what? Don't worry about holding a big bag of yuan, because all of the transactions here are backstopped with gold. If you got a bag of yuan you don't want, we pledge to give you gold in return. And you can take that gold back into dollar world if you so choose. And so in my mind, the rally in gold has been less about debasement risk of the dollar, which is just obviously wrong because the dollar has been going up and so have bonds. The whole debasement trade idea is obviously ludicrous, basically going back to July. Not before July, but certainly after. It's more like this is a third way. This is a multipolarity currency that allows you to move from China sphere to dollar sphere. So if that's what's going on, and if that's what all these sanctions are about, and if that further inspires China and Russia to build this thing with these new Russia sanctions, you'd think gold would be surging. This is exactly the thing that they want gold for, to counter this. And it can't rally? Get out of here. This thing sucks.
Well, but you could also say that your narrative was priced in on this rally.
Yes.
But is this your thesis?
And now it's turning.
Now it's turning. On low volume, there's not, like, the difference between, obviously, crude oil volume was crazy today. Biggest volume we've seen in quite some time. But, yeah, to your point, this little micro rally wasn't really anything. Like, this is actually the lowest volume in gold that we've seen in quite some time.
Right. But that's the whole thing. Like, you got this exact perfect news flow for gold gains, and all you got was this lousy T-shirt. This thing doesn't want to go up.
I would accept a gold T-shirt if it's made out of solid gold specs.
It'd be very difficult to carry.
True.
I mean, listen, if Slick Rick can walk around with all those chains, it is doable. He's practically wearing a gold shirt.
Yeah, that's fair.
And those things are not hollow, dude. Please. It's Slick Rick.
So you did mention yesterday that EWZ is one of your biggest bullish positions, or most convicted bullish positions.
Yes.
Is the narrative that you just ran through, does that tie into your bullish stance here?
It does. I think one of the biggest kind of ways that you see the two poles splitting and countries getting back into a kind of economic Cold War type of arrangement Whereas before you had the Soviet Union and the US and everybody was in a kind of security bifurcation. This looks more like a economic bifurcation, at least until China's population bomb finally implodes and the whole thing resolves itself. Because let's just be serious here for a second. China is not a real adversary or a real contender 10, 20 years forward, because their demographics are such that the entire architecture of that economy is going to have the bottom fall out of it just on lack of humans over the age or under the age of, well, let's call it 60, 50. So this contest need not be so acrimonious, frankly, from the U.S. side. The U.S. need not care about it that crazy, because as long as the U.S. doesn't self-immolate, China has already lost on demographic grounds. But the larger issue, sort of nearer term, is obviously that it's not going quietly. And so as you get this sort of splintering into spheres of influence, if you can't get U.S. soy and corn, you're going to Brazil and Argentina. And Argentina is a little bit funky with Javier Milei over there experimenting with, let's call it Thatcherite ideas and Reaganite ideas, and coming to Trump for a bailout. So it's not going smoothly recently. Brazil doesn't have sort of that immediate political risk there. And they've been very busy finding opportunities to plant soy and corn to be China's sort of number one supplier for those things as the conflict with the U.S. continues. So I think there's a really long arc here for Brazil. The more the U.S. and China fight, the more Brazil wins.
So do you like the real?
I've been doing it this way because I don't think the real necessarily benefits, because it's kind of a backwater as far as sort of currency volumes go. You're going to have to settle this in a different way. And again, like if this is going to be a thing where Brazil is to China on soy and corn what Russia is to China on energy, then it's not going to get settled in local currency. It'll get settled in yuan. And that ultimately, if you sort of look at what's going on with gold, gets backstopped with gold. So really, this is gold bullish in my mind more than it is real bullish, but it's certainly bullish for local stocks, or at least the market seems to think so. So I'm holding. My leaps expire in December and January, and I'll probably roll them.
I'm staying in my silver long position, and you guys can make fun of me next week if it keeps exploding downward. But I'm going to stay in it.
Duly noted. Let me write that down. Make fun of Thomas if silver falls. Got it.
Yeah.
Carry on.
But yeah, I mean, a lot of the metals, I mean, we've seen, I mean, platinum has fallen with gold and silver. The one thing, you know, the copper hasn't, but copper's much different. Platinum's closer to precious. It's a mixed precious industrial metal. Copper's more purely economical in its use, and it's been going up. I mean, I think it's almost time to get long copper again once we clear the early October levels. But, you know, we've retraced about 50% of this huge drop that we had at the end of July, which came after a huge increase with all that tariff stuff. But now it's returning more to, you know, this narrative that a lot of big investors have put out. And his name eludes me right now. Last year, the big one, he got a big copper position, Druckenmiller. Yes, Druckenmiller got very long, and he's had
Uncle
some good.
Stan.
Yeah, he's had some really good commodity trades over the years that have been pretty large.
Oh yes.
So, you know, when he takes a trade, he's in it for 2, 3, 4 years, even more. So I mean, I haven't seen anything about him getting out after that huge drop in July, but I think copper has some upside here. And I think, the fact that it's rising as China and US tensions are increasing, there's some, this government shutdown, there's concerns over the economy. I think the fact that it's still rising amidst all this is pretty bullish. I don't think any huge moves like the tariff-driven headline moves will happen again, but I think this is a pretty clear trend upward now. And, especially I'll be taking a long position once we clear those October highs, which are right around 5.2. So going over 5.2, I think, is going to trigger a long position for me.
Yeah, especially with this liquidity pocket here where you just had that huge gap down. There could be a quick run up if you get past these levels that it couldn't get past before. So yeah, I agree with you. I think it's definitely an interesting trade. But yeah, I think silver, gold, platinum, you name it. There are many reasons to be long, fewer reasons to be short. Especially when you tie them into the whole chip narrative as well. Like there's just so many ways that you can be indirectly involved in these big ideas through something like gold, silver, platinum, copper. Like, it's really a pick 'em.
And to your point, right? We know of all these ideas. We just had a 9-week rally in gold before this thing started to roll over. The last time we had a consecutive 9-week rally is the week before we had the last 1 day over 5% sell-off. Like the symmetry here couldn't possibly be any better. The last time that we had a 9-week rally was 5 years ago, ending in the week starting August 3rd, 2020. The last time we had a 5% sell-off like this on a single day was the top in that rally. So, and since that top, gold fell about 19% over the subsequent several months and about $380 in all. But obviously, sort of now that same $380, $390 move, because obviously the price is much higher, would only be about a 9% decline. And we've already done that, really, off the high. So the question is it over now? That's it. Or are we going to get the percentage type adjacency, which would be a much bigger decline? And interestingly enough, the reference point for where that kind of a decline would land us, say we have something similar to that kind of a 19.9, 19.8% decline like we had 5 years ago, that lands us back on about 3,500, which is, shock of shocks, the range top from April, where from about late April until early September, gold basically did nothing and just drifted sideways. So for me, that's the long of longs if we sell off there. Because it looks like a lot of, the pick-em narrative assortment is very much there and is probably not going anywhere anytime soon. But there does appear now to be a sort of speculative price extreme. Gold is seemingly struggling to even think about a rebound, even as we said today, just seconds ago, on a day where really it should be a lot more inspired. So maybe speculative froth needs to get worked off some here. Just give me a warm CPI number tomorrow and a little shift in Fed odds for December and year, and gold's going to have a conniption. And if it comes off meaningfully like it did the last time it sold off after a 9-week rally, there's going to be a very, very appealing discount here if sort of these general dynamics work like they did or something adjacent.
Everyone heard it here first. Go to the pawn shop, get rid of your gold while you can. Go buy it back in a couple of weeks.
Yeah. Buy it back in a few weeks. 3,500 a troy ounce is what you're looking for. That's really where you want to go. So maybe don't melt your dental fillings, but whatever stuff you got from Costco over the past several weeks, who knows? Maybe let that sit at the pawn shop for a couple weeks. Roll that dice. I don't know.
That's when I knew the top was in. It was probably like right about here when I was like, you know what? Maybe I should go like bring some gold to the pawn shop. When that thought crossed my mind, I was like, this thing's gonna crash.
Yeah,
but,
here we go.
No. In all seriousness, take your gold to the pawn shop for sure. But tomorrow, a few minutes left here. Tomorrow we are getting CPI data.
Mm-hmm.
We are getting PMI data.
Yes.
The market is pricing in about 40 points in either direction. I've got this 0-day iron condor or 1-day to 0-day iron condor on that is now leaning short with this intraday rally. But given the 40-point range tomorrow, what are your thoughts on the result? Inside or outside that number, and in which direction? Thomas, we'll start with you.
I think inside, and I think we'll keep moving up.
That's fair. I hope we're only up like 20 points, so my 1-day iron condor can work out.
I mean, you look at Intel. Intel's put out a big number. The other chip stocks look like they want to follow it. Maybe that will invigorate some sentiment into this market, excluding a crazy CPI report.
Yeah, you've got SMH up 1.5 points after the market close, which contains all of those. AMD up 3 points after the close on Intel's move, most likely. NVIDIA, not as much, but interesting to see. TSM up 2.5 points, 1.5 points. We're seeing a little sympathy on Intel's move. I'm going to say inside down, just because the rally was pretty strong today. I don't disagree with Thomas. I would not be shocked to see a continuation here, but I think if there is a continuation, I think it'll be inside up. So I'm saying inside regardless. Inside 40 points. Ilya, what say you?
I think probably inside, but down. And in my mind, it's inside only really because I think the markets are really starting to perceive a lot of weekend risk at this point with sanctions, and there's a meeting that Trump is going to have with Xi next week, apparently. It's back on now. The APEC conference is coming, and there's the Fed thing next week, which I think is going to really concentrate the selling at the start of next week, but people probably don't want to hold the bag over the weekend. So I don't think you get anything too dramatic. Again, unless the CPI number is hotter than hot. It's already expected to be on the hot side. So the bar is a little bit high. It's got to be hot. And if it's really hot, you get another big wash. And if it's not hot to that level of extent, maybe people don't want to hold the skew in their exposure over the weekend. So I think the bias is down. I think the markets want to de-risk. I think it's very interesting that we've basically erased all of the October 10th decline, but only just, and we can't make any headway above that. So the markets have essentially reset speculative appetite here. I think we go lower, and we might have topped. Shock of shocks that I think that. But maybe not tomorrow is the big ugly day when we see that again.
Fair enough. We will see.
With that, gentlemen, overtime is out of time. We will be back, of course, on Monday. This is a Monday through Thursday affair that we do here. But don't go anywhere, because in mere moments, you will have all the charts you could possibly want, and many that you probably don't, on this CPI conversation, because macro money is coming up, and I've got 18 slides that I'm going to run through. So buckle up.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on tastytrade, named best online broker for options trading. Genius loves company.
The future of trading is here. Join Mike and his whiteboard, plus the tastylive crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
tastytrade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
New from tastytrade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new tastytrade account. The Money Match event starts now, exclusive to new tastytrade customers.
Frequent trips to Vegas, or there was a year I did a couple of them.
What's the most financially irresponsible thing you've ever done in your life? Doesn't necessarily have to be trading specific.
Financially irresponsible, that's a big question. Like, people would say, like, going to college these days. I don't know. Renting, I like renting. I like the flexibility. I don't know. Maybe renting, I guess, by the book is financially irresponsible. Actually, you know what my biggest purchase right when I started my job was $4,000 on a PC setup, which was not a good idea at my salary point.
I mean, anytime you take a trip to Vegas, it's pretty financially irresponsible. I would say that frequent trips to Vegas, or there was a year I did a couple of them, which was pretty irresponsible.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. You'd use up much more buying power, and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier, though, and a good night's sleep is priceless. So see, we can define risk when
Show you the way. Woo! Saw you talking.
Will U.S. CPI inflation data crush the stock market? For weeks now, U.S. economic data has been off the menu amid the U.S. government shutdown, but finally we're going to get this special dispensation, a little view of inflation trends out of the U.S. The market's no doubt waiting with bated breath. We're going to talk about what all of it might do and why. Macro Money starts right now. This is Macro Money. I'm Ilya Spivak, head of Global Macro here at tastylive. And shockingly, our focus is going to be the one big piece of economic data that we've gotten out of the U.S. for weeks here, the U.S. CPI inflation report. Of course, it couldn't come soon enough. We also have a Fed monetary policy announcement next week. Of course, that's going to be an important input into that conversation. So what we are going to do here is look at what the markets did here today, just to quickly catch up on the price action, then quickly get into these specifics, because there's a lot to talk about with this CPI data. We need to update ourselves on what U.S. inflation has been doing, what the trends are, where we're going, because there's going to be a lot for the markets to chew on. So without further ado, stocks a little bit higher today after yesterday's sell-off. Ultimately, we don't end up going very far between yesterday and today. Over the past 48 hours are basically unchanged. S&P up almost 0.6%. NASDAQ up almost a full percentage point, 0.9%. Yields up 1.26% for the 10-year, 1.3% for the 2-year. The big move of the day, of course, crude oil, up 5.54% after the U.S. slaps Russia's major oil producers, Lukoil and Rosneft, with sanctions, basically aiming them at China and India, saying, we have basically blacklisted these two companies. If you do business with them, you get cut out of the U.S. financial system. Not a dissimilar approach from the way that the U.S. went after banks and sort of adjacent companies when there was the squeeze to get Iran to the negotiating table on the nuclear deal back to during the Obama administration, not dissimilar from the way the first Trump administration went after Huawei and essentially said, if you use this for your 5G infrastructure, then we're going to squeeze you. So there's all kinds of escalation here happening to try to ostensibly compel Russia to the negotiating table to end this war in Ukraine. So crude oil around that kind of a supply shock, if, of course, China and India, and let's face it, probably more India, actually take the cue here and stop buying Russian oil. They've been buying it, of course, at steep discount because there is effectively a price cap, but also because beggars can't be choosers. Russia can only sell, but to so many places because of all the sanctions already in place. So they've been selling at steep discounts. If India then had to go back onto the open market and buy oil there because they would need to once again wean themselves off Russian supply, well, then you'd have a tighter market. And so not surprisingly, crude oil having a very sharp reaction here. Gold, by comparison, up only a hair. You'd think this is exactly the kind of geopolitical escalation that gets gold excited. Well, it didn't. And that's despite the fact that we have had 2 days of brutal selling. Earlier this week, in fact, gold suffered its largest decline, the first decline in excess of 5% a day since August 2020, which is something we spent a whole lot of time talking about yesterday and why that's probably going on. So definitely check out yesterday's episode. We'll put a link up here somewhere in the video so that you can go and see that conversation. The US dollar basically flat today, doing nothing against the euro. The yen weakening a little bit. That's as the new government in Japan really starts to solidify. The new prime minister is in place. She had to do some new coalition talks to get that together. But once again, an LDP-led coalition has a prime minister at the helm, and she is very dovish. New Prime Minister Sanae Takaichi is looking at the BOJ and basically saying, you don't need to do all these rate hikes. In fact, we could stand to go back to Abenomics here. Abe, of course, her mentor and famously overseeing a tremendous dovish expansion in the BOJ's efforts. So the yen still smarting from all that. Bitcoin, once again, doing its stocks on steroids thing. Stocks are up a little, so Bitcoin is up a little bit more. But it hasn't gone very far either in recent days. So, US CPI. What are we looking at here? Both the core and the headline are expected to come in at 3.1% year on year. That is not the biggest departure for core. Looking at the core, in fact, this would be the third consecutive month at 3.1%, but it would be a big departure for the headline. As a matter of fact, it would be the highest headline reading since May of 2024. So the highest in 16 months. And not surprisingly, that's the kind of thing that can get Fed officials thinking. It's the kind of thing that can change the calculus on Fed policy expectations. And of course, that has important implications for the markets the whole world over. So, where are we on those Fed policy expectations? For October, that's the meeting coming up next week, we are overwhelmingly priced for a 25 basis point cut. No big shock there. As a matter of fact, we can see this is where we've been not only yesterday, but a week ago, even a month ago. This was well over 80%, approaching 90%, and we can see that over the course of time, this has only solidified. So we are now very, very priced in to the tune of almost 99% chance that this cut is going to occur. And that it's going to be a 25 basis point cut, not a 50 basis point cut, which is a flirtation that we explored a week ago, but no longer. Same thing for the December meeting, the FOMC on December 10th. That's supposed to give us another 25 basis point cut. And again, we're well into the 90s here as far as probabilities. We're a little bit lighter here only because the markets are entertaining a slightly bigger chance that there is no change at this meeting. But it is a pittance. I mean, when you're this far ahead here, this is almost certainly a given. But perhaps here there's a little bit more room for markets to kind of consider what may be happening and if the likelihood is in fact that high. As far as market pricing is concerned, the larger question, as it has been for weeks now, is not in the outlook for this year. It's what happens thereafter. So if we look at what this report is likely to do, the action is almost certainly not in what is on the menu for this year. Markets seem fully priced in for a cut, again, in both of the incoming meetings. And of course, that lines up with the view that the Fed itself has given us. If we take a look here at the summary of economic projections as it has presented itself here since the last Fed meeting, what we immediately see here is a situation where the Fed narrowly has 3 cuts on the menu for this year, of which obviously September was 1. So that one is already off the board. Consider the starting line here was 4.4 for the median. And what we're expecting here is to come into 3.6. So to get from 4.4 to 3.6, you'd have to cut 3 times. So that's already in the market, as we just saw, and already in the Fed's outlook. Not a whole lot of controversy there. The larger issue is what happens thereafter. And you can see that for 2026, the markets are quite a bit removed from the Fed's view. So the Fed here only has a single cut, just 25 basis points. And obviously where we are for the markets is increasingly biased in the direction of 3 cuts. So obviously 50 basis points are already there when we have 68 basis points priced in. And of course, that's then also 18 basis points in the direction of the next 25. So 50 plus 18 is how you get 68. And that 18 out of 25 basis points, the implied probability of that third cut is a pretty elevated 72%. So the markets here are very much of the view that the Fed is likeliest to deliver 3 cuts next year. And the markets obviously are not only sort of embracing this more dovish view, but through the period that we've had this shutdown and a little bit longer, basically in the wake of the initial rate cut here, which is how you get this level change. This already includes 1 cut. The markets have only gotten more dovish. And clearly, the implications have been that the Fed's just wrong, that they're not going to do what they say they are. And it's important to remember the Fed's perspective here is couched in having upgraded GDP expectations, having upgraded inflation expectations in this same update. Now, there is some credence to this. If the markets are already in a dovish setting for policy, then the risk is that the Fed is right and the markets have to reconsider and readjust. Looking at the dynamics for inflation here, then, we can see the idea, as propagated by one Stephen Mirren, that the tariffs are not driving inflation seems pretty plainly wrong. Because what you're looking at here is goods inflation that has been anemic for a long, long time. This is the year-on-year goods inflation contribution to CPI. And you can see that as of this latest data, as of August, you're looking at the highest goods inflation year-on-year since back here. So you're looking at a more than 2-year high on goods inflation. Of course, that's where the tariffs hit. And an escalating one over the past 3 months. So the notion that the tariffs are not appearing here and aren't an uplift, it seems just plainly wrong. The service sector has seen cooling inflation over the past 3 months. And of course, that's the biggest component of the story. As we can see here, services inflation is a much bigger deal here than is goods inflation. Goods still only just a sliver as far as the overall contribution. And so The real question here will be, do you accidentally now get a bounce in services inflation because goods start to feed in here? They are, of course, inputs into a lot of the services. You also have a big jump here in August in housing inflation, which is a big argument from one Stephen Mirren for why inflation is not a thing to be concerned about. And indeed, to his credit, we can see here that the trend in housing inflation has been increasingly weakening. We'll see if this marks some sort of a turning point. But you can certainly see how, with slightly cooler inflation on the services side, you nevertheless have a buoyancy on the goods side that's increasingly apparent, and that may start to drive inflation even higher. So the concern here, of course, is that the Fed is right to be flagging higher inflation, right to be flagging the risk that this will keep them from cutting rates more than the markets think, or at least as much as the markets think, and that the markets are going to have to rethink what their baseline is in the wake of this data. You can see something similar in these annualized dynamics, so where the trend is. In particular, the 3-month annualized here for both headline and core, the blue and the yellow bars, are dramatic departures from this trend toward slowing inflation going all the way back to the beginning of the year. We've clearly crossed some sort of line here. And of course, you can see the month-on-month changes in both have been growing larger going back to March. We also see when we compare U.S. inflation data to the ISM Services Index of Prices. This is a private sector survey from the Institute of Supply Management. So, of course, it's not affected by the shutdown. This data continues. And we can see that it tends to front-run headline CPI and PCE by give or take 2 months. And what that would imply here, looking at the way that the ISM number here works out, and of course, it's the services sector that's the most important, not only because the bet here seems to be that inflation will continue to cool, even as the goods side perks up a little bit. And of course, that's more significant because this is a much bigger part of the overall economy than the goods sector is. The implication is that inflation is on the cusp of surging if this continues. Because if what this is foreshadowing arrives here and we start to get extension this way, well, then how in the world is the Fed going to do all those cuts that the markets think? Moreover, we can see here that headline and core CPI, here's the headline, here's the core, has recently overshot the benchmark nowcast from the Cleveland Fed that people look at. Now, obviously, these things are very close, but we can see that for basically the past, let's call it 4 months, going on 5, where there has been deviation from these forecasts for the headline, it's been surprising on the top side. Now, for the core, we were running a little bit cooler until we got to July. And since then, from July into August, core started to surprise higher. Now, that's only 1 month of data, but maybe what we're starting to see is whatever was happening here is starting to finally show up in core, which tends to be slower moving. So again, maybe there is a case here for an upside surprise. The markets, for their part, are not worried. We can see inflation expectations baked into the bond market have been declining basically since mid-August going into September. And if we look closer, the real decline has been even longer running from maybe about July. That has given us lower yields, both at the front end and the long end, the 2 and the 10. And it's also pushed the yield curve into a flatter setting. The 10 to 2 year spread has been coming in. So the markets clearly look at this and go, well, what inflation? The Fed's going to do these 3 cuts. So that's how these things match. This decline in inflation expectations and this expansive call for easing. But what's interesting here is that the US dollar is not taking the hint and saying, no. That's not what's going on here. We can see the dollar has actually been going up. And it's been going up since basically middle of September, where it hit July's low and bounced. And so in the wake of that Fed meeting, the market is apparently saying, yeah, maybe not so fast, at least as far as the dollar is concerned. In fact, when you look at the relationship here between stocks and Fed policy expectations, something has clearly broken here since the beginning of October, because we can see that from basically May, more dovish policy expectations have helped the stock market, and clearly that has stopped being the case as of the beginning of this month. Policy expectations have become more dovish again. The stock market can't seem to make hay of it. It's still stuck and can't really get out of this range. A similar thing is happening for the dollar, where again, policy expectations are getting more dovish, and the dollar is instead going higher. So either the markets are starting to sniff out the idea that maybe the market's dovish expectation is wrong and needs to adjust, or these markets are just not caring about the Fed and reconciling this thing because we haven't had economic data, so perhaps we're going to get a snapback and the markets will re-engage. And which way they re-engage, of course, will depend on what the CPI numbers show. Beyond the CPI numbers, we're going to get a look at growth dynamics, both from the Eurozone, that composite number, and from the US even more critically, that set of numbers. This is for October. The expectation looks like steady manufacturing and a little bit of a cool-off in services, but what economic data there has been, looking at the green line here to check the tone of the incoming data into the Atlanta Fed's closely watched GDP Now forecast, we can see the tone has been obviously positive. And so with that, we would expect more inflationary pressure, less scope for rate cuts. Similar story here for the situation on the economic surprise index for Citigroup. We can see here, if we zoom in, it has been narrowly better than expected in its bias, showing that what U.S. economic data there has tended to narrowly outperform relative to expectations. So again, supportive seemingly of less rate cuts in the outlook. There are some earnings on the calendar for tomorrow, but certainly nothing like the Tesla and the Netflix that we already had this week. And the really big splash of tech earnings is the week after, so this is probably an afterthought. And as far as exposure goes, I am about where I was going into this. I got out of my crude oil position yesterday, thankfully, so that spike didn't catch me. But I'm still long the dollar here against the Aussie, the pound, the euro, the Canadian dollar. I'm short all of those. Still short a little bit of gold because of the big sell-off and its soggy recovery today, despite these Russian sanction news seems to encourage that idea. Short risk, both with put verticals against the big stock indexes, NASDAQ and the S&P, as well as Bitcoin, and long the bonds at the long end, which, despite the fact that the CPI number might spook near-term rate cut expectations, probably doesn't end up hurting the long end too badly, because we might get those rate cuts pushed further downwind, and so the curve might twist, and we might get fewer rate cuts on the menu immediately for 2026, but that just means we probably need more of them beyond. And so holding that still. And that is macro money for today. As ever, we are here Monday through Thursday, so this is our last show for the week. We'll be back on Monday. Thomas Westerwiner and I will be on Last Call tomorrow to talk about what the CPI numbers wrought. So do come and join us for that. That's at 2:30 Central Time, 12:30 Pacific Time, 3:30 Eastern here on Tasty Live. I am also, of course, writing for the News and Insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Macro Money returns next week. Happy trading.